and we got benefit from rebalancing of our pyramid, which was about 40 basis points, and the balance 20 basis points came from operating efficiencies. So that's the overall split on margins. One thing, between H1 or in H1, we have improved totally 100 basis points. So Q1 was an improvement of 30 basis points, and incrementally the 70 makes the 100. The severance pay cost is an extraordinary, that's an industry practice. It's a one-off called out, that's not included in it, and we have called it out separately.
What will margins look like in Q3, because there will be a 2-month impact of the wages?
Absolutely.
And investments that you make.
So we have improved 100 basis points in H1. We'll look forward to inch closer to our aspirational band, our guiding beacon.
But you think you can improve margins and absorb the wage hike even in Q3?
There are a couple of things. There would be puts and takes into it. There would be headwinds. You called out one of the headwinds. We'd also be making investments. We talked about pivoting to our new vision. And towards that, there would be investments needed. And at the same time, we'll be focusing on doing a disciplined execution and leveraging on our operating parameters. We want to inch towards 26.
So this rebalancing of the workforce, and we spoke about that briefly with Kriti as well. I said it'll continue, but it's not driven by cost, etc. But it will continue through the course of this financial year. Can you put some numbers to it? Do you have?
Yeah. So Prashant, first and foremost, it is not on cost. It is not because of AI. That's something that you want to really get the facts right. And as we speak, this quarter, we have onboarded close to 18,500 employees, which means fresh hires, new hires, right, between laterals and those from the campuses globally. So we're continuing to invest to get to the mission that we have really said to be the world's largest AI-led tech services company. The specific program that we mentioned about, where we are looking at around 2% at the mid and senior level, as of today, we are midway through that. So approximately 1% of the people at the mid and senior level.
6,000 people?
Yeah, approximately. That's a number.
So you're saying midway, so 6,000
yes,
more?
So see, again, that's very important, because we are not really fixed on the target of saying that we will let go 2%. That's an estimate that we had communicated, right? So what we are at 1%, and what we do is constantly, while we invest extensively on building capabilities, making learning accessible to everyone, providing all the support that they need to be able to transform and take up these future relevant roles. If after all these efforts that we are not able to succeed doing that, that's the only when we will actually do, right? And like I want to again stress, we take it with a lot of responsibility, do it with a lot of care, and all the benefits, support that we have done, our industry benchmark, truly resonating with what we stand as an organization. And then we'll continue to do it very responsibly.
Sudeep, what's the annual saving on account of this employee rationalization?
It is not about saving at all.
No, it's true, but do we have a number?
No, we don't really have a number. To be very honest, yes. It is purely from an effort to be future ready.
No, I agree. That's the motivation behind it.
The cost is not driving it at all. I want to say that.
So you want to tell us? I mean, there would be some savings, right, on the employee front. But unintended consequence, but it's there.
I talked about 70 basis points coming in from rebalancing of pyramid and higher QVA. That's the number.
And actually, again to say, because it's not a question, when we have announced, truly like as a company that we have always did, we are ahead and we have announced salary increases, we are paying higher QVAs. So this is not about cost at all.
There was so much to discuss with the TCS management this time, whether it's about demand, whether it's about their investments in the AI ecosystem, the employee rationalization, and the management CFO talking about inching towards that 26% margin band. Very categorical there. Currently, they're at 25.2%. Get into a break. On the other side, we'll get the pre-opening. Also, the management of Ixigo will be joining in on their fundraise announcement. Stay tuned.
Welcome back. 2 minutes to go for pre-open, 17 minutes to go for the market to open. The GIFT Nifty comes up for you, was indicating a start about 15 points lower, stays around that point itself. So good time to get in our technical experts. We do have with us Sudarshan, Mitesh, and we have Shrikant with us as well. Mitesh, good morning. The Nifty has been in this range, but over the last couple of hours of trade yesterday, it looked like it may break out. The TCS results, will that help it as well?
Good morning, Magan. So, what has happened is that we had a rally from about 24,600 to about 25,220. And yesterday, I think, was a turning point in the sense that a lot of directional indicators started to, turn on the upside. Now, that could mean that there could be more traction coming in. So my initial belief is that one, the market should get stronger in the coming few days, and not only TCS, the entire IT pack, which was extremely oversold, is giving a reversal. And two, on the upside, then we need to figure out what levels we are looking at. First is 25, 350, 360 zone, which is where a declining trend line comes in. And this combined with the fact that we had a closing of 25, 420 on the 18th of September. So I think the 25, 350, 420 becomes your first target band. But once we start getting past that, I think the market could really get more momentum on the upside, and then we could see a good kind of breakout. So the direction bias is positive, waiting for the markets to hit 25, 360, 420 zones and clear that, and then I think we are looking for even a better time.
Right. Shrikant, your thoughts?
Good morning, Mangalam. Good morning, everyone. So the markets have been consolidating for the last 3 days and may consolidate further until the Nifty crosses the level of 25,250. But this time, the best part is that most of the indices are participating in this up move. If we consider IT, metals, pharma, private banks, PSU banks, almost all the major indices, they are supporting to the market. As well as if we consider the FIs buying, then there also we are seeing good amount of buying support. Broadly, we are of the view that 25,000 should act as major support for the market. That should be the final stop loss for holding any long positions. I think that markets are very clearly heading for the levels of 25,500, 25,650, which was its previous highest level. Bank Nifty is also around the same levels, consolidating. But broadly, there also we are of the view that it is heading for the levels of 58,000. Ideal strategy should be to look for adding position in case if there is any correction in the market.
Okay. What about stock, Shrikant?
Good morning. For stock specific metal stocks, they are doing well, especially from the mining side. And in that, we like GMDC, which is around 630. It has been consolidating since last almost 3-4 days within the range of 630 and 580 on the downside. While looking at its pattern, I am of the view that the stock is on the verge of breakout and heading for the levels of 670 or 680. So there we have a bullish view, it's a buy. The other stock which we like is from the PSU bank space, and that in that specifically we like PNB, which is currently around 114. There we have a target of 120 and we can keep stop loss around 111 for the same.
Right. And your picks, Mitesh, this morning?
Yeah. I have all buy calls. CG Power, after a pullback and consolidation, gave some kind of a breakout yesterday. So keep a stop at 749, look for targets of 785. Buy on IDFC First Bank with a stop at 72 for a target of 77. Kotak Bank has done well, and yesterday signaled some kind of continuation on the upside. So buy with a stop at 21.19 for targets of 21.95. And NMDC is the final call. Keep a stop below 77.40, look for targets of 82.
All right, gentlemen, thank you so much for joining in. We'll come back to you for trades at, just before open, and then thereafter trades at 10 as well. But let's move on to an important conversation now. Alok Bajpai, the chairman and MD of Ixigo, joins in, obviously fresh off the board meet that just concluded, where they will raise 1,300 crore rupees via an equity issue, 10% to process. And there was also a letter that the company got with a potential investor to buy stake in the company. Was that process or was that someone else? And finally, we will obviously discuss the business outlook for the company post GST cuts and as we move into the travel end of the year. Thanks a lot, Alok, for joining in. And this 1,300 crore rupees fundraise that you've announced, congratulations for that. We'll talk about, the objects in just a bit. But what's interesting and what was perplexing the street is the letter that you guys received, which said that a potential investor disclosed that they would acquire no more than 16% of the company from the secondary market. Time, price, nothing was defined. And then the company said that, you're not party to any of all of this. What exactly happened out here? And this is unusual for a company to disclose a letter like that to the exchanges, upfront. Could you tell us who the potential investor was? Was it Process itself?
Yes, indeed. So the letter that we received a couple of days back was from Process, which is one of the leading global technology investors, as you know. They've been deeply committed to India and have $8.6 billion invested in India. The letter obviously indicated that, through a mix of primary and secondary, right, they would aspire to get no more than 16% ownership. At this point, we have approved, the board has approved the primary component, which is a 10% stake, for the amount you mentioned. And I think from a secondary perspective, at this point, we do not have additional information, but we are assuming that, they would be pursuing that.
So did the board meet to consider the fundraise happen to accommodate Process's intent?
Well, look, I think we've got this intent a couple of days back, and the board has approved it this morning. And I think we essentially welcome an investor who has such deep experience, not just in technology but also being AI first in their thinking across the investments that they have made across the world as well as in India. So I think it's an investor whom we really respect, and therefore, we did proceed with the primary transaction.
Right.
At this point, we don't have any further information on the secondary transaction.
So it's possible that, Alok, hi, morning, and good to speak with you. So it's possible 10% you issue through this pref, and they buy additional 6% from the market. It's possible.
Well, it's possible. I mean, at the end of the day, I think I can only comment on what we have approved. And of course, it's subject to shareholder approval now to consummate, right? And I guess on the secondary side, as and when, there is any further information available to us, we will make it available.
Was it?
But, yeah.
Yeah. Got that. Was it, how do I put it? Was it all... all friendly and amicable, Alok? I mean, because that letter, when it was put out, you would understand, right? I mean, it was unusual to see a letter like that, in which the company is essentially reproducing what the letter is saying that will,
Well, it was, I mean, we received the letter and it was a voluntary disclosure from our side to the markets that we have received such an intent. I think it's not really unusual. There have been precedents where this has happened, but the fact is that, look, like I said, this is an investor that is deeply respected in the Indian, growth.
Will they get a seat on the board, Alok? I mean, or have they asked for one?
So they do have the right to appoint a member to the board so long as their holding remains above 10%.
Okay.
Right. So assuming, so the answer is yes. I mean, they would, obviously they'd want...
Well, they have the right. So we'll wait and watch.
Okay. And is it possible, do you have, I mean, since this is a process, they will stay, I mean, the max is 16%. So we should work with that 16% number.
That's the max intent that we have received so far, right? I mean, so I can only comment on what information we have at this point.
Just out of curiosity, would you not have benefited by issuing 16% equity to them? Then that way money would have come, a lot more money would have come into the company. Or did you not need the money and you were okay giving them, pref of 10% and the rest they can go ahead and buy from the secondary market?
So we have weighted, obviously, how much capital we think, it can be used to our advantage at this point in our business. I think we are living through a very... I would say once in a lifetime moment where we could actually invest further in AI and technology to reinvent ourselves over the next few quarters, which is something we've been talking about last couple of quarters. as well as the fact that we need to double down on hotels, a new segment that we entered about a year and a half ago. Plus, of course, the fact that there's a possibility and we can keep it as an optionality to pursue inorganic opportunities as well, right? So in that sense, I think we've evaluated how much capital, we really could absorb at this point of time, and that's how we arrived at the 10%.
So Process, Alok, indicated their intent to come into the company a few days back. You voluntarily disclosed that to the company. So if you were open to the idea of selling, part stake in the company, then why not look for other investors and then evaluate the option that works best for the company? Why did you go with the one that first came to you?
Well, because it's a great investor, right? I mean, if you think about it, right, there's also the time value of money, right? I mean, a pref issue is actually the fastest route to raise money if you actually want to do that. We are talking about one of the most reputed global tech investors, with portfolio companies which are household names in India as well as abroad. And I think in that sense, we did not have any qualms about proceeding with this transaction.
Tell us a little bit more about the capital allocation then. 25% for organic, 25% for inorganic. What specific projects, acquisition, how soon will you deploy it?
Yeah, so I mean, we have a timeline of next 2.5 years in terms of how we are thinking of deploying this. Most of the objects, we will utilize them up to December 31st, 2028 or March 31st, 2028. Now, the split of the utilization is as follows. Like 1 quarter is actually for organic, which I mentioned will be supporting our AI-led reinvention strategy, which is our disruption pod on AI, where we are working on some agentic AI capabilities, which will be more multimodal, conversational, hyper-personalized, preemptive, proactive, and which can act on your behalf. So that's one of the areas where we are doubling down on, and we will definitely not be shy of making further investments into. Hotels, like I mentioned, is a very important priority area for us in the, for the next couple of years. And I think we are still very early in the journey of product market fit. But I think adding more supply as well as, gaining more, I would say, product insights to improve our product market fit even further, as well as, marketing initiatives around that. Those are areas where we'll probably invest some of the capital. And of course, brand awareness creation of Ixigo and Confirm Ticket and Abhibus. That is something we believe we will continue to push the pedal on in line with our growth.
Right.
That's the area. The next quarter is dedicated to inorganic, which again is an optionality. At this point, we don't have any identified acquisition target. And then there's working capital and GCP.
That's interesting, because of the money that you've raised, 25% is what you can, use to organically grow your business. The rest, working capital, general corporate purposes, inorganic 25%. Obviously, not anything at the moment right now. Final couple of questions before we let you go. Process also has a stake in a Latin American online travel company, Despegar, which is valued at nearly $2 billion. They also have a stake in Rapido. Do you see some sort of synergies with Process's portfolio companies that could grow your overall business? And how much stake Process holds would be something that would be comfortable for y'all? Because beyond a certain level, it may start to get a little hostile, right?
Well, I mean, I would look at it a different way, right? So this is an investor who has very deep, not just investment experience, but operating experience, right, across markets. And the kind of insights as well as the kind of, global sort of exposure they have to how businesses work, can be very helpful, obviously, for us. And I'm sure that, as this relationship progresses, it's just at this point, like the start, right? We want to see how we could leverage, their capabilities and, of course, their global access. And at the same time, for us, if there are possibilities to partner with, their portfolio companies, we would love to explore that. But, I would say that all that is still ahead of us. We, at this point, we've just sort of approved the transaction at the board level.
Do they have more fundraising, right?
Yeah. Sorry?
No more other primary fundraising for the foreseeable future?
Yeah, I mean, at this point, I think we're sufficiently capitalized post this transaction. Once it consummates, yes.
Do they have another OTA, Alok, in their portfolio process?
At this point, they have Despegar in Latin America, which they own. They do not have, as far as I know, no other OTA.
Are all other big shareholders, I mean, have you spoken to them? How do they feel about this?
Well, the moment this news got public, I think we've got some congratulatory messages. I think there is a lot of respect for the name in the market.
No, it's a highly respected name. And we were just sort of curious about the way this kind of sort of transpired. But
and I'm surprised that you didn't disclose the name of the investor in the first time itself, because now that you're saying it with so much clarity, you could have just said that Process intends to acquire 16% stake in the company back when you disclosed that letter.
Yes, but there were no binding agreements signed at that stage as we disclosed, right? Yeah. So it was more like somebody intimating us that they intend to do something like that, right? And I think we felt it best to disclose.
Yeah, got it. Alok, we congratulate you as well. You've done phenomenally well. Thank you very much for joining us, and good luck as you execute. Appreciate it. Well, that's Ixigo's management on the transaction stock. I think the pre-opens come to an end, and it's down about absolutely flat, 1% or lower, 310 or so. The Nifty will come up on your screen. We should take a quick look at it, and it's nothing, absolutely flat. 14 points lower, 25,167. TCS, maybe we just give it a quick look. How's the pre-open left off at? TCS is down about 1/3% as well. Mitesh is with us. I don't know if you've got 30 seconds to squeeze in. Okay, I think we don't have time. So we'll just hit market open now straight and look at where some of this is coming through. The rupee is opened at 88.79, 88.78. So there is so far no reaction to all that, to the phone call and the promise of staying in close touch between Prime Minister Modi and President Trump. We're starting off. What do we have? It's a very, very quiet start this Friday morning. 25,176. Nifty Bank is up about 1/3%. Okay, it's up. It's just sort of opening flattish as well. So 56,250 or so. Midcap index is up about 60 points. That's again flat. The small cap index will come up as well. And I don't think there's very much there at this point in time. You got some life insurance companies which are perking up again. Numbers, as Yash was pointing out earlier, from Max Life and SBI Life are strong. So, those are the two names. Otherwise, we're just sort of starting up with lots of individual counters. Nifty heat map will give you a quick sense of where we start, and then we'll get into individual stocks. It's mixed. So more down than up. Yeah, absolutely. 35 odd lower, and the rest are higher. SBI Life on one end, Mahindra is on the other. Rima.
Well, IT is seeing some profit booking. The Nifty IT index opens with a cut of about 0.5%, with TCS also seeing profit booking down 1%. This is after a 5.5% rally over the last 4 days. So TCS is retreating a bit. Tata Elxsi too seeing profit booking down 2.8%. Remember, numbers are not bad, but in the case of TCS, we'll have to see how all their plans to play the AI ecosystem materialize over the next 5 to 7 years. As of now, it's not going to change the growth picture or the revenue numbers. The Q2 was not as bad as perhaps what the street would have feared. So TCS and Tata Elxsi seeing some correction. Along with that, throw in a Tech Mahindra and HCL Tech. These stocks too have opened in the red. Infosys too down close to about 0.25%. Avenue Supermarts should also come up for you on your screen. They will be declaring their numbers later today. We already have the Q1 update. It had disappointed the street to some extent, right? Avenue was a bit disappointed in the Q1 update. Yeah,
yes, it was.
And the stock has opened up on the flatter side. Maruti Suzuki, Nestle, Shriram Finance, HUL, Titan, ICICI Bank. These are some stocks which are seeing some mild cuts early in the morning. On the way up, SBI Life is the big winner. That's up nearly 1%. The new business premium is up 32%. HDFC Bank, Kotak Mahindra Bank. In fact, some of the private sector banks are trying to pull the markets. At least the Nifty Bank, it's holding up in the green. And Reliance Industries declares their numbers next Friday, 17th, post-market hours. So that's the date to mark on your calendars, and Reliance Industries is open in the green.
Yep, that is the one that we're looking at. But from the broader market, it's slightly better than what the frontline end would suggest. Today we have straight off the gate, 1,300 stocks which are in the green, and this compares with just about 900 stocks which are in the red. Those who, applied to the LG IPO, looks like they're also excited about the other consumer durables. So the top 3 gainers in the F&O space today belong to the consumer durables. You have Blue Star, which is up 3%. Whirlpool is the other one, which is up 2.5%. Voltas also is up around 2%. So a flurry of activity in that space on account of the strong demand for LG's IPO. We're also seeing some traction in Angel One, continues its up move from yesterday, ever since there was a reportage that maybe it could take some more time to take a call on the weekly options expiry. Some profit booking on metals. Yesterday, metals were fairly well bid. Hinzing opens lower. Hindustan Copper is lower. NMDC also, along with Vedanta and SAIL, are lower by about 2%. And we're seeing big gains in a name like Subex. Early in the morning, Subex is up 8%, and so is Natco Pharma, both of them with a fair amount of volumes backing them. And GM Breweries, after an 18% up move yesterday, we're seeing some profit booking. It's opened about 5% lower.
Absolutely. And, market open coming up on your screens. And maybe we should just look at a few names here, right? I mean, let's look at Ixigo there as, post the open that we had. So Ixigo, I think, is up about 1% or so. So that's 3 rupees, 316. Now, I think we already looked at all the IT stocks, and maybe just revisit the Nifty IT index per se. And if there's something coming up there. Metals were a big winner, winning sector. JSW, Tata Steel, etc. And the Nifty Metal Index was up 2% yesterday. So starting about 1% lower. MCX was a big winner yesterday. We should just look at that as well. Look at BSE. These are all, 1% on MCX. BSE was up about 3.5%. It's up another 3% right now. And it's got volumes almost nearing about 1 million shares now. And I think we mentioned Angel Motilal Oswal was up sharply yesterday. We should look at that as well. Bluestone, that's the recently listed jeweler, has had 2 days of phenomenal run. And Bluestone will also come up, and we should look at that. There is a fair bit happening. It's down about 3.5%. Another one was Blackbuck, right? That Zinca Logistics, which was up sharply yesterday. And, sometimes you just have some reversals after very, very sharp moves, and that's what's happening. The number one volume-led loser in trade yesterday was NetWeb. It was down by close at 330, down 10%. And let's just take a quick look at where that is starting. It's down another 1% or so. So from 44, 43, 4400, very quickly it's come down to about 3900, but it's had a one-way kind of a move so far. Vikas Khemani is with us. He's a market master of the day, founder at Carlinian Asset Management and advisors. Vikas, great to have you with us here. Thank you very much. This US-India bit, I was just, the way I was framing it was one step closer, looks like. Or maybe the equity market is already starting to pick some of this up. FI selling has, stopped a small buying here and there. And you've got, Prime Minister Modi, President Trump speaking last evening, Treasury Secretary in the US saying, well, India is going to buy more US oil rather than Russian oil. What's your sense, Vikas? The question really is that meaningful for markets whenever that gets resolved? And in what way?
Hi, Prashant. Good morning. I think, U.S. tariff uncertainty has been long talked about, and I think we all know that it is not very significant from an economic impact perspective. But having said that, you do not want any disruption in the U.S.-India trade relationship because both economies are very, very important to each other. And I think there is a wide, large, major conviction within the market participants in general that in due course of the time it will be sorted out. I don't think the continuation of 50% tariff is going to go for long, and I think it's good that we are making strides in that direction. But throughout this uncertainty of last 4 or 5 months, we have continuously said that what RBI governor is doing is far more important than what Trump is doing, in the sense that if you see, our regulator has taken far, far more growth-oriented policies, right from cutting the repo rate to infusing liquidity in the system to last week's policy of where the huge reforms happened or the relaxation happened to boost the credit growth. So all those things are far more important. And if you see from government side, whether it was income tax cut, GST cut, spending on the infrastructure, everything is going well. So when your government as well as the regulator are clearly, taking a lot of growth oriented policies. It is only a matter of time that it will reflect. We've been kind of quite positive on the entire corporate earnings cycle. We've said that, in next sort of second half of this year, you will see good corporate earning picking up. Now, so you have a good setup going on right now. As the clarity comes around, whether it is corporate earnings or tariff-related issues or anything else, I think market will keep inching up towards, as the uncertainty settles down. That's been our broad sort of approach towards the market. Regarding your questions on FI selling, I think I've long said that it has nothing to do with the trade deal or this and that. I think, India is a part of emerging market basket. Whenever Fed raises interest rates, the investors in US and elsewhere pull out money from the emerging markets. And that was happening since post-COVID when the Fed started raising rates. As far as and in that period, India was significantly overweight because China was not doing well. And in 24 and early part of 25, as the China weight started going up, obviously India became whatever, you have to sort of sell India to get the China weight. So now as the Fed rates are coming down, beginning of that has happened. I do believe that we will start seeing a significant flow coming through from FIs as well. So I see good liquidity happening. I see good corporate earning happening. And as some of these talked about uncertainty settles down, you will see market holding on that.
Yesterday, one of our experts, Vikas, said that, tariffs are temporary, but the GST cuts, the RBI policy, that's permanent. So just echoing what you're saying. But are you comfortable buying India's new age platform companies? Because as you have been talking about to your investors in your letters, that the fad FOMO phase seems to be over and companies are now cognizant that they need to focus on the profitability, the fundamentals, rather than just chasing growth. So the question is that, this narrative is now playing out, profitability over just, crazy growth, frenzied growth. But are valuations comfortable to buy, say, a basket of new age platform companies now?
Very good question. See, if you see when they hit the market in 2021, I think they were largely driven by the, very big, fad. I think more they burnt money, more probably valuation they got from the market. And most people, and I think it was yet to be proven how they will scale up and all those things. But in the last 3-4 years, that burning to earning kind of change has happened. Most platforms are focusing on sort of reducing the burn and get to the operating leverage and, build a sustainable model. And I think that is what markets like now. There's no denial on the fact that, platforms are good play. And we've always said that we never had earlier companies with the platforms play and neither now. I think because they have a high operating leverage, it requires a lot of effort to build those platforms, and they are serving a specific need of their segment, whether it is Paytm to any platform you look at, right? So I think they bring lots of operating leverage and scalability without. So I think that you will see. So we like the whole space, and when I'm saying whole space does not mean we like all the companies within that space. We don't kind of understand many of them. So as long as we understand that there's a moat behind the platform, there's less risk of disruption, competition is less, and platforms can scale up from here in next 5-10 years. Those are the platforms to bet, and you can't, value them in the conventional valuation methodology. So, and there's no right or wrong sort of number for that. So you try and understand, what could be the operating leverage, what could be the outcomes in next 4 or 5 years, and then try to understand from that perspective.
Right. From here on, if you had to bet on one particular theme over the next 12 to 18 months, which one would that be? And on the other side, what's a place that you would not want to put your money in?
I think given the fact that, RBI gave significant relaxation on the credit growth, I do believe that credit growth will pick up significantly or in a meaningful manner. So you will see banks doing pretty well. Again, investment cycle has done it continues to remain robust. So look at, companies like L&T and Allied Pack, which has kind of done well. And those are the businesses which, in my opinion, are still significantly sort of undervalued. Consumer seems to be, especially in the discretionary side, there is a good, demand happening. And, with the interest rates coming down and tax rate cut happening, it also acts as a demand booster. So I think these are the 2-3 packs which will do well. And having said that, of course, you have to identify right company which can benefit from that. But generally, broadly speaking, these are the 3 broad segments will do well.
And what would you avoid?
avoid, I think generally speaking, see, at most, I mean, I would avoid hype stock. I would avoid where there's no risk reward, one understands. So, I mean, that's a general thing, but I'm not like per se negative. And if such a widespread growth happening, you would not want to sort of, call out negative on any segment. But within each segment, when broad-based growth is there, within each segment, there are hypes which gets created, and one should definitely avoid. I'm also not as sold as on consumer staples because they are significantly higher. I mean, they're better risk reward trades, not because, they are not good companies, but they're better risk reward investment elsewhere, given their valuations and growth profile.
Vikas, yesterday, I mean, not talking stocks or anything, but in terms of business line, TCS said they're going to invest in a data center, 1 gigawatt over 5 to 7 years, could be $7-8 billion in investment. Not about TCS, but about that line of business. Have you looked at it? And where is the value? I mean, there is there's a lot of stuff which goes into it, right? There's racks and servers and power lines and chillers and cooling and concrete. I mean, where is value? What should one look at? Which area?
See, there's no denial that data center is a very big opportunity in next, 1 decade or so. And I'm sure lots of capacity will come. So I think our view has been that direct players are very limited, and like similar point that because it is a sought after segment, I think valuations are, or you don't understand how they are kind of being considered. So I think, enabling sectors, there are many, and it's not only with respect to data center, but, whether it is cables, whether it is, I think there are lots of, enabling segments which can play with that, but they will not be pure play data center play. There will be allied plays as well, because what you supply to data center, all those companies also do work with many other companies as well. So I think somewhere, this also acts as additional growth for the company operating those enabling space.
Because broadly, if we see more IT companies making a play on the AI ecosystem, even though there is no direct synergy. So for instance, just for the sake of an example, TCS making that investment in AI data center. So there is no synergy which comes from an IT services companies. But we've also been complaining, on the other hand, that these companies cash rich and they've been making unproductive. The deployment of capital has been unproductive. So if we see more companies making such bets, should investors cheer that, or would you be skeptical because it will alter the free cash flow, the returns, the ROCE will be lower than the existing business?
I'm sure, see, they are going to make this over a long period of time. So it's not that they're making $7 billion investment in a year, but given their cash flows, I think some kind of, is fine. And it's not completely unrelated. Of course, it is, different business, but it's not completely unrelated. Maybe there are certain synergies also they see. So I would look at, according in that direction. But I think as far as the IT sector is concerned, I think all companies have to get ready for, AI related technologies, because as the demand is shifting on the direction, and companies which do enable or get ready faster will be the future winners. But yes, like every time there's a technology transition happens, not necessarily yesteryears companies do well in the future. For example, if you see, Y2K time, Infosys, Wipro, Satyam Vardhan, winners. After 2009, when digitization, cloud migration, the theme came, HCL Tech, Persistent, LTTI, LTTS, Mindtree, all those companies kind of scaled up very well significantly, some of them even 20, 30, 40x. So I'm quite sure that this cycle as well, you will find new companies which will become very, very large future winner, which are today might be small. In the real opportunity, if you ask me, in IT space lies in those small spaces, segments where you can see companies becoming 20, 40, 50x.
All right, Vikas, always a pleasure speaking with you. Thank you so much for giving your insights, and wish you happy festivities. Obviously, we will speak to you more as we move towards the festival end of the year. The market's picked some pace. In fact, it opened flat, and now look at the Nifty. It's been led by the Nifty Bank. The Nifty Bank is up around 0.5%. Yesterday, it was the IT pack that did well. The Nifty Bank was a bit of an underperformer. Today, the IT pack is seeing some profit booking, and the Nifty Bank is, taking the index higher, 56,500, close to that level on the Nifty Bank, and the Nifty closer to 25,250. So it's high on the Nifty that we've seen over the last week or so. It's much stronger than that. A lot of broader market names doing well too. Inox Wind, for one, has moved higher, and alongside that, Tata Communications is the other one which has recovered a fair bit. In fact, this week itself, Tatacom is up around 9%. Natco Pharma is the other one which was buzzing around. We have Vinny joining in to tell us what exactly is the story here. Vinny.
Hi, good morning. So an important judgment that has actually come in favor of Natco Pharma. This judgment is coming from the Delhi High Court. So the Delhi High Court has now dismissed Roche's appeal against Natco Pharma. This is for one of the drugs which was going to be launched by the company that was for spinal muscular atrophy drug, which is used for this treatment. Now, obviously, the company will get to launch this product now coming in because the court has dismissed the appeal for which was against the which was put in by the Swiss pharma company. This will clear the proceedings for the launch of the generic version of this drug, and this will be launched at a price of around 15,900 rupees. And like I mentioned, used for spinal muscular atrophy, important drug and important for patients' point of view as well. So keep an eye on Natco Pharma today. It's surely buzzing away in trade on the back of this.
Thank you very much for that. And now let's head across to Ria for more on Sona BLW, Lloyd's Engineering. Ria?
Well, yes, Sona BLW has been in focus today after the company has entered into an MOU with Neura Products. Now, this is for the joint development of advanced technologies, components and sub-assemblies, as well as for the industrialization of robots and humanoids. And this will be done for Indian markets as well as other markets which have not been specified. Lloyd's Engineering has also been in focus after entering into an MOU with Flyfocus. Now, this is being done to jointly develop and manufacture the Defender Signals Intelligence UAV. And as part of this MOU, they will be ensuring complete localization and a technology transfer, as well as the eventual indigenous production of this Defender UAV. Now, the collaboration also provides exclusive rights to Lloyd's Engineering for Indian deployment, as well as adaptation of the Defender UAV. And it also opens up export potential for the company, which is why both of these stocks have been trading higher today.
Right, Ria, thanks a lot for that. So those are a couple of stocks that are buzzing around. Let's get in another corporate conversation. After the recent GST rate cut on commercial vehicles, is demand beginning to turn the corner? Early data shows a mixed trend, with Vahan numbers indicating a 9% drop in heavy vehicle registrations, but a sharp 21% rise in LCVs this festive season. The bus segment, however, continues to lag, with steep double-digit declines across categories. Meanwhile, VECV is getting up for its next big milestone, which is a 550 crore investment to set up a new facility in Ujjain, a key part of its India and Asia-Oceania strategy. Joining us now to decode the market trends, the outlook for the bus segment, and more importantly, the next phase of investment, is Vinod Agarwal, the MD and CEO of Volvo Eicher Commercial Vehicles, VECV as we know it. Thanks a lot, Mr. Agarwal, for joining in, and festive greetings to you. The GST rate cuts, that's the first question. You know, has that improved demand or has that impacted demand? Because the data that we have right now is fairly mixed. What's your sense?
Of course, the data as of now doesn't show that the demand has gone up. However, I think GST cut is a very, very big step from Government of India. As we know that this had been our very, very long-standing demand with the government that reduced GST from 28% to 18%. And now government having done its job, it's back in the industry's court that we have to deliver more. And the other thing is that it has created very positive sentiments with the consumers and the businesses or the consumption. That is driven a lot by the sentiments. When the sentiments have become positive, we are expecting very, very, bullish festive season, and there is going to be good sales for the white goods, fast-moving consumer goods, and e-commerce. As it is, we can see that rush in the malls if you go to the market. Therefore, I think we are very positive, because if the economy does well, if the demand for all the goods increase, demand for two-wheelers increase, or demand for cars increase, I think it reflects in the movement of more goods and services. Therefore, we have no doubt that it is going to be very positive for the industry, and commercial vehicle industry eventually will start growing.
Mr. Agarwal, morning. Rima here. The bus segment is under pressure. Can you explain the reason for that? Is it on account of the urban EV push, or is it something else? And when do you expect a recovery?
I think we should not say that it is under pressure, because if you look at the bus industry sales, last year it had touched 96,000 total for the year. Now we are comparing with that peak sales of 96,000. which was the bumper growth. And this bumper growth was happening over a period of previous 3-4 years also. So the earlier peak of 18-19 for buses was only 60,000, 60 to 96. And this year, first 6 months, we have seen that in September there was some drop. But of course, the first 6 months, bus industry also has grown by 4.5%. So I will not say that it is under pressure or it is going to be a drop. There are always some technical corrections when some segment grows very fast and reaches a very high levels. You can't expect that on those high bases, the industry will continue to grow with the same rates. So therefore, I'm not worried at all that bus industry is doing well and it will continue to do well. From December onwards, we will see the school season starting, staffing requirement also, the buses for staff movements. That also is very, very positive. So therefore, I have no doubt that the buses industry will continue to be good.
For full year bus sales, what do you anticipate for FY26?
Last year it was 96,000, and
Yes.
first 6 months it has grown by
4.5%.
5%.
No, for the full year, what do you anticipate now? What
Therefore,
will the number?
even if you assume the growth will be around 4-5%, you can easily say that it should be around 100,000.
All right. And you were fairly optimistic on the commercial vehicle segment as well. Light commercial vehicles doing extremely well, heavy commercial vehicles not so much. For the remainder of this year, and as a result of which for the full year, what's the kind of guidance that you can give? Can you put some numbers to the optimism that you have?
So if you look at the numbers, wholesale numbers, sometimes retail there is a lag in retail numbers.
Yes.
Like if you are looking at Vahan data for September, obviously the GST impact has not come in the Vahan data. So if you look at the wholesale numbers, the smaller commercial vehicles as well as the light and medium duty trucks, the growth in September has been very good. And it's only the heavy duty trucks where the growth was there, but it was not very high growth. And for first 6 months, heavy duty trucks have, in fact, wholesale numbers also have dropped by around 1.4%. So therefore, heavy duty trucks have dropped in first 6 months, whereas the light and medium duty and the sub 3.5 ton small commercial vehicles. In fact, in the month of September, small commercial vehicles have grown by 16-17%. So therefore, the GST impact has been seen in the small commercial vehicles and also, you can say, in the light and medium duty trucks. But still, we have not seen in the heavy duty trucks, because heavy duty trucks, 50% of the customers also sometimes they don't take the they don't get the immediate benefit, because they take the GST credit, they take the input credit. So even if the rate was 28%, they were taking the credit for the GST paid, and they were getting the refund through the GST.
No, we get that point, and we have the numbers for the first 6 months. Now, the question is the next 6 months. How much faster than the first 6 months would you see growth in the next 6 months?
Look, if you look at the past trends, second half is around 55% of the full year, and the first half is 45%. So if you take that same logic, the second half is going to be much better than the first half, because numbers are always more than the first half. First of all, it is the festive season impact and then the last quarter impact. Therefore, we are expecting good growth coming in the first half. There is a growth of in the 3.5 ton and above, around 4.5% total industry, 3.5 ton and above. Second half, we are expecting more than 4.5%, because there will be impact of GST. There will be you will feel the real impact, and of course the economy is growing. Infrastructure investments are happening. Replacements are going to be stronger. So therefore, I have no doubts that second half is going to be much better than the first half.
You've announced a 544 crore investment to set up a Volvo 12-speed AMT facility in Ujjain. What is the commissioning timeline? What do you expect out of this? How does this strengthen your India, Asia, Oceania strategy?
First of all, it is a very, very prestigious project. When Volvo Group reposes more trust in VECV, that they have given their state-of-the-art and very high-end transmission, automated manual transmission to manufacture in India. It's a very big thing for India that we are going to manufacture in India for the world. We are going to meet the Volvo Group's needs for Asia, Oceania markets. Therefore, I would say it's a very, very big step, very positive step. And of course, the commissioning time for this project will be around 2 years. We are expecting that we should start manufacturing sometime from October 2027.
Right. And what about exports? What proportion of your sales now in the second half will come from exports? What is the kind of growth projection that you have? On a low base, it's been growing faster.
Yeah, exports are now the market. Markets have bottomed out. We are seeing good traction in all the markets now. If you look at first half, the industry exports out of the country has grown by 33%, and we have grown by 40%. We are doing better than the overall market, and we are expecting that the second half will continue to be strong. Last year, full year, we exported 5,000 plus vehicles. So first half, we have grown by 40%. So let's hope that the growth continues like this.
And you don't worry about, competition in the export markets because of US tariffs, etc., right? Those who could earlier give to the US will now, perhaps because of higher tariffs there, look at flooding other markets.
Trucks and buses don't go to US.
No, not yours, but your competitors who would be selling it to the US will now perhaps be looking at other markets.
No. From India, no truck or bus goes to US.
All right, take that point. Thank you so much, sir, for joining in and giving us an outlook on the festive season as well as the second half of this year. You believe the second half definitely going to be a lot better than the first half. We will look forward to those numbers as well. With that, we'll take a short break, come back on the other side, our quarterly special, Quarter Se Quarter Tak on our show. And this time around, we are discussing, with Nischint Chawate, the segment...
Insurance segment, we'll discuss what to expect from the insurance sector in Q1 FY26.
Welcome back. We've got the market, which is up 100 points now, and it's started absolutely flat, absolutely slow, but I think we've picked up nicely. So the market indeed is paying attention at the margin to what happened last night with regards to that phone call between President Trump and Prime Minister Modi. I mean, the momentum has been there in any case. You can add 2 and 2 together. You can perhaps try and put attributing reasons to what the market's sensing. But general sort of right direction in that sense. Insurance is what we're going to focus on in our segment, Quarter Se Quarter Tak. Let's put the spotlight on what to expect with regards to the top insurance companies. Yash is standing by to give us a preview, and then we will bring in an analyst to talk about this. Yash, over to you.
Well, Prashant, it's been an eventful quarter for the life insurance companies. A new regulatory body chairman coming in. Government announced GST changes having additional cost implications for insurers, and then insurance companies passing on that cost implication to distributors to somewhere insulate their financials. Kotak Institutional Equities expects it to be a quarter of anxiety and weakness. As far as annualized premium equivalent or APE is concerned, Kotak expects Axis Max Life Insurance and HDFC Life to fare better than the peers. So for Axis Max Life Insurance and HDFC Life, it expects an APE growth of 14% and 10% respectively. For SBI Life, LIC and ICICI Prudential Life Insurance, Kotak expects APE growth to drop by 1%, 1% and 4% respectively. Now, as per Kotak Institutional Equities, VNB trend is expected to remain muted. Axis Max Life Insurance expected to deliver the highest VNB growth of about 20% in the quarter, followed by HDFC Life at 11%, followed by SBI Life at 7%. ICICI Prudential Life's VNB growth expected to remain flat, while LIC expected to see a drop of about 3% in its VNB. Now, post the GST changes and, importantly, the disallowance of ITC, that is expected to weigh on the margins. The industry, expected to see a margin drop of anywhere between 50 to 150 basis points. Valuations have remained largely stagnant. Max Financial, HDFC Life trading at about 2.2 times FY27 price to embedded value. LIC trading at about 0.6 times FY27 price to embedded value. Now, importantly, 5 things to watch out would be the impact of GST and changes on the margin. Second thing, passage of commission to distributors and absorption of the cost. Third thing, demand outlook for the second half of FY26. Next thing would be commission trends for the second half. And finally, demands which the insurance companies have placed with IRDAI chairperson with respect to release of risk capital, also spreading out of expenses because of the GST changes through the policy term of any given policy.
All right. Yash, thank you very much for that. Nischint is with us, analyst at Kotak Institutional Equities. Nischint, Yash was referring to your report, saying that's a quarter of anxiety. So just start there, Nischint.
Yeah, so it's been a it's been a volatile 3 months, right?
Yeah.
First month was fine. August volumes were weak, given the fact that everybody was waiting for the benefit of GST exemption, and I think finally you saw some pickup in business in the month of September. On a YY basis, it appears to be less impressive, like the 9% private sector growth. But keep in mind that last year, in the same quarter, there was a lot of flash sales, before the surrender value guidelines came in. So on a 2-year CAGR basis, the industry has fared fine. We are closer to around 15%. So, well, that's not a bad outcome. And so the more important aspect is, how does demand, move from here on? Clearly, insurance prices have been lower. You've clearly seen, prices going down for term and for health, even for the other products to some extent of, whatever extent GST was there. So does that really help to stimulate demand? Does that really help you to kind of, reduce your sales effort? And I think that is going to be the positive, outcome that we are expecting to see. I think on the other side, as we said, the loss of input tax credit or ITC, how that gets shared between the distributor and the insurance company, I think that's something that we'll have to see. So those are the two things that one is really watching out for. This quarter per se, these results are less relevant. What pace of VNB growth is there in this quarter? That's less relevant. What is the outlook for these two aspects is something which is very crucial.
Absolutely. For a quick second, if I can ask you to comment on, we reported yesterday, Nischint, that post this GST cuts, etc., about the GST cuts, insurers wanted to sort of pass this on to consumers by cutting commissions, etc. Distributors like PB Fintech, etc., have pushed back, and looks like insurers have relented. There are renegotiations, etc., going on. Any way to think about this, and how important is this for a player like, I don't know if you have coverage in PB Fintech or insurers on the other side?
Yes. So I think, the one good thing that's happening is that, you've seen tariff for the customer going down. And, there is a resolve that, it remains low. So whatever is the burden that has to be shared between the manufacturer or essentially insurance company and the distributor. So I'm sure it is, there is a to and fro. It's like a game of chess, right? So you negotiate on some aspects and you find the middle path. the end of the day, what is expected is that you should see volume buoyancy. You should see more people inclined to buy insurance, and that will improve your operating leverage, and that should ideally offset, all the losses and the discussion that we are having right now. So the intention obviously is that this should actually be a more virtuous kind of an output. That's where I think that is a desirable outcome.
Got that. Fair enough. Now, let's talk about individual companies and where, for our viewers, given all the uncertainty and the road ahead, I mean, the quarter, of course, as you said, is not so important. How would you rate the companies under your coverage in terms of their ability to do well in this environment, given as things are?
So see, they see companies today, as I said, things are fluid, and that's why we use the word quarter of anxiety. But companies have multiple options. It's the decision that they make will determine, how things are going to play out. At the same time, there is competition between companies, and there is a distribution dynamic. So that's how I think kind of things are a little easy. Having said that, I think if you look at specific names, HDFC Life, generally a player who tends to kind of balance out margins and growth, kind of has always been more on a balanced side on some of these things. I think we would expect that they should have a reasonably good ability to sail through these things. We would expect some swing in margins maybe for this quarter, but margin broadly remaining in the same range and taking it up from there. I think likewise for SBI, right? SBI is generally a low-cost player, and which is the reason this whole loss of input tax credit impact should also be lower for them. And the second thing is that SBI or State Bank of India as a franchise has been weak for a while now, right? You're sitting on a fairly low base. And if one says that, look, this is going to stimulate demand, at the grassroots, then probably SBI Life should benefit a lot on the volume front as well. So these two companies should be fairly well placed. ICICI Pru Life, is again a player where you're probably seeing a base effect playing out on volumes, but the dynamics in terms of how the margins, etc., evolve is something that you'll probably have to see.
Yeah, got that. Nischint, from a overall, we got a new person at top at IRDAI as well. Another story we reported on was, this broad focus once again on sort of commissions. There was that Biosecure earlier, the idea. What's your sense there, Nischint? You think that's going to remain a focal point as well?
See, the point, I guess, the principle, that IRDAI is following is that, look, there is an cap on expenses. With that, what you pay to the distributor, what you pay on yourself, I think it's completely left on to the company, and companies can make a choice. Somebody would say that I would do business mostly with banks. Somebody would say that Policybazaar is a great partner. Somebody would say that, no, I'm going to balance all these things. It's really on to you. So should distribution commissions be down? Well, the cost of doing insurance or the cost of reaching out to the customer should go down, right? One can say that I'm going to cut down commissions. One can say that, well, I will not cut down commissions, but I will cut down some other expenses. Or somebody else could say that, look, the sales process has become a lot more easier. The product has become a lot more appealing and affordable now. So even if commissions go down, it doesn't really matter, right? So that's the dynamic. So I know we keep on really talking about, X% impact on the distributor and Y% impact on margins for a company. But we'll have to see how the dynamics evolve on demand. That will be the most important driver going forward. At the same time, how do distributors react? Does it become, less viable for newer, younger breed of agents to come into the industry? Because if the commissions go down, and hence in that scenarios, how do insurance industry kind of assess out its margins and agency commissions? I think those are also the things that we'll have to see.
Yeah. Got that. Nischint, we'll leave it there. Thank you very much for joining us, and we'll, I hope, speak after numbers start to come through for an analysis of what they show us. Well, I think we want to focus on another important story, and this is relevant for the Indian automotive sector. Actually, it's important for the industrial sector here in India across the manufacturing ecosystem. China has tightened export rules for crucial rare earths once again. And I mean, the idea behind this could be with regards to, of course, its stance and its back and forth with the US, but it's got implications here in India as well. Parikshit is here with this important story. Parikshit, over to you.
Well, China had imposed the first round of export restrictions on high rare earth magnets in April this year. Those restrictions continue as it is, though there have been exceptions made, waivers made for companies and countries on a case-by-case basis. India has also been getting consignments of low rare earth magnets, but those have been through a very slow and arduous process. We're still not getting heavy rare earth magnets according to our sources in the automotive industry. Having said that, there is now a fresh notification which has been issued by the Chinese government, and this is dated October 9. It's going to come into effect from 8th of November next month, and this pertains to fresh restrictions that China is going to impose on certain material that is used in making lithium-ion batteries, anodes, and cathodes as well. So this would impact the EV manufacturing supply chain, because wherever we may be importing our batteries from or cells from, these kind of materials are used in all of that equipment. On top of that, what we also understand from our industry sources, we've been speaking to people in the industry to understand the impact, and they say that it's not just on the export of certain raw materials and more rare earth magnets, it is also on export of certain EV manufacturing technology as well. So this is where things get complicated. We've tried to understand what kind of rare earth magnets have been impacted. Well, they say that we were anyway not getting high rare earth magnets for the last few months. Now it's possible that medium rare earth magnets will also be impacted, and the industry understands here in India that at least 5 new categories of rare earths have been included in export controls. So we will really have to assess the impact over the next few weeks, but clearly EV makers are likely to brace for more disruptions. These reports have reached the government. This issue has been widely reported around the world over the last 2 to 3 days. Indian industry bodies are concerned. They have reached out to the government saying these are new developments taking place. These are things that we need to be prepared for. A formal letter from the auto industry to the government may go in the next few days. They may seek a meeting, seeking some sort of intervention to address this issue.
Okay, thank you very much for that. Just awaiting the WeWork listing. There you have it. The first tick will come up for you. The issue price was 648. The overall subscription was a muted 115%, in which the retail and the H&I category undersubscribed. The retail subscription was 61%, the H&I at 23%, and it's listed flat. 650 versus the issue price of 648. Amongst all the co-working flexible spaces which have listed recently, we have 4 of them now. Office, but that listed about 2 years back. But in the month of July, IndiCube and Smart Spaces listed, and SmartWorks, sorry. And SmartWorks is the one which has done very well since its listing, up 40%.
This was a pure OFS, right?
This was a pure offer for sale of 3,000 crore rupees, where the Virvani family, the promoters, and WeWork Global will be pairing part of their stake. And plus, there are certain ongoing investigations against the promoters, the Virvani family. And then there was this recent case, even in the Bombay High Court. So I guess all that has played. Margins for WeWork are higher than peers because it's a premium offering. But the utilization levels because of that is also slightly lower. But broadly, it's a loss-making company at the bottom line. So some reasons why, I think WeWork, investors took a bit of a cautious approach to WeWork. 632 now. Lower by 3%.
Okay, all right, that's a start, but a slightly subdued start. And we've had many of those, right? Not all of them are zooming up on day one, although many still are. Okay, lots of listings, lots of primary market action. Back to secondary markets, 80, 85 points on the Nifty. Sudeep Shah is with us with what he'd want you to do, Head of Technical and Derivatives Research at SBI Securities. Sudeep, good morning. A call on the Nifty first. We are basically, by the way, back above day before yesterday's high, which was 25,220, and so charging ahead. Trades on the index, and we'll talk about stocks.
Good morning, Prashant. Prashant, absolutely. If you see the Nifty right now, above past 3 days swing highs now, all these while in the last 3 days, we have seen some selling pressure from that 25, 200, 220 mark. But from a market breadth perspective, this time around, we feel that the structure is really good because in the last 6 to 8 months, whenever Nifty has taken resistance around that 25, 200, 300 mark and slid down, what we have seen is that the market breadth was not as good as it is this time around. So we feel that this time the markets are slated for a breakout, and on the downside now 25,100 becomes an important support. So till 25,100 holds, we are looking at 25,500, 25,600 on the Nifty in the coming 7 to 8 sessions. On the Bank Nifty, which has been stronger out of the two indices in the last several sessions, there we feel now it's a clean breakout. 55,800, 55,850 now becomes an important support, and Bank Nifty could head towards 57,300 and 57,700 in the coming few sessions. So we feel that both Nifty and Bank Nifty are slated for an up move with 25,100 support on Nifty and 55,700 supports on Bank Nifty.
Okay, what about any stocks?
Yeah, there are a couple of stocks now. One from the defense space. We've seen in the last couple of days, once again, defense has seen some kind of action, and accumulation has happening even at higher levels. Now, case in point, BEL, Bharat Electronics Limited. Here we have seen a small breakout on the daily charts as well as on the weekly charts. The structure is quite strong. So this stock can be bought on dips. With stop loss at 405 and targets at 425 and 435. The second stock is NBCC. Within this housing space, housing construction space, we have seen that last few days the stock was consolidating between 108 and 112, 113. Today there is a breakout, and this looks even good on the weekly as well as the monthly charts. A strong reversal is being observed. So we feel that from the current levels, plus and 120 as a target on the upside.
Got that. So, sorry, which is the last one, Sudeep?
NBCC. NBCC. This, okay. Yeah.
Okay, thank you very much for that. This NetWeb is zooming quite a bit. So that's up close to about 3.5%. About 8% of their revenues comes in from data centers, where they also provide not just the physical infrastructure, but they also provide a lot of cloud solutions which go into the data center. And that's the stock which is up 3%. And the other one doing very well is Sona BLW, which has signed an MOU with a German company for manufacturing robots, humanoids, which go into on the factory floor. So that's a big mover, 4% up. Get into a break. Manisha joins in on the other side. Welcome back. As promised, let's talk commodities. Manisha is now joining in. Manisha, what are you looking at today?
Well, I'm looking at silver, absolutely, because this is an important week when it comes to silver, and you have various headlines coming in for silver as well. So in the international markets, we've made an all-time high, and this time around at 51.30. The last time we went closer to 50 was in 1980, then 2011. But this time around, there are a lot of factors in play which seem to be supporting the prices there. Having said that, if you look at the last 1 month, we've gained up by 19% for the silver prices. And in this year until now, we are up by 72%. This is the best yearly gain that you've seen in many, many years coming for silver there. If you look at the Indian prices, then MCX has seen high above 150,000. In the spot markets, adding to the premium because the physical silver has been in shortage. There have been talks about delayed delivery. So, and add the GST to that as well. So the spot prices saw an all-time high of 163,000 there, or 1,63,000 rupees a kg. Now talk about silver ETFs, and in last 24 hours, all we've been talking about is silver ETFs. Here you have ETFs from Nippon, HDFC, Kotak, UTI, Tata, etc. And when you look at the high NAV, that all-time high NAV that silver has hit on ETFs has been at 165. So it has been a huge premium that silver ETFs have been commanding over spot, over MCX as well. Why is this happening? Because there's a complete disconnect at this point in time from the physical market. The silver ETFs have worked anywhere between 2 to 10%, as we've seen in the trade yesterday. Also, investors are paying higher than the actual price, and is the reason we have had Kotak come out and say that this is not what we want it to be, and they have pulled back from a lump sum amount that you have to pay onto that. Strong investment demand, expectation that the silver prices will go much higher from here are some of the factors that we've seen play on the markets there. Physical shortages is one part of it. And remember, when you are investing in an ETF, every unit of silver ETF has to be backed by actual silver, and that is shortage in the markets there, and that's the reason you're looking at a huge premium continuing into the markets. But if you are buying physical and ETFs at this point in time, remember that you're paying a premium which isn't aligned to the international markets, and so going forward, as and when these markets align, you have paid a higher premium there to buy these markets. Anyways, as I said, Kotak Mutual Fund is temporarily suspended lump sum or switch in subscriptions effective 10th of October until as and when they come out with the next notification there. So this does tell you that there is an issue when it comes to physical silver availability, and that seems to be disrupting markets across there. Silver prices have been gaining in last 3 or 4 years, and we know that there is a deficit in the international markets. The buying has been strong. Investment, Indian buying at 5,000 to 6,000 tons a year also has been on a stronger side there. And there is shortage of freely available silver in the London market as well. This is where the prices are fixed, and this is where the international markets take cues in from as well. This is a 5th year of deficit. Markets are looking at very strong sentiment. There is this conversation about further US Fed rate cuts as well, lower real interest rates, and that seems to be supporting tangible commodities, is the reason you have seen gold, silver, for that matter, even Bitcoin do very, very well in the markets there. I want to talk about on the overall global silver availability, and as per the Silver Institute, you could be looking at a deficit of around 100 million ounces. That clearly has been supportive. Take a look at the Indian markets now in sense of prices, and this is a 5-year jump in card where you can see in 2016 we were trading at around 39,000. 2020 we were trading at 67,000 rupees a kg, and fast forward to 2025. So in 5 years we've more than doubled when you look at silver prices. When you look at the prices in 2025 for the international markets, we started this year with $29.5 an ounce, and every few months we've seen prices continue to gain up. 72% up from where we started. 51.3 is what we've done. And when you look at the global banks and brokerages, they are still talking about higher silver prices going forward from here. This is an interesting data. When you look at the cost of production for silver, it's anywhere between $8 to $26 an ounce. Remember, silver is a byproduct when you're taking out zinc and lead, etc. So then the cost isn't so much. So $8 to $10 to $12 when you're taking out silver. But $28, $26 is when you're taking out from a silver mine as well. So at $51 an ounce, you stand in very strong profits if you were a miner there. This is what we've done in last many years when it comes to silver price gains. So it has been a constant gain, but 72% is the best in last 15 years now. Going forward, Nomura says that the global markets will see a deficit of 142 million ounces, and they expect prices to make an average of $50 an ounce on the 4th quarter. Julius Baer, of course, is slightly more bullish. 52 to 58 is what they expect. Once 50 is done, they expect the prices to continue to gain up.
Okay, all right. Thanks very much, Manisha, for that exhaustive explanation what's happening with precious metal silver in focus there. We'll take a quick commercial break here. We're going to come back with our special segment, Indianomics. Lata, in conversation with Renuka Ramna, the multiples, Srini Srinivasan of Kotak Alternate Asset Managers, and Rahul Saraf of Citi, on whether if RBI's latest liberalization can lead to a huge rise in M&A activity. Remember, banks can now finance M&A. So there's a big move. Discussion follows in just a bit.
Welcome to Indianomics. The Reserve Bank is proposing to liberalize rules governing financing mergers and acquisitions. Currently, companies don't get bank loans, nor can they raise foreign loans to do acquisitions. These restrictions are going to end soon. Companies will soon be allowed to tap bank loans and foreign loans to finance acquisition, but there's more. Foreign loans can also be used to buy real estate, purchase and development. That's not allowed now. Also, banks can lend more against REITs, units of REITs and InvITs, and also without any limit, they can lend against debt securities, listed debt. Companies can also raise much short-term foreign loans. Originally, it was 5 to 10 years. Now, ECBs can be raised for 3 years. What's the impact of all these huge changes? Will there be a flood of M&As? especially in industries like, say, cement, textiles, where there's fragmented capacity? Will dollars flow into Indian real estate, make real estate expensive for Indians? And will dollars flow in per se? Today on Indianomics, I have three experts to discuss these. Renuka Ramnath, founder and CEO at Multiples, Srini Srinivasan, Managing Director at Kotak Alternative Asset Managers, and Rahul Saraf, India Head of Investment Banking at Citi. Gentlemen and Renuka, thank you very much indeed for your time. Renuka, starting with you, since you have spearheaded so many companies into the market, is there going to be a spate of M&As?
No, I would look at it as a reform which will have extremely positive long-term impact. Nothing can change overnight. What India needs is enormous debt coming in for the kind of growth that we have planned. CRISIL has estimated about 120 lakh crore debt that corporate India need in the next 5 to 7 years. So this reform will really play into that need extremely effectively. The other thing is that large corporates in India denied access to global capital on an even platform like their global peers, right? We are building companies here in India of global scale, global relevance, competing in the global market.
No, we could raise for raising capacity, but they could not raise to buy someone else's capacity.
Yeah, but ECB, there were other restrictions on the borrowing. It was not a level playing field. So I find the reform in the ECB guidelines extremely comprehensive. So it helps large corporates to get into a level playing field, and it helps small corporates to borrow now for M&A activity. Okay. Third, I think we should remember that in India, we had no mechanism to unlock the amount of value that is sitting in equity. Today, there is roughly $7 trillion by value between listed and unlisted put together of equity. We still have, India is a very fragmented market. You know, if you look at average market cap per company, we are at billion, and the next highest is China at 2 billion and US at 15 billion. Okay. So we are an extremely fragmented corporate, which brings with it a lot of inefficiency, and especially in the going forward global situation, these companies cannot compete and survive. So M&A consolidation is a must rather than a desire for us to go to that growth, keep the jobs, and move progressively rather than see a demise of a lot of companies around us. And I think this reform will definitely hugely facilitate it. So I expect to see the change over the next 2 to 3 years, because companies will have to make up their minds and look at consolidation as a serious value unlocking mechanism. But it is an excellent move. Any which direction you read this reform, it just exhilarates me and enhances the confidence of India achieving that 7 to 8% growth and becoming the third largest economy in the world.
No, certainly, huge financial muscle given to corporates, or at least, when the rules are finalized. Srini, your first thoughts on the ECB rules? But I also wanted to know about real estate. That was a sacred cow because, land becomes expensive for an Indian buyer. Do you see money rushing in? Because it's, I would think, a very lucrative business.
First of all, if you look at the entire package that RBI has put out for the banking industry as well as, M&A financing, the summary that you mentioned, I'm most excited about it. And as we were discussing just before the show, this is the 1992 moment for the credit markets in India. 1992 was when foreign investors were permitted into the equity markets.
It was the equity moment.
Right. And, within a couple of years thereafter, SEBI had actually come up with this, what we now know as free pricing of IPOs. Otherwise, a quaint little department called the Controller of Capital Issues used to decide at what price a company can do an IPO. Yeah. So in one stroke, RBI has opened up ECBs in terms of what is the end use that you can use it for, in terms of the pricing that you can, price it, it is linked to market conditions, and most importantly, in terms of who can actually provide ECB loans. If you look at the draft of what they have put out, it could be anybody who can provide an ECB loan.
Earlier, like it was my uncle living abroad can give it.
Exactly.
It says any resident abroad.
Any resident abroad can provide an ECB loan. So this is a great moment for ghar wapasi of all our dollars.
Okay. Yeah, especially since it shows more growth.
Absolutely. But what it also does for the banking industry, and I think As far as the banks are concerned in India, they've done two things. They have unleashed the banks in terms of the kind of reforms that they can operate as a conglomerate. And I think many banks which operate as conglomerates in multiple facets of financial services will find it so much easier to do business.
Yeah, overlapping rule restriction is
fantastic.
gone.
That is one. Secondly, they've also, kindle the animal spirits of the banks which have an overseas presence, because the ECB regulation provide the overseas branches of banks also to participate in this whole financing market. So it's not just, you've opened up the credit markets for everybody else. You also have an opportunity to provide this credit. And if, as Renuka said, if M&A financing is going to be a big play and which grabbed the headlines, M&A financing can be done by domestic banks, both rupee and foreign currency. It is a very interesting play of, what could potentially play out with regard to the credit markets.
We don't know that BOB has one of the largest number of foreign branches.
Exactly.
I think, now it will be appreciated.
Yeah.
Rahul, your thoughts. First of all, you're also addressing dollar investors among our viewers. Is there, did you tap any of the foreign FPI in your conversations? Did you get a sense that money is waiting to come?
I think if we step back and say, okay, there are three types of M&A. You have inbound investments, so global guys coming and buying in India. Again, there's no change really that dollar was getting, that offshore financing was getting done. Then there was India outbound, where Indian corporates could borrow offshore as well. There was no restriction there.
Yeah.
I think the level playing field that Renuka talked about, where the Indian strategics now have the opportunity to tap the bank financing and do the acquisition. What were they doing earlier? They were taking private credit, NBFC financing, mutual fund financing. All of that was 100 to 200 to 250 basis points expensive. If you look at just from a corporate finance perspective, the math, it allows the Indian strategics to be at least 10 to 15% more competitive now compared to a foreign corporate or a private equity who was relying on offshore financing. So that's a big cushion.
Big gap that is...
that has got bridged, yes.
Okay.
So I think that's interesting. And then, of course, the end-use restrictions on ECB, I think that allows both the tenor as well as the end-use, allows more diversity in terms of financing options. So all in all, very welcome.
You expect dollars to come in?
Expect dollars to come in for sure, 100%. Yes.
Okay, but before I take my first break, something which stock market investors will want to know, where will consolidation come first? Do you see it in, say, paints, cement, textiles? What is the first thought that comes to the mind?
I would say manufacturing,
okay,
definitely. And I think family-owned businesses. We see a lot of activity in families wanting to kind of move forward by leaving the businesses either with private equity owners or strategics.
Oh, yeah. And we're already seeing that, right?
We are seeing, the recent transaction multiples did. VIP Industries is, standout example being a listed company.
Okay.
So there will be, I think, wherever there is family-owned business, right? This fragmented ownership, dilution issues for family, changing their mental framework from being a controlling shareholder to a minority shareholder because you want to be a large conglomerate. All of that is going to be very complicated. Okay. I think the right method they would see as working well for them and markets would be to consolidate.
Fair enough. Yeah. Okay, so there are some equity ideas also coming over here. Banks with foreign branches are going to be at an advantage. As well, fragmented industries are going to see a great deal of consolidation. For those of you who want to do the equity math, that's the clue. We have to take a quick break. We'll continue our conversation with our experts. For Bazaar viewers, it'll be Chartbusters. You will get to hear the whole show after market hours.
Shares of TCS slipped despite growth beating estimates in the second quarter. The company also announces a $1 billion AI service foray and remains on the lookout for acquisitions. The management also tells CNBC-TV18 the company will inch towards a margin of 26%.
Tata Elxsi also slips despite a largely inline quarter where constant currency revenue grows after 2 straight quarters of decline. The Nifty IT index is also trading under pressure.
And Ixigo announces a fundraise where it will issue about 10% equity process to raise 1,295 crore rupees, with stake potentially rising to 16% via open market purchase. The proceeds will be used for growth, corporate purposes, and foray into agentic AI.
Flexible workspace operator WeWork India sees a muted debut, listing at 648 rupees a share versus an issue price of 650 rupees. The management will join in to discuss the post-listing strategy shortly.
And Sona BLW rallies after it signs a MOU with Germany's Neura Robotics to jointly develop humanoid robots. Lloyd's Engineering is also on the move following a MOU with a Fly Focus to develop UAVs for military use. Hello, good morning. You've tuned into Chartbusters, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Today with me is Vivek here as well. Vivek, good morning and happy Friday. Surely a happy Friday coming in for the markets as well. At least we're managing to hold on to green. Second day of gain again for the markets as well. And broader end of the market, that's also managing to hold on to gains. So portfolios, I am sure, today are going to be green, at least on the green side. So not much of party there.
Good morning, Vinny. Like you mentioned, the Nifty has slipped a little bit from 25,300 levels. The Nifty Bank, however, is doing quite well, especially led by a sharp rally that we're seeing across the PSU banking index. And even a name like Yes Bank today is doing very well in the session. On the other hand, what's taken a bit of a knock in the trading session is actually the Nifty metal pack. So names like JSPL, Nalco, Hind Copper, Hind Zinc, all of these stocks under quite a bit of pressure today. Some gold finance companies too seeing a bit of a knock. Look at a Muthoot Fin. That particular stock has fallen to the day's lowest point. But moving on, Karan Veerwani, Managing Director and CEO of WeWork India, joins us. Remember, WeWork has just listed on the exchanges. Well, thank you so much, Karan, for joining us. Congratulations. It's a momentous occasion as far as WeWork is concerned. So congratulations to you and your team. Well, now that you are a listed entity, we can talk numbers and we can also talk guidance. FY26, give us a sense of what will occupancies look like, what is the top line target, and where do you see margins heading?
Good morning, firstly, and thank you for having us. And yes, we are very excited for finally being listed on the exchanges. You're getting straight into numbers. So I think that, we've really seen the entire industry sort of grow. We've been growing over the last few months. We feel very confident about the direction of the business. We're very excited to announce the Q2 numbers when we do in the next 1 month. In terms of guidance, what we've always been saying, we will grow at this 20 to 25% revenue growth. We are adding new centers on a daily, monthly basis. And we've seen velocity of sales grow almost 30% in the last 12 months, which will show itself in the monthly and quarterly numbers that we announce soon.
Okay, surely that growth, Karan, as you're mentioning, 20 to 25%. Firstly, good morning, Vinny, joining in the conversation as well. Last time when you spoke to CNBC-TV18, you'd spoken about margins for the industry are at 22%. Last year, you managed 21.6% as well, right? But Q1 FY26, it's come back to that 18% range. So in terms of EBITDA margins, what are we keeping an eye out on for FY26?
Yeah. I mean, just to be clear, the industry margins are actually 12 to 13%, not 22%. Okay. We are operating and we delivered almost 22% last year, which is double that of the industry. And even today at the last quarter at 18%, was still significantly higher, which was largely driven by capacity coming on and some occupancy ramp up, which has happened already in Q2. So you will see the next quarter numbers inch back closer to the FY25 numbers. And then we hope for some margin expansion further than that in the year as well.
Karan, just one point, because there are some investor concerns, that are raised as well on a couple of points. One, there's some civil cases, outstanding payables. Vinay Bansal, he's gotten some, there's gotten some SEBI into the picture as well. Could you help us understand in terms of this situation, or how do you wade off this investor concern that is there on these points?
I think that investor concern is now sort of addressed. We went through a few court hearings just in the last week, and now the High Court has given us, has reserved for orders and given no interim relief to any of the complaints. I mean, I'll just tell you, and you can go into the documents, and anyone can, go through our through our entire documents. We've disclosed absolutely everything. We've done everything by the letter of the law. In fact, more than that. And really, investors should have no concerns. This has just been a very, focused effort to try to bring down the sentiment, which today you can see we are finally listed on the exchanges. We're very happy, very proud of that, and here just to put our heads down and build for the future. And look, the numbers will speak for itself. That's all I will say. I won't say anything more than that.
Okay, Karan, we get that point completely. Just for some more further clarity, what are the outstanding payables that are due? Is any of the outstanding payables under dispute, and could that mar FY26 financials?
No, we don't have any such outstandings. We have a rolling way that we run our projects. As you know, we open buildings on a month-over-month basis, and so we use similar vendors across all of those. And right now, we have no concerns, nothing to do with outstandings. The business is growing well. Sales has been amazing. Revenue is growing faster than we thought. Bottom line is growing faster than we thought. The market is growing faster than we expected, and we feel like this year, the next 5 years, the next 10 years is the time for the flexible industry, and we are the leaders. We will continue to push on it. All of this is just noise created, and today is a positive, happy day, and we're very excited for the future.
Absolutely, Karan. A very happy day for you all as well, and we'll have you more often to talk about numbers. But a quick word in terms of expansion, Karan. Will Bangalore and Mumbai be the focus areas, or will you be expanding to other cities? And anything in terms of luxury property side or premium offerings where rentals could be higher than the existing ones? Is that in the pipeline?
Yeah. So, I think our rollout depends each year, and it sort of changes each year. While today our portfolio, largely is Bangalore and some part Mumbai. Mumbai, in terms of value, just gives us more from a revenue perspective, just because the rentals and the per seat cost is high. Bangalore, from a footprint standpoint, is the largest, but that's also because Bangalore continues to be the largest city in terms of commercial absorption. But over the course of the year, we've opened, buildings in Chennai, in Pune. We're going to be doing a lot of openings in Gurgaon soon, between Cyber City and Aero City in the next few months. We have some further expansion happening in Bangalore as well. The ones in Aero City and in Gurgaon are premium locations. They will be a slightly more elevated product, and we're excited to sort of bring that to the market.
Okay. Well, thank you so much, Karan, for joining us. We wish you and the team a very fruitful listed enterprise journey. With that, we'll now slip into a short break. On the other side, we'll be joined by the management of Canara HSBC Life Insurance to discuss the IPO that has opened today. Let's stay tuned. Welcome back to CNBC-TV18. You're watching Chartbusters. We have a very important and an interesting conversation lined up. Anuj Mathur, the Managing Director and Chief Executive Officer of Canada HSBC Life Insurance Company, joins in as the IPO opens today. Thank you so much, sir, for joining us and coming to our studio. Well, first up, this particular IPO is completely offer for sale. There's no fresh issue. Whole host of insurance companies are actually looking to raise capital. So why are you not looking to raise capital? And we are seeing a private IPO come after a while in the insurance space.
Right. So very interesting question. See, we are a company. As a company, we have now 17 years of past performance. And if you look at our past performance as a business, we are very, very profitable. We are generating internal accruals, which are good enough to fund our various strategic initiatives. So the reason why we are not raising fresh capital is that we have sufficient solvency margin. We have sufficient margin in terms of cash flows, profitability. So that's where we don't think that we need capital as of now. So it's OFS, where the existing shareholders are diluting their shareholding partly.
Absolutely. So yes, right now we don't have a requirement in terms of the fund or to expand further. But one point I want to know, when you're looking at it in terms of numbers, around 86% of your premium comes from banks, Canada as well as HSBC. Now, is there a plan to further diversify into the distribution mix or, any new banks that you're looking to, sign up with? What is the strategy there? And what would be your ideal distribution mix that maybe you would look at?
Thanks, Vinny, for asking that question. So first of all, yes, you're right. We have Canada and HSBC as the major contributor. But let me also share that we have various regional rural banks. We have few other banks also through whom we distribute. We also have digital channel and few other alternate channels. Recently, we have also launched agency channel.
Okay.
So that should help us to further diversify and also add to the growth of the company. So bank insurance as a model is really good. You're able to kind of do business at relatively lesser cost, better outcome for the customer. So that's where we feel that bank insurance will be our focus area. But at the same time, we like to diversify. We like to have more banks, more channels. That's a growth path.
So 85% is only Canada and HSBC, right now? Or?
Broadly, yes. Broadly, yes. So 70% as of now is Canada. About 14 to 15% is HSBC. Then we have few other banks contributing to about another 6 to 7%.
And where would that contribution of other banks go in the next couple of years? Is there something that you all have in mind to increase it?
Yeah, it will increase. So we are actually making good investments. We are launching various initiatives. So we should see our business growing through other channels also, including banks.
So in the next couple of years, what would be the ideal mix when it comes to bank assurance from your own strong parentage and from the other agency channels?
So we feel that in next 3 years, our alternate channels, which includes agency, we should be able to kind of grow that to about 15%.
Okay.
So currently it's about 8%. We should be able to double it up in next 3 years. That's the broad kind of strategy which we have.
That you're working with. Okay. So now when it comes to the product mix itself, ULIP actually contributes a significant share of your portfolio. That is slightly margin dilutive, when we speak to a whole host of analysts. So going forward, will that continue to be a strategy or would you look to improve margins?
Okay, so let me clarify. Traditionally, as a company, we have been more of traditional dominated company. And the reason for that is our customer profile, if I look at, we have customers from tier 2, tier 3, tier 4 cities where the customer ask is for guaranteed traditional products. So that has been our forte. Last year was an aberration because markets delivered very good returns. So we saw customers asking for more ULIPs. And we feel as a strategy, we believe in meeting the customer need, customer ask. So our ULIP contribution went up last year. But again, if you see the first 3 months of this fiscal, the numbers are...
That was a one-off last year.
Yeah,
so what will be the ideal target for you?
The ideal mix would be, we feel that ULIP should be between 40 to 45%. Okay. There's a market for that. There are customers who have got the risk appetite based out of metro, urban locations. So about 40 to 45% would be ULIP and remaining 55% roughly about traditional business.
What about the VNB margins? Last reported 30th June numbers, which I'm seeing, 19.5% was the VNB margin. I know you can't talk outlook, that I'll ask you on the day of listing. But in terms of other private players, when you look at it, they're in the range of 25 to 29%. Would you aspire to go higher in terms of VNB margins, and by when would we expect such numbers?
So Vinny, actually the margin, VNB margin also depends on the size of the business and how long you have been in the business. So we started our business in 2008. Relatively younger company, 17 years of business. And as we kind of grow our business, and there the in-force book, the renewals also play a very important role. As the business is growing now, we are seeing decent growth. We have outperformed the industry in the last 3 years. So if I look at that, obviously the margins are going to increase because cost is more or less flattish. And we have that advantage of low cost because of our superior banker model. So going forward, our margin should increase. That's the trajectory which we have seen in the past also.
Okay, so you've told us that the reliance on bancassurance will reduce. You expect to see slightly better margins. And so last question, what will be the impact on your EV from the GST changes or the GST cut that is coming?
So first of all, I think this is a very good change which has happened for the industry. I think life insurance is one of the few businesses where there is GST exemption. So I'm really grateful to the government for giving us this relaxation, this benefit. So I look at the big picture. I think it's going to be a big advantage for the industry and for us. And there could be some temporary impact, but it's not going to be significant. It is going to be in line with what we have seen for the listed players also. So I don't think so there'll be a major dent out of it.
Okay, sir, thank you so much for coming in today. Good luck with your IPO as well. We'll talk to you on the listing day as well.
Thanks.
Hope you come here again to talk to us.
Yeah. Thanks for having me on the show.
Thank you so much, sir. Thank you. So that was, the management coming in for an IPO that has just opened up today. We have, Anuj Mathur, who spoke to us in terms of what is the expectation maybe that we could watch out for Canada HSBC Life Insurance IPO opening today. Keep an eye out on that. But on that note, we're going to step into a very short break. Don't go anywhere. We'll come back with more market-specific action on the other side. Welcome back, and you're tuned into Chartbusters on CNBC-TV18. We have the markets that are trading in the green. The Nifty, is just slightly below 25,300. Keep an eye out on that if it comes back to that level. So we'll watch out for that. Mid and small cap, that's where we are seeing a good performance coming in. And bank is the one that is leading the way today, especially the PSU banks. But with that, we're absolutely out of time on this edition of Chartbusters. Thank you so much from Vivek, me, as well as the team who put this show together. Thank you so much for tuning in. Up next, your Trading Hour.
Hello and welcome to Trading Hour. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Rima. With me is Hormis. And it's a good Friday. It didn't look like that when we started trade. It was a flat, we began the day on a flat note, but now you can see the momentum building up in the markets. The Nifty is now up more than 100 points. It's inching towards that 25,300 mark. Sensex up 300 points. At the index level, Sensex is rising towards 82,500. And now the week-to-date tally stands at 1.5% for the Nifty, 2% for the Midcap index, and today trade or momentum is being powered by the banking stocks. So the Nifty banking index is up 0.75 of a percentage point, with the PSU banking index up 2%.
Indeed, and it's been a good week for the markets. It's the fifth week that the index has gained out of the last 6. So it's positive momentum all around. And 25,300 on the index for the first time after the 22nd of September. The good bit, both the Nifty and the Nifty Bank have both now crossed their respective highs that they made on Tuesday. Nifty crossing that 25,220 mark and the Nifty Bank also crossing that 56,500 mark. So both of the indices powering each other along as well. So good going as of now. The bulls would hope that the week ends on a high.
Okay, indeed. And today, though, tech stocks are a bit of a, back foot. The good part is the Nifty tech index, the IT index, which was in the red now, has flattened out completely. So from the day's low, we have seen some buying emerge in the Nifty IT stocks. So let's get that up for you on your screen. TCS continues to trade with cuts of close to about, I think 0.5% thereabout. TCS now down 1%, while Tata Elxsi is down close to about 2.5%. But you are seeing strength in other names like Wipro, Firstsource, Zensar, LTTS. These stocks are still holding up in the grey. But Hormis, what else? What are you putting the spotlight on?
The broader markets are seeing enough stock-specific activity as they have all through the week as well. There are some earnings reactions as well. I'll start off with one such as 5paisa Capital. The results came out after market hours yesterday. The stock has cooled off significantly from the highs of the day. At one point was up around 14 to 15%. The volumes are already at record high levels. We have had close to 30 lakh shares that have traded. The 20-day average is only 4.5 to 5,000 shares. And the stock had broken above the 100 DMA and the 200 DMA of 384 and 386 respectively, but has not managed to sustain at either level. So a significant cool off from the day's high for 5paisa Capital. At the intraday high, it was the biggest single day gain since March. The one that is holding on to gains though is Yes Bank, and the 6.5, almost 7 to 8% move that we saw intraday. The stock is up in 8 out of the last 9 trading sessions. It's set for the best weekly performance since May of this year. The stock already has seen close to 20 crore shares that have changed hands. The 20-day average is just around 3 crore. And the other good bit is the fact that it is trading above the SMBC deal price of 21.5 rupees a share. It's now made an intraday high of 24.25. The stock now on a year-to-date basis is up 22% and was an underperformer in the previous year. Tata Communications is the other one today, is doing well, almost 9.5% higher now on the stock, building onto those gains. The volumes are the highest in 2 months and counting now. We had more than 10 lakh shares. We must have now been close to 15 lakh shares that have traded hands. The 20-day average is only 65,000 shares. So another stock that is doing well on very strong volumes. And during this 6-day up move that the stock has seen, the stock has broken above its 100-day moving average, and it has now started to surge higher after that. And courtesy of this move, the stock has turned positive on a year-to-date basis and was an underperformer last year as well. The last stock on the list is Jyoti CNC, and it is the top gainer on the Nifty 500 now. It must have surpassed, Tata Communications must have surpassed it by now. 9% higher on this stock as well. The volumes are the highest in 4 months, had over 15 lakh shares that have changed hands already. The 20-day average here is only 55,000 shares, and the stock has comfortably broken above its 50-day moving average, which was at 930. The next level on the upside is the 100 DMA, which comes at around 1,027. And as a result of this move, the stock has now tripled from its IPO price of 331 rupees, Rima.
What a big mover, inching towards 1,000 now. Thank you very much for that. Let's get to our big story then. And what else? It's TCS as it kickstarts the IT earnings season. Now, just a quick word. Q2 was a beat on muted expectations, both on the revenue and on the margins. And the company reiterated that revenue growth this year, FY26, if you strip out the BSNL impact, will still be better than last year. So that's a positive. And this is despite the macro environment not seeing any change or improvement. The good part is there's no deterioration, but there is no improvement in IT spending or, the broad demand environment as they looked at Q2. But what brokerages are highlighting is that the company is showing some signs of aggression with proactive decision making. One, around the restructuring of its workforce. Remember, they had to let go, or they planned to let go of about 12,000 employees to make the company more agile, AI ready. They're also being more acquisitive. They've announced one acquisition, a tuck-in capability acquisition, but they plan to do more. And they also are participating in the AI ecosystem with adjacencies, with a planned 1 gigawatt data center. Now, regarding this data center, what the company told us is that the plan is 1 gigawatt. Right? But eventually, and the way the math works is that for 150 megawatts, you need a $1 billion capex. So they will start with a $1 billion capex, build 150 megawatt in the next 18 to 24 months. But over the next 5 to 7 years, they hope to build the entire 1 gigawatt capacity. It will be, and they're looking to get in a partner, a maybe 50-50 kind of financial partner. And this investment, although the company is cash rich, they will do it with the help of a partner, get in equity and debt. Now, the fear in the market's mind is they like the aggression that the company is perhaps diversifying. With this, they also increase their, they become a little stickier with hyperscalers, who are potential clients for a company like TCS. But the return ratios for a data center business are lower than IT services. IT services enjoy very high return ratio because there is no capital. The only capital is your employee cost, while a data center business is capital intensive and therefore return ratios are lower. So that is a bit of a fear in the market's mind. But when we asked the company, he said, margins will not be very dilutive. So maybe a little dilutive, but on a scale of TCS, I don't think it matters too much. The second thing is very, very clear that we're going to be very acquisitive. They've got a new person on board, a chief strategy officer who's going to be looking at M&A. And the mandate given to him is that, they're already in conversation with multiple companies. One acquisition has been announced. The other bit that we want to highlight is the reduction in the workforce, because that's quite sizable. Quarter on quarter, the headcount has come down by nearly 20,000 employees. Okay, of that, only 6,000 is linked to the realignment, letting go of the people. 6,000. So the balance, 14,000 is also to some extent voluntary attrition, that after the company let go, maybe some people said it's time to shift. Or the company is stealthily letting go of some more people, and it's not a part of the planned workforce reduction, but that is also fairly sizable. And one final word, you should keep your eye on Tata Communications, because what the street is doing is latching on to Tata Communication as a potential play on TCS's data center business, because Tatacom has land, and two, Tata Communication also provides communication services to other data centers. So then they would participate in TCS's data centers, and that's the story. The street seems to be latching on to 10% up now.
Yeah, that explains the move, right, on Tata Communications. So doing well, but TCS though at the lowest point of the day. But mind you, the stock has done well this week. Has TCS has gained in 3 out of the 4 days prior to today's session. It was continuing to rebound from that 52-week low that it fell on the 1st of October. But Rima, thank you for summarizing the entire quarter gone by for TCS and the road ahead for the company. In fact, listen in to the management, as Rima did speak to them earlier as well. Let's listen into what they had to say.
We have to take this ambitious journey and be the largest AI-led services company. Currently, we are looking at about $1 billion, but just to clarify, we will be looking, this will come as equity and debt.
This $1 billion?
$1 billion. So my rule of thumb, like what I had is roughly 150 megawatts is $1 billion.
Okay.
Okay, so we are talking about 5 to 7 billion, but I'm not going to be investing all 5-7 billion year on. So it is going to be a 5 to 7 year exercise. We'll do first, what we intend to do now is establish a capacity of 150 megawatt to start with, which would start in about 18 months time, by which we should be operational. When I said we want to expand our participation in ecosystem, One leg is expanding into the adjacencies. I don't know whether you looked at, we also announced the acquisition. We want to also have cash to acquire. We want to be more acquisitive to expand our participation. So we need to conserve cash to do more investment. We've been talking to a couple of people. We are very close to closing the discussion.
It'll be financial investor?
Financial, it's a financial investor.
We talked about pivoting to our new vision, and towards that there would be investments needed, and at the same time we'll be focusing on doing a disciplined execution and leveraging on our operating parameters. We want to inch towards 26.
This rebalancing of the workforce, and we spoke about that briefly with Kriti as well. I said it'll continue, but it's not driven by cost, etc. But it will continue through the course of this financial year. Can you put some numbers to it? Do you have?
Oh, yes, definitely.
Yeah.
So Prashant, first and foremost, it is not on cost. It is not because of AI. That's something that you want to really get the facts right.
TCS, the big story of the day, the big earnings reaction of the day as well. Take a short break. On the other side, put the spotlight on the crypto markets. Manisha Gupta joins in.
TV18 presents Crypto Corner, powered by TCS.
Welcome, and you're watching Crypto Space right now. And take a look at the Bitcoin itself, because we're looking at all-time highs onto this one in this week. It continues to be a strong year, 2025, for crypto. All quarters that you see, the month of September, which usually is seen as September curse, also was in the positive. And October, which is October, has started on a positive note. So we are looking at $126,000 in case of Bitcoin there. The interesting point is that since the time we've seen 100,000 break on the higher side, it has held on to those levels, and it only has been making higher highs there. The market cap also seems to be steady, holding above $4.2 trillion as we speak there. The support really comes in from the fact that you're looking at global economic uncertainty, and is the reason that we have seen alternate assets do quite well. The ongoing U.S. government shutdown also has led to concerns into the market. The reason that you have seen gold, silver, platinum and Bitcoin do very well because of that as well. And then the street also is working with further U.S. interest rate cuts. Almost 100% probability of another one coming in the month of October and then in December also has been keeping these markets positive there. The street also is looking at very strong inflows into the U.S. listed spot Bitcoin ETFs. We've seen a record number of nearly $3.2 billion in the previous week. That continues to keep this momentum on the higher side. And then it's not just about the retail. The on-chain data and derivatives point to a restrained selling. So there's not too many people selling. They are still buying. And when you look at those numbers, that will tell you, because the derivatives traders are clustered around that $120,000 mark. The maximum of call options are around 120 to 140,000. So that tells you that most people are willing to buy between these levels. And we are trading at around 121, 122 at this point in time. So strong buying is what you're looking at within options between that number as well. Institutional adoption, countries buying. You also have high net worth individuals buying into crypto, including it in their portfolios, is what really has been supportive. This is another factor that the markets are looking at, with the dollar index down by nearly 9% in this year and the U.S. national debt higher at 36 and 37 trillion of a record number. There is alternate currencies that the markets are looking at, and Bitcoin perhaps fits into that bill well as well. If you look at the time until April 2025 and the kind of government holdings around the world that we have seen, 2.3% of Bitcoin currently is held by governments, and this majorly comes in from countries like United States, China even as it has banned mining or trading of crypto, but the government is the second largest one when it comes to crypto holding, and this is after US. And then you have United Kingdom, Bhutan, El Salvador, Ukraine, Germany kind of countries as well, where the government holdings within Bitcoin are stronger. Why do they hold Bitcoin? Well, one is because they have seized assets, active purchases by some governments as well, and some countries are doing mining. And then you have countries like Ukraine, etc., which got donations in sense of Bitcoin to enable a lot of, or facilitate a lot of humanitarian aids there. Also, there are a lot of governments which seem to be selling Bitcoin as well. This usually is done in case of budget constraints, market timing, because you need that kind of money there, and then some legal obligations as well, because it doesn't fit into their constitution, is the reason that we see sales coming in. But with the way the regulatory seems to be moving, there are more countries which seem to be working with cryptos at this point in time. Well, with that, it's a break on this part of Crypto Corner. But on the other side, we'll talk more market specifics and stocks.
CNBC-TV18 presents Crypto Corner, powered by TCS.
Welcome back onto a corporate conversation. Then Interarc Building Products, Building Solutions recently announced capex for its new facility in Gujarat. We are now being joined by Manish Garg, who is the CEO of the company, and we'll be basing our conversation on 3 key points. The first one being their capex targets, the capacity expansion, their plans for growth in FY28, and the scope, whether there is scope to increase the growth guidance of 17.5%. Mr. Garg, good morning. Thank you so much for joining in. We'll start off with the capex plans, right? You've announced a new capex for your facility in Kheda in Gujarat. When does that capacity come on stream? And once it does, how do you expect a boost to your balance sheet because of that?
Yeah, good morning and thank you for having me on the show. We broke ground yesterday on our Kheda unit in Gujarat. It takes us about 9 months to get it to the trial production. So somewhere in the month of June, we will start trial production, June 26. So I would say that approximately, and we will have the full production coming in by end of December. So therefore, part of it will contribute to our FY 26-27 revenues, but very clearly the next year, which is FY 28, it will kick in fully. We would be adding about 40,000 metric ton in totality. So part of it will come in next year, and whole of it will be next to next year in the capacity.
Okay, and your current capacity would be about 1.6 lakh?
So our current capacity now, after the commissioning of our what we call the fully integrated unit of Andhra Pradesh and the expansion in Kicha, stands at 200,000 metric tons.
Okay. So the incremental capacity addition is about 25%, is what we're trying to understand. Is that correct? From 160,000, you go to 200,000 approximately.
So we have already gone to 200 with the addition of Andhra and Kicha, which are now fully operational. With addition of Kheda in Gujarat, we go up by another 40,000 in next 1 year. We in fact broke ground for another one, so these two are parallel. In Andhra on a new land of 20 acres, where we broke ground on 27th of September, that will add another 25,000 tons to our capacity. So I would say in next 12 months, we have these two major capex. There we are spending about 80 to 100 crores, including the land. And here we are spending 70 crores excluding land.
So the visibility is for 265,000 units in terms of capacity?
That is correct.
And what does that visibility lead you to on the top line front, Mr. Garg? Because since you are on a strong capacity expansion spree, it is fair to assume that the demand right now on the ground remains fairly robust.
Yeah, so the demand is very robust, and our order book stands pretty strong, as quarter on quarter it used to be. And there are new avenues also in the new age sectors like data centers and semicon and EV batteries. So we see very, very strong traction in the demand, and that's why the capacity expansion.
Okay. What is your guidance for top line in FY26, FY27? And once this incremental capacity comes on stream, what is the overall revenue that you're looking at?
Yeah. So as of now, for the FY26, and with half year, already gone, and first quarter, you saw how we grew over the last year. Our guidance would still remain 17.5% for FY26. We will of course try and do better, but our guidance would remain what it is. And for FY28, we had already told that we would be doubling our turnover at the time of going for IPO, so that remains at 2,400.
What about margins, Mr. Garg?
Margins will, we are trying to improve, and with this traction, margins should be in the similar range, but yes, they can always be better.
With the kind of capex that you are doing, do you see any impact on the margins, at least in the immediate term, and then they improve in the future?
I would say capex wouldn't really affect our margin, because capex doesn't go into the operational cost at all. So with this capex, but I don't think with this capex spending, there is any impact on the margin. But going forward, when the capacity expansion happens and the new age sectors have stopped adopting, quite obviously there is always a possibility of moving up the margins a little bit.
You said the the order inflow has been very strong.
Yes.
What is it in Q2? Are you in discussions with with more clients for further orders? I mean, what's the pipeline looking like, and what would you target in terms of exports?
Yeah. So our exports, I would say we are right now building the market for exports. So the numbers are not really very great in terms of the actual sales, but we are building market for exports. As it is, a lot of our business is domestic, but yes, we are building exports. The numbers will start to come in a bit later. In terms of domestic, it's very strong. In fact, at the end of last quarter, we had announced the order book of approximately about 1,700 crores, and it remains pretty strong even now. And we are in discussions with a lot of large orders in various sectors, including manufacturing, institutional, as well as infrastructure.
Pleasure having you as always, Mr. Garg. Thank you so much for sparing time and joining us. Wish you good luck for the rest of the year as well. Let's take a short break. Get back to markets on the other side with Ajit Mishra of Renegade Broking.
Welcome back. Let's take a look what does the data on F&O front indicate. So as expected, we are seeing a short covering with Nifty hitting the high above the level of 25,300 and similar move is seen in Nifty Bank as well. All the PSU banks are higher after the reports that in the PSU banks, a managing director can be hired from private sector. On the option data, if you take a look on the put side, 25,200. There is a sharp fall in the premium. Similar thing can be seen for 25,250. But at the same time, there is huge increase in the open interest. So it tells you that around 25,200, it has become the major support level for Nifty. On the call side, 25,300 premium has increased to 99 from 47. 25,500 premium has risen to 21 from 10. It has almost doubled. So support, I have taken 25,150. Resistance, first resistance would be 25,350. If we manage to cross that, next comes around 25,450. As far as Nifty Bank is concerned, support 56,000 and resistance would be 57,170. That's the recent high. Now coming to the stocks, Yes Bank seeing huge buying and fresh longs are seen in the stock, currently up more than 6%. Sona BLW, it's higher for the second straight day. Today also it's up almost 3% after a big move that we have seen yesterday. BSE continues to see fresh longs. Today also the stock is up more than 2%. And lastly, all the gold names, gold financial names are down because gold prices have come down overnight. And you can say Manappuram Finance is seeing fresh shots.
Manappuram and Muthoot, yes, because of the fall in gold prices. Sudarshan, thank you for that. Ajit Mishra from Relier Broking joins in for a quick chart check. Ajit, good morning. Thank you for joining in. Very quickly, if you could tell us the levels that you are watching out for on the Nifty and the stock recommendations as well that you have for the morning.
Yeah, good morning, Ormaz. So yes, it's been almost 2 months that we are seeing markets managing to hold the previous lows. So means we are maintaining the higher lows, higher highs setup. And this time around, what Sudarshan was sharing, the moment we cross 25,450, that this momentum can see further uplift towards 25,600, 650 in the near future. So we are bullish on market and we recommend maintaining buy on this approach till 25,000 is intact. Basis that, the first recommendation that we have from the defense basket, like the top two names, BEL, HAL, they are leading from the front, and we are eyeing a fresh breakout in BEL after almost a month-long consolidation. So 432 is what we are eyeing in the near future as a target. So with stop at 407, one can go long in BEL at current levels. And from the PSU banking basket, PNB is something that one can look for fresh long positions as well, with 122 as an immediate target with stop at 113.
Thank you very much for that. Get into a break. On the other side, we'll talk markets. Mukul Kochar from Investec Capital Services joins in next. Markets and invite Mukul Kochar from Investec Capital Services here with us on the show now. Mukul, morning. This is Reema here. So let's start with your overall read on the markets in terms of macros, the global positioning in India, and even the market outlook.
Sure. Thanks, Reema, for the invite. So, Reema, what seems to be very critical for India at this point is aligning consumption. There is a lot of money in the economy that can be invested. The private sector is flush with capital. It's completely delevered. It's demand that needs to be stimulated. Now, that was on cards, as we were set to sign a treaty with the US, which is a 6 times consumption market than the US. There was also a desire to restructure supply chains to diversify away from China. So all that was actually set to play out, and we were expecting a substantial amount of private investment to come into the economy to give a boost. We believe that has been delayed, and it's a complicated issue and it's going to take time to play out. But eventually, the long-term, logic of this trade treaty still remains. US needs to align with, or US needs India to align with itself in the long term. If we tilt towards China, that is not beneficial for US in the long term. Near term, we don't seem to have cards, but long-term cards are very strong. So we expect the trade treaty to go through, and that will be a trigger for private investment and for the market to move. In the meantime, the trade pressure is real. It is exerting pressure on the INR, and that is why the range-bound markets in the near term. Last point, EU is an equally large trading partner, and we seem to be making progress over there. Opening up of that a large economy for Indian goods is also going to be a positive, but EU just moves slowly. Yeah. So if we do sign the trade treaty with the EU this year, it has to still be ratified by all the different, countries, 27 different countries, which takes time. So EU, even if we get it done, it's a year and a half before we can expect some economic impact. So we're closely watching the US-India trade deal for the next move for markets.
Indeed. But Mukul, TCS came out with numbers yesterday. What do you make of that? Not specifically towards TCS, but do you believe that the rest of the IT pack will follow suit in terms of the kind of announcements that it has made, be it the data center foray or stating the fact that they are going to be more aggressive in terms of making acquisitions? Is this IT's time to rebound, considering, or if you could say, the proverbial backs against the wall kind of a scenario?
Yeah, absolutely. So IT, we should recognize that IT sector in India is a trading sector, especially the large caps. Yeah, this is no longer a secular growth sector. It's fairly large. We have substantially large market share of the offshore market. So we do we are exposed to global investment cycles. Yeah, IT investment cycle. In that manner, the sector has underperformed for some time, both in terms of earnings growth, sales growth, and stock performance. We believe the stocks sector is set for a rebound, but once again, we emphasize it's a trade. The catalyst for the rebound will, of course, be good demand commentary from the companies, and not to forget that the INR has depreciated, which is both a benefit for INR top line as well as margin. So yes, we've been asking investors to be constructive here, look for a trade in that sector.
What were your thoughts when TCS announced that investment, 1 gigawatt data center capacity?
It's interesting, yeah. So I used to cover the sector 20 years ago in the US, and companies were exceptionally tight-fisted with capital allocation, and that is what used to account for exceptionally high multiples at that time. But remember, this was a 25-30% growth sector as well. So I think that capital allocation discipline, it will still be disciplined, but you will see some sort of a loosening of the strings there. Indian IT companies were always averse to M&A because IT services integration is notoriously tough. But as growth comes down, size picks up, they have excess capital, you will see return dilutive investments take place, not NPV dilutive, but return dilutive. So I'm not surprised. It's a function of the time.
And should that be read positively?
You know, you can take it as it is. ROIC will come down for the sector. It will derate a bit, but as I said, it will be NPV positive. It also needs to be done. Yeah. So we need to create data centers for servicing Indian data. So yes, it's an NPV positive sector. So I would probably think it's a positive overall.
What do you make of the slew of banking updates that came out earlier this month, Mukul? At least from most of the lenders that came out, we saw double-digit growth in the advances and the deposit front as well. What are you watching out for when it comes to banks this time around, considering the fact that the loan growth and the deposit growth parameters have been taken care of this time?
Yeah, so, you know, banking sector, we've been actually constructive on and tied to the US move. Some of the pressure in the banking sector was coming from expected NIM pressure as the street was expecting RBI to cut rates. Till we have a belief that till we sort out our trade deal with the US, RBI will be reluctant to cut because that exposes the rupee. We've been you know, hearing recently that RBI has also been intervening in the money market. So if you're intervening in the money market to protect the rupee, then rate cuts are probably off the cards, is what I feel. In which case, you know, you will see margin upgrades in these sectors, and part of that is already playing out, and that's why the sector becomes attractive, especially the PSU bank, you know, play where, you know, there was as a percentage, the EPS impact from rate cuts was supposed to be the highest. There's also the fact that there's a pickup in lending post some government stimulus. There's also the fact that asset quality seems to be getting better.
Thanks, Mukul, for joining in. Short conversation today, but a great one nonetheless. Thank you for joining in. Get into a break. We'll come back with more on the markets.
Welcome back. Still 100 points higher on the Nifty. The Nifty Bank continuing to do well, as are the broader markets. Business updates and results continue to trickle in. We take your leave on this edition of Trading Hour. From Rima and me, thank you for watching. Halftime report on the other side.
Stocks perk up as foreign investment flows turn marginally positive amid the thaw in India-US relations. Realty and utilities lead the gains while metals drag and IT stocks sulk.
IT major TCS posts a better than expected Q2, but what's more notable is a big step up in AI focus, building a 1 gigawatt data center and making acquisitions a key priority. Analysts, however, remain conflicted given the weak demand environment.
The Cabinet's Appointment Committee has revised guidelines for appointing directors and CEOs at public sector banks, paving the way for SBI to induct one of 4 managing directors from the private sector. The move marks a significant shift in PSU banks' appointments.
The Indian auto industry may approach the government for assistance in sourcing rare earth magnets after China says it will impose fresh controls on export of 5 categories of rare earth magnets from November 8.
Prime Minister Narendra Modi called US President Donald Trump and congratulated him on clinching the Gaza peace plan. He also says they reviewed the good progress in trade negotiations and agreed to stay in close touch. Hello, good afternoon. You've tuned into Halftime Report coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala, with me Sonal Putra as well. Sonal, good afternoon, and today a good day is coming in for the markets. 25,300, around that mark what the Nifty is trading at. Not managed to go above it and sustain above those levels today, but 25,300 around that level, 100-point uptick for the Nifty. Not much complaining on that front, and the broader end of the market, that's supporting it too, right? Similar terms of gains that we're seeing, 0.6% of gain for the Nifty Midcap, and advance decline ratio today clearly in the favor of advances.
Oh yes, and that's the bigger point, because last few trading sessions we did see that yes, the mid-cap index was doing well, but the advance decline ratio was in favor of decline. So this is something which talks more about the market breadth currently. As Vinny pointed out, the high today was 25,315. We could not sustain those levels. We are still off around 30 points from the highs of the day. Nifty metal index, that was a big gainer yesterday, but that has come in for some profit booking today. So that one is down 1.1%. IT2 not doing so well actually, despite strong numbers coming in from TCS. So we'll watch out for all of them. In terms of big movers, Realty Index doing really well. PSU continue to do well, and that index in terms of PSU banking names up around 1.7%. Pharma continues its rally from yesterday as well. Let's then talk about a corporate conversation. We are now joined by Sudipta Mukherjee, who is the Managing Director at Texmaco Rail and Engineering, to discuss the 3 important points. We did see Cabinet not coming in for project worth 24,634 crore rupees. We want to understand the opportunity for this particular company, the order book mix going forward, outlook and growth strategy as well. Gentlemen, thank you so much for joining us today and speaking with us about this nod that has come in from the Cabinet. First up, I wanted to understand, while these railway projects worth 24,600 crores are approved, when will the tenders start coming in? How much can Texmaco contribute to this or take away from this? And what kind of margins will these projects enjoy?
Good afternoon. You need to see it. What is most exciting is, again, repeatedly I mentioned the way government is walking the talk. See, the freight targets were taken up as a 3,000 million ton by 2027 to 2030. And so wonderfully, the Honorable Railway Minister, while giving a brief of this declaration, he set a target that within a 2 years' time, we want to achieve the 2,000 million, which is today, suppose, around 1.65, 1.67. So to coming to the specific, I think this gives us a hint about the timeline which we can expect of execution, and it is a very efficient execution government is doing nowadays, and we as a stakeholder are very agile. And specific to this declaration, it is around, if you convert it into freight logistics, around 80 million ton is going to add on over and above the 1,067 whatever we have today. So it is a gradual progression of the whole scheme of the National Rail Plan. So that's what, I mean, Texmaco is playing a big role in terms of supplying rolling stock, then making bridges, laying tracks,
yes,
signaling. So in a nutshell, if I have to give you an understanding of the overall market, so all of you know that 12,000, 12 lakh crore.
So, Mr. Mukherjee, yes, it is a big opportunity, and we want to understand, and you said Texmaco is contributing a lot to that as well, meaningfully. From an investor's perspective, what they want to understand is what the future would look like when this 24,600 crore of projects have received approval. In terms of, a ballpark number, how much will come to Texmaco's books? What will it take your order book to? I know these are initial days, but any guidance you can give in that case?
We can always give you a kind of back calculation based on the current run rate.
Yes.
And I'm tempted to answer in two ways because I have not completed my earlier explanation, which, okay, I can come down later to make the investor understand what is the kind of opportunity we have. Now, specific to this project, if you back calculate, these things will ensure procurement of wagons on an average on the present capacity of haulage, around 20,000 wagons railway has to induct additionally. So that's an opportunity, and if you see that Texmaco has been the largest supplier to Indian Railway considering a couple of quarters and last year. And yearly we supplied last around 11,600, 10,600, and our capacity being around 15,000 wagons. So this will, of course, would be for a year consecutive if it goes on. So around 15-20% of our whole capacity, which can be dovetailed into wagon supply. In terms of railway track laying, we are one of the significant players. And so as the bridges, so we see a huge chunk of work coming towards us. And combining it with the whole scheme of things of 12 lakh crore, we envisage that Texmaco has a play in a government spend of around 2.5 to 3 lakh crore in tenders in the coming 4 to 5 years time, where we can supply rolling stock, we can work in the EPC and rail infra, including track laying, bridges, signaling, and the hydromechanical projects.
Okay. Mr. Mukherjee, what I also want to understand, there are a lot of order wins that have come in the month of September as well. And which we obviously spoken to you about the RVNL MOU that you all had signed together as well. Talk to me about the outlook in terms of order book. What is your capacity utilization currently? And would you require some capacity expansion given that you have so many new orders that have come in as well? Does that also is something that you all are looking at?
See, as I have mentioned that we are the highest supplier to Indian Railways so far the rolling stock is concerned, and we are continuing to do that. While I say so, with our present capacity that meets around 70-75% of the capacity. But now with the acquisition of the erstwhile Jindal Rail and merging with Texmaco, and with our present, upcoming new wagon project with a European association, which will be up by this financial year. So we are poised so far rolling stock is concerned into a level which we feel that goes very well in a range of 35 to 40% requirement of the country's overall rolling stock in the coming days. And so far the other businesses are concerned, we have significantly diversified and invested in our foundry, and we are one of the largest foundry in the world today, supplying to the rest of the continents. And the highest export out of India.
So,
and
Mr. Mukherjee, on
forward that it may call for certain capacity expansion on our growth ambitions, and which we are very much evaluating actively.
So, Mr. Mukherjee, you spoke about various businesses you are in now. We also want to understand about the export opportunity. How much bigger can it get? What is it currently as a percentage of overall revenues, and how much can you grow it by? We just need these two numbers, sir.
So we were in a stage of around 500 crores in a turnover of 3,500. And with the current outlook, and last year, of course, we did around 5,100, but still the export remained around 500 crore. So we see a significant year-on-year growth, minimum 20 to 25% in the coming years, consistent basis.
Okay, we'll keep an eye out on that growth number, sir. Thank you so much for joining us this afternoon. Hope to talk to you after your numbers as well of Q2 FY26. Thank you so much for joining us this afternoon. But on that note, we're going to slip into a very short break. On the other side, we have Hiten Mistry from Aquarius Capital joining us to discuss the festive trends, post-GST rate cuts, a lot of deal activities that have happened in the consumption side as well. So we'll be discussing all of that with him.
Welcome back. You're still tuned into Halftime Report. Let's get in Hiten Mystery Sector Lead Consumer at Equirus Capital. We've been seeing a lot of deal action that's happening in this space. Generally, the sector has been in focus because of the tax cuts. Then we saw those GST cuts come by as well. So let's understand what the outlook is going forward. Hiten, good morning. Thank you so much for joining in. If you can give us a synopsis of what has happened in the sector so far when it comes to big deals, M&A action, and do you think this trend is something which will continue as well going forward?
Hey, hi. So basically, certainly, I mean, this has been going not from this year or last year. This has been going since last 4 years, I would say. We have seen a lot of traction in the consumer merger and acquisition space since last 4 years. And this 2025 has been the fantastic year because this is one of the highest M&A deal had happened in this 9 months. So this specifically, this drive is not only about the opportunistic risk taking, but it is about the strategic objective. Let me paint a very brief picture. Post COVID, if we see that, or during COVID, we see that Thrasher kind of a model came in India, and they started acquiring consumer brands who are doing a lot of business through the online channels. Slowly, gradually, large FMCG company has also came into the picture. They took like 3 approaches. One approach, they started acquiring new age brands. However, they should have the presence through omni-channel. Second approach, they acquiring in the regional specific brands where they have a very strong presence in 1 or 2 states. A third approach, they acquiring brands in the global market also. So this is a brief picture I want to paint for our viewers about the consumer merger and acquisition, and all these 3-4 pillars who really drove the M&A activity in India.
Absolutely, Hiten. Those 3-4 pillars are the key ones, right? New age was that trend where you had everything related to new age that was doing well, and everyone was looking, even big companies look to acquire these new age companies. I just want to understand more in terms of ethos now that you're seeing coming in from these acquisition fronts. Is it still more focused on new age, or are you seeing a bit of a change in terms of trends, valuations? How are they shaping up as well?
So, see, valuation parameters are very different because consumer sector, if you will see, there are 50 sub-sectors are there, right? Personal care, food, retail, etc., apparels. So you'll find a different 50 sub-segment in the consumer. So commenting on a valuation would be really difficult at this juncture. But yeah, the parameters are a revenue multiple and a EBITDA multiple. But I would say what are the shaping up is firstly about the premiumization. India's per capita income has been increasing. People are looking. Firstly, I would like to say there are 60% Indian population has the purchasing power today, right? Out of that 35-40% is the millennial and the 20-25% is Gen Z, who will be really driving the consumer space. If I talk about the merger and acquisition, what exactly shaping up about the premiumization, direct to consumer agility, as you rightly said, new age brand, and the contribution coming up from the large FMCG company, as I mentioned in our initial conversation. For example, FMCG companies are doing well in the western part of India. Entering into southern part of India is difficult for them. So they will be acquiring regional specific brand in the personal care, food space. We have seen in the recent past, like this large FMCG company has acquired all this regional specific brand and the new age brand. Because new age brand has that kind of the technology, I would say, and conventional FMCG company will not be able to move towards that kind of a technology. Hence, they are acquiring the technology-led brand.
So, Hiten, you mentioned that the consumption power has increased a lot across the country, and premiumization also has. But some of the rural trends suggest otherwise. Are you seeing some growth coming from rural as well? Not some. I mean, is it at par with urban? There was a point in time when rural was exceeding urban, but that seems to have been done away with, right?
Yeah. So, if you see in the consumer trend, lot of consumer companies, and I would say consumer pharma company has also acquired tier 2, tier 3 cities brand where they have a very strong penetration. And Indian public has a different taste region-wise. Specifically, if you see about the spices industry, where like every region has their own taste of spices, right? So the rural, if the companies, large FMCG companies, wants to acquire regional brand, their idea is to make those regional brand to national brand. So with that idea, they are acquiring the rural specific brands, and the consumption will certainly come from the rural a lot. Right. In personal care space, also many consumer companies has acquired Eastern-based brand or a Southern-based brand who are very, very regional in their and they are dominating a 40% plus market share in those region.
Hiten, in the consumption story, while obviously I was reading your report and there were a lot of deals that happened in September itself, around 10 deals, right? So what are we talking about now? Is it more on the staple side, discretionary side? What sort of deals are you looking at right now or are in talks right now?
So as I mentioned, consumer has a lot of subsectors, and if we see the data also, that 115 deals that had happened till date, it's fairly divided into like 20% each of a 4 categories contributed 20% each. That is home care, consumer service. I will include the personal care under consumer services, apparel, and food and beverages. So all categories have contributed 20% each. And the trend will be similarly in this space. Like they'll be contributing in personal care and food space because whenever it comes per capita increase or people had that purchasing power, they'll be able to spend more on the food and beverages space a lot. Secondly, on personal care, and third, I would say on the apparel category. This way, people generally, I'm telling you the spending cycle of consumer. So they will be spending on food much, then personal care, and then apparel.
Okay, all right. We take that point, Hiten. Very interesting insights. We're completely out of time, but we'll have some other conversation on some other day related to the consumer space. Time for a break now. Rajesh Palvia from Axis Securities will join in with some trading strategies on the other side. Stay tuned for that.
Welcome back to Halftime Report on CNBC-TV18. Nifty as of now still at 25,280-90 levels. So keep an eye out on that. Broader end of the market continues to do better than the benchmark indices. A lot of individual movers, Tata Communication, Jyoti CNC is what we're keeping an eye out on. But a whole host of other stocks are also buzzing in trade. And to take us through all of that, we have Vivek joining in with us. Vivek, afternoon.
Well, good afternoon. Thank you so much for that. Well, advanced decline ratio very strong, and we have to start off with the Nifty Pharma Index. The pharma stocks have surged, especially in the last hour or so, given the fact that there appears to have been the US Biosecure Act, albeit in a watered-down version. It appears to have been passed by the US Senate. On the back of that, all of the Indian CDMO companies that you can see on your screen, and a whole host of other names too, are up anywhere between 1 to 6%. The other set of stocks that are doing quite well is the entire banking pack. PSU banks especially doing very well, and along with that, Yes Bank too today higher by over 6.5%, PNB up over 2%. Tata Communication, analysts mentioned that this could see some amount of traction coming in from the data center plans of its Tata Group company peer, which is TCS. On the back of that particular stock higher by over 11% on very good volumes today. Reddington too, on very strong volumes, is up over 6% in the session today. Along with that, the cement pack seeing some amount of buying activity come across. Ultratech, Cement cooled off a little bit, but all of these names at one point of time were up anywhere between 0.5 to 2%. On the other hand, a few stocks are seeing some amount of selling pressure. Fortis Healthcare has recovered from the day's lowest point, but the open offer price by HS is much below the current market price. The entire metal pack today is seeing a certain amount of profit bookings. So names like Hindustan Zinc, Copper down almost 6%. JSPL, Tata Steel, all of these stocks seeing selling pressure. And lastly, Tata Elxsi, this particular name, seeing certain amount of selling pressure or profit booking post what was actually a decent Q2 for the company.
Take that point. Thank you so much for joining us with all those names, Vivek. It's a good time to get a technical check on the markets. Rajesh Palvia from Axis Securities is joining us now on the show. Rajesh, we have come up from the highs of the day, but still maintaining that 100-point leeway from the lows of the day. What are the next levels to watch out for on the Nifty? And any individual names that you have in terms of technical bets?
Yeah, so good afternoon. Looking at the broader market, we believe that, the confidence is again, on the street, and looking at the Nifty is trading about 25,200 level. So I think if it continues to trade about 25,200, the next trajectory for Nifty on the higher side would be around 25,400 to 500 zone. In the derivative data itself, the call writers of 25,200 strike have unwind their position, and now they have shifted their position to 25,400, 500 strikes. So the range for Nifty has moved higher, and even on the put-based concentration is also moved up to 25,200 strikes. So I think now 25,200 needs to keep on close watch. So I think a trajectory may remain on the bullish side. For Bank Nifty, we have seen a strong short covering action, and looking at this short covering, we believe that, Bank Nifty can extend its gain, and 57,000 to 57,200 would be the next target for Bank Nifty in the continuation of this up move, as large cap banking stocks are now contributing to this upward momentum. So till Bank Nifty is holding above 56,300 mark, I think one should remain on the long side of trade for upside target of 57,000, 57,200. Even on the sectors front, I think auto is continuing its upward momentum. Now we have seen a buying interest in real estate, pharma, as well as capital goods. These sectors are showing good traction. So on the stocks front, I think from pharma space, Laurus Lab is looking very attractive. On the daily chart, stock managed to give breakout of falling trend line. The kind of buying interest which we are witnessing, we believe that, this momentum can extend further. And on the higher side, 920 to 930 would be the target for Laurus Lab. On the downside, one needs to keep stop loss around 875. Another stock where we are focusing is Bombay Stock Exchange, BSE. In the current week, a very strong buying action. Throughout the week, we have seen accumulation activity, and now stock managed to give breakout of consolidation range on near-term chart. Looking at breakout, we believe that, this stock has potential to extend its gain. We are projecting target of 2480 to 2500. On the downside, one needs to keep stop loss towards 2330. And third stock is from the real estate space, that is Macrotech developer Lodha. Now stock is negotiating with its falling channel trend line on the higher side. And looking at the buying action, we believe that any breakout above 1160 can take this stock higher to 1195 to 1200. So one can focus on this stock also with stop loss of 1135.
Okay, Rajesh, thank you so much for joining us, giving us your trading ideas as well. Surely we'll be keeping an eye out on Laurus, BSC, as well as Macrotech developers. Thank you so much for joining us. But on that note, we're going to step into a very short break. Don't go anywhere. On the other side, Manisha Gupta will be in conversation with Vikram Dhawan of a Nippon India Mutual Fund. Stay tuned in for that conversation on commodities.
Welcome back. And Vikram Dhawan is Head Commodities and Fund Manager at Nippon India Mutual Fund. Vikram, hi, thank you so much for joining in. The headline clearly comes in from silver. Would want to really understand on how is silver ETF trading at such huge premium when the silver prices are where they are.
Thank you, Manisha, for inviting me on your show. There is a massive global reset which is happening in the asset allocation globally. We have been seeing central banks diversifying against the US dollar for quite some time now. And now we are seeing the same kind of, asset allocation reset happening in the individual, private, and institutional portfolios. And silver, with its strong fundamentals, because of the green tech demand, is also benefiting from this, a big reset in asset allocation. Now, when you talk about premium, it's very important to understand what is happening in the market today. Today, there is a 4 to 5% difference in price between New York and London. There are, whether you go to Shanghai, Dubai, or Singapore, any of the trading hubs, there is, a shortage of material. There are premiums available. So I think when you talk about premium, if you're comparing the price with the LBMA benchmark, then unfortunately the LBMA benchmark is broken. It is not something which should be used as, as a benchmark for for valuing, because none of the material is being traded at that price. That remains a spot indication. The rest of the world is trading in variation of premiums above it. So I think if you talk about these silver ETFs in India, see, we are a very small market. We are a very small part of the entire ecosystem. Silver ETFs, as we have discussed in your show earlier, still today 90-95% of the consumption of silver occurs in physical form. So effectively, the ETFs, silver ETFs, are price takers, not givers. We are just a messenger. The domestic market is at a premium, 5%, 10%. It is fluctuating, and the silver ETFs are reflection of that. So we are the messenger of the physical market of India.
Vikram, I get that, but what happened yesterday was way out of line, would you say? Because in the international markets as well, there are silver ETFs and there are gold ETFs, and they were trading at a 1 to 2 or 3% max premium. In the Indian market, silver premium for ETFs went as high as 5, 10, 12% at one point in time for a couple of those ETFs. How would you read that? And would you say that there needs to be perhaps some kind of a circuit that you need to work on in sense of underlying commodity and the kind of premium that the ETFs can go up to?
Not really, Manisha, because when you say 10-12% premium over which price? Again, I said the London LBMA benchmark is broken. Nobody is buying and selling material at that price. It remains a theoretical benchmark. We can humor ourselves by taking it as a benchmark, but the fact remains, there's no material available at that price across the world. So effectively, yesterday, whatever premiums you were seeing in silver ETF were actually equivalent to, if not less than, the physical market. The Indian physical market is at a premium. And just to reiterate, we're not in isolation. The whole world is trading because at premium because of the culmination of many years of deficit that we have seen in silver. So I think it's very important for the investors to understand that if you're calculating premium over the LBMA mark, then obviously it is not something which is the correct picture.
All right. So Vikram, are you telling me that this was fair market that we saw yesterday? Yes or no?
Absolutely, because as long as there is no dislocation between the ETF prices and the physical market in India, there is no problem. Because our mandate is to shadow the physical prices in India. And the fact that the arbitraging wasn't happening is a clear indication that there was no arbitrage available between physical market and ETF market. Just imagine, Manisha, if the ETFs were available at a hefty premium or a discount at the physical market, there is enough money and brains in this country to arbitrage and take profit out of it.
Agree. And that is silver on your screen, back yet again 2% higher. So $50 is back on our screen. This continues to be very, very volatile, Vikram. If we had to look at this current year of the 3 quarters in calendar year that we have seen, how much inflows would you see gold seeing, and would you say silver is outperforming, not just in price sense, but in sense of inflows as well?
So Manisha, there was various studies which were done as recent as last year, middle of last year, where it was clear that the managed money, global managed money, was either underweight on precious metals or had no holding. So from, as I mentioned about the great reset in the portfolio allocation, so from nothing, we are moving to some sort of an allocation. But again, it is very difficult. What is the target the private investor institutions have? Is it 5%, 10%? We don't know. But as long as this reset continues, we can all humor ourselves with macros and technicals and analysis. But the thing is, till the time this reset doesn't conclude, you will see a similar kind of market continuing.
Interesting.
Okay, all right. Thank you, Manisha, and thank you, Vikram, for taking us to this conversation, because it was an interesting phenomenon that took place yesterday. Silver ETFs trading at a premium to the commodity price that we see in the country. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll talk about more stocks and specific news action that we are seeing. Stay tuned for that. Welcome back. Well, we have been talking about how the US Senate has approved the Biosecure Act as a bipartisan measure to be included in the National Defense Authorization Act. Shiva Chittor, the CFO at Sai Life Sciences, is joining us now, and Ekta is also here to take us through that conversation. Mr. Chittor, welcome to the show. Can you first explain what the impact of this would be? And Ekta will, of course, be the one who will be taking this conversation forward. Ekta.
Yes, thanks, Mr. Chittor, for joining in. Well, you know, I just wanted to actually take you through what exactly has taken place. And I'm reading out of a Macquarie note where they say that the new Biosecure Act, which has been passed, is probably going to be a watered-down version as compared to what was earlier expected. So unlike the previous version, which names specific companies, the current version defines BCCs, which is basically Biotechnology Company of Concern, as those listed on the US Department of Defense's annual list of Chinese military companies. So does that change the meaning significantly more?
No, I don't believe so. While we still haven't gone through this in full detail, I think the earlier Biosecure Act had named specific companies within the hard-coded version of the Act, which I believe would create problems if you want to add or delete companies. At least that was one of the reports that had been cited by some of the US journalist sources as the reason for making modifications. We still have to go through this, but I think from a fundamental business perspective, this just tells organizations that there is a concern with respect to outsourcing. And, you know, this will then increase the speed at which companies will look at India as a destination. That's really what we believe.
Okay, so how much of a benefit do you think that the Biosecure Act now being passed is to Indian CDMOs? Because they had lost a little bit of momentum when you know, there was some uncertainty on whether or not it would be passed. But now that it is, even though it mightn't be a watered-down version, what's the incremental business that you expect CDMOs to see?
In my understanding, I think our overall share of the Asian CRDMO outsourcing, I think, is probably very less. It's negligible if you compare what China does versus India. And for anybody to say I have a reasonable spread in terms of geography, a 20-25% is a minimum that people would at least look for, even if it's not 50-50 to start with. In our opinion, India probably does only 5% if I compare the Asian outsourcing on small molecules. That could mean that India could look at an expansion of 4 to 5x. This is not going to happen like immediately. Pharma will start so, because India also has to put up capacity, add capability in people. But I think we've done this many times. We've done this in the tech industry. We've done it in the generic industry, in the pharma sector. So I think once there is an ability for us to move up and do better, I think India is very well poised to capture on this trend.
So you think majority of the business or opportunities probably going to come in the small molecule space and not maybe the larger molecule biotech space?
No, it will come in both, but I think India is today much more dominant on the small molecule space than what it is on the large molecule space. Most of the people, including Sai, are putting up additional facilities, capacities, and capability on the large molecule space. But I think we have a much more mature ecosystem on the small molecule side.
Okay. You know, CDMO companies have said it multiple times that they're already seeing a lot of benefit coming in from the US Biosecure Act, and that's probably been happening for the past fiscal odd, if not more. So there have been incremental amount of inquiries. So give us a sense in terms of the kind of inquiries or the amount the inquiries have risen for business and how much of that has converted into final contracts.
So I think, so I'll talk about most conversations, which is much more strategic in nature. What we've seen companies that have not come to India for commercial or late phase molecules on the small molecule side. And we have seen them come back and start talking to companies in India, specifically us. And I know that for a fact, these are companies who've never worked with others in India or even with us prior on commercial side. We've seen companies who had policies of not working in India on new entities, new chemical entities, but we are seeing them move to India. So the conversations that we are seeing today are much more strategic in terms of how people are looking at India. It's not about a pair of hands and I will give you something that I don't want to outsource to China just to show a smaller diversification, but it's much more strategic in nature in terms of conversations, in terms of molecules, in terms of work that they want to do, in terms of how they would want to build India. India needs to, we in the industry needs to take some amount of learning, some amount of capacity building to get there. But I think we are seeing signs of pharma treating us as much more strategic partners.
Okay. You spoke about scale. Is India ready to take on the opportunity? Because the difference that a lot of the companies do, point out between, say, Chinese infrastructure and Indian infrastructure is that they have the infrastructure ready. You just need to come and start your work. Are we in that position as yet to be able to service the kind of demand that we might be seeing?
We do not, to be very honest with you, but I'm seeing that all of the companies, if you look at the CDMO space, have all announced CapEx, have all talked about expansion within their own space, within their own customers. And that's really what needs to happen for pharma to come in more and kind of outsource work to India. And India has done this scale up successfully the generic side, 20 years, 25 years ago, where we were in terms of scale to where we are in scale, we've not shied away from adding scale where there is a need, demand, and willingness from the other side to kind of help us grow.
Okay. So if we were to have this conversation, maybe a year from now, how much do you think business could have incrementally increased for the CDMO space?
Kind of difficult to say in a year's time, Ekta. I think pharma takes a little bit of time to kind of pick partners before they would kind of go and decide on one or two of their partners in India. I believe that process will happen in 12, 18 months. That's really how we are seeing pharma talking to all of us in India. And I think that will then, the next 3 years probably will kind of tell you how fast these companies can go. But I'm just saying this, the scale of the opportunity could be as good as 4-5x for the entire country as a whole.
Okay, all right, Mr. Chittoor, we're going to let you go on that note. Thanks very much for joining in and speaking with us.
Absolutely an important one there, Ekta. Interesting to watch out for the CDMO space now after this recent update that has come in. But with that, we're going to wind down this edition of Halftime Report. Thank you so much for tuning in. Up next, your Business Lunch.
Stocks woke up as foreign investment flows turned marginally positive amidst some thaw in India-US relations. Realty and utilities lead the gains while metals drag and IT stocks sulk. TCS reports a better than expected second quarter, but what's more notable is a big step up in its focus on AI, building a 1 gigawatt data center and making acquisitions a key priority. Analysts, however, remain conflicted given the weak demand environment. The Cabinet's Appointment Committee has revised guidelines for appointing directors and CEOs at public sector banks, paving the way for SBI to induct 1 out of the 4 managing directors from the private sector. The move marks a significant shift in PSU bank appointments. The Indian auto industry may approach the government for assistance on sourcing rare earth magnets after China says it will impose fresh controls on the exports of 5 categories of rare earth magnets from the 8th of November. And Prime Minister Narendra Modi called on US President Donald Trump and congratulated him on clinching the Gaza peace plan. He also says they've reviewed quote-unquote good progress in trade negotiations and agreed to stay in close touch. Good afternoon, you're with us here on Business Lunch. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. Yet another proper trending day for the markets. The bulls looking to end the week on a high, and the Nifty comfortably now above that 25,300 mark. As of now, at the highest point of the day, 135 points higher on the index, poised for its 5th weekly advance in the last 6 weeks. And today's move is courtesy the Nifty Bank. It is the banking stocks that are making a move and are making a dash towards the higher levels. 56,700 now on the Nifty Bank, comfortably higher above the recent swing high that the index had made, which was 56,500. The gains led by the PSU banks, and every constituent of the Nifty PSU Bank index currently trading with gains, be it SBI, be it UCO Bank, be it Indian Overseas Bank, all of them trading with gains of anywhere between 3 to 4% in today's trading session. And the Nifty PSU Bank Index among the top sectoral gainers. What is also doing well, though, are a lot of the CDMO pharma companies after the latest US Biosecure Act reports that have emerged. Be it Divi's Laboratories, be it Syngene, be it Laurus Labs, or be it Neuron Laboratories, all of them. Divi's Laboratories now at the highest point of the day, 5% higher on the stock. Laurus Labs is up 2.5%, a sharp recovery from the lows, as is Syngene. But it was the highlight of the first half of the trading session, at least, was the reaction to the TCS results. The numbers better than expectations. Constant currency revenue growth of 0.8% compared to expectations of 0.3%. Now, company is also in the process of committing $1 billion for its AI foray. Now, we spoke to the management earlier on this and the margin outlook going forward. Listen into what they had to say.
We have to take this ambitious journey and be the largest AI-led services company. Currently, we are looking at about $1 billion, but just to clarify, we will be looking, this will come as equity and debt.
This $1 billion?
$1 billion. So my rule of thumb, like what I had is, roughly 150 megawatts is $1 billion.
Okay.
Okay, so we are talking about 5 to 7 billion, but I'm not going to be investing all 5-7 billion year on. So it is going to be a 5 to 7 year exercise. We'll do first, what we intend to do now is establish a capacity of 150 megawatt to start with, which would start in about 18 months time, by which we should be operational.
We talked about pivoting to our new vision, and towards that there would be investments needed, and at the same time we'll be focusing on doing a disciplined execution and leveraging on our operating parameters. We want to inch towards 26.
Earnings reaction from TCS, it's a muted one as of now. The stock has done fairly well this week, so some bit of profit booking coming in for TCS. But the other major event today was the listing of WeWork that took place earlier in the day. It was a muted debut for the stock. It listed at its issue price and continues to be around those levels, just around 2% down on WeWork. Earlier, we spoke to Karan Virwani, the managing director and CEO of WeWork India, on the company's future outlook after its listing.
In terms of guidance, what we've always been saying, we will grow at this 20 to 25% revenue growth. We are adding new centers on a daily, monthly basis. And we've seen velocity of sales grow almost 30% in the last 12 months, which will show itself in the monthly and quarterly numbers that we announce soon. As the High Court has given us, has reserved for orders and given no interim relief to any of the complaints. I mean, I'll just tell you, and you can go into the documents, and anyone can, go through our through our entire documents. We've disclosed absolutely everything. We've done everything by the letter of the law. In fact, more than that. And really, investors should have no concerns. This has just been a very, focused effort to try to bring down the sentiment.
And since we are on the subject of IPOs, the highlight of yesterday's trading session was the final day of the subscription of LG Electronics. The number is 54 times, but that's not the more important bit. The more important bit is the fact that LG became the first Indian IPO to receive more than 4 lakh crore worth of bids. And remember, the IPO was only worth 11,500 crores. In comparison to that, it received bids worth over 4 lakh crore. Of course, the previous record was held by Bajaj Housing Finance that IPO'd last year, and it received bids worth well over 3 lakh crore rupees. So LG comfortably outbidding Bajaj Housing Finance. You take a look at the subscription figures as well. Now, until yesterday, when the final day of bidding began, the issue was subscribed around about 3 to 5 times. But since then, it started to pick up, led by the institutional investors, 166 times in comparison to the total number of shares on offer. More than 3 lakh crore worth of bids were placed by the institutions themselves. The retail portion was also fairly subscribed, 3.5 times in comparison to the shares on offer. And there you can see 338 crore shares were bid for by the institutions in compared to the 2 crore shares that were on offer for them. Even the retail portion, 12 crore shares bid for in comparison to the 3.5 crore shares on offer. But the other striking bit for LG is the fact that it has now become the most subscribed Indian IPO, a large Indian IPO whose size is 10,000 crores or more. Until yesterday, that record was held by SBI Cards, and LG has comfortably outbid that as well. Now, LG was subscribed 54 times, SBI Cards was subscribed 26 times. And you take a look at the others as well. HDB Financial, Coal India, Swiggy, all of them saw subscriptions of anywhere between 3 times to 5 times. HDB Financial was subscribed 16 times. Of course, it IPO'd just a few months earlier. But otherwise, the subscription figures, just for their sheer size, are relatively smaller in comparison to the smaller IPOs. But LG, a 54 times subscription for an 11.5, almost 12,000 crore IPO. So what next? Today, the allotment takes place for eligible shareholders. So you get to know of that by today evening. And the stock will list on the bourses on the 14th of October. But mutual fund data flashing on your screen for the month of September, relatively flat compared to last month. There is a total AUM data, mind you. The sectoral thematic inflows are now at 1221 crore compared to 3893 crore. So thematic inflows. The net equity inflow, marginally lower compared to August, 30,000 crore in comparison to 33,000 crores in August. And that is the second straight month of declines that you have seen. It declined from July, it has declined from August as well. Large cap funds have also seen a drop in the net inflow that has come in, 2,300 crore worth of inflow compared to 2,800 crores in August. And the small cap funds also have seen marginally lesser flows in comparison to the month gone by. The ELSS funds have seen outflows this time around in comparison to inflows in August. Suranjana Borthakur, who's the head of distribution and strategic alliances at Mirae Asset Investment Managers, is now joining in. Suranjana, good afternoon. Thank you for joining in. What do you make of these numbers? Prima facie, would you be a little concerned that it has declined for the second straight month, or you would be happy for the fact that it is still well over 30,000 crores on a monthly basis, and you would await more clarity based on the SIP numbers?
Yeah, I think good afternoon. As you've mentioned, it's not a very large drop in the numbers. It's actually from a 33,000 in equity, it has come down to about 30,000 crores. But if you look at the components, the different segments which are there, I think what has happened is in the July numbers, we saw a big surge in equity, which went up to about 42,000. But a large part of that was the sectoral thematic inflows. which has tapered down to a large extent. I think that is around somewhere around 1,200 crores this month. But along with one NFO, which also happened, which I think collected around 700 crores or so. But if we look at the other categories, I think good to see that the flexi-cap category continues to be above 7,000 crores. So that's a category which has seen an upside in the last couple of months. And also the large cap category has been consistent around 2,500 crores. We also see that the mid and small have not seen too much of a change. In fact, last month also around 5,000 crores in mid cap and similar numbers this month. And also in the small cap, we see that from a 4,500 or so last month, it's around 4,300 this month. I think other categories, if you see, largely have remained the same. One category where I see an upside is the value contra segment, where from like 1,000 crore average in the last couple of months, I think it has gone to about 2,000 crores. But I don't see any reason to be concerned at this point in time. I think, yeah, like you said, we would await the SIP numbers. To my mind, the hybrid inflows have been impacted a little more. I think we've seen around 9,300 crores of inflows which have happened. But the biggest component of this is probably the arbitrage numbers coming down, because we've been seeing around 8,000 crores of inflows in arbitrage, which is now showing negative of 900 crores. I think the category which has caught steam is probably the equity saving, which is seen almost like 100% upside from last month.
You know, Suranjana, correct me if I'm wrong, and just thinking out loud here, this rush of IPOs that we saw in the month of September, would that have had any sort of bearing in this subdued inflow that you have seen in comparison to last month? Because we had almost, 25 to 30 IPOs opening in one single month.
Yes, you're right. That could have had some impact. But like I said, that I don't see a very large difference in the numbers. So it's not like a dramatic shift that has happened. In fact, if we look at, in the past YTD numbers from January till now, this has been one of the good months, because on an average, I mean, the spike was actually in the July numbers, which was 42,000 in equity. But in the last couple of months, I think 30,000 is a good number. I think the other part which is seeing the upside is also the passive ETF numbers. I think while gold ETF has been catching steam every month, I think the other ETF numbers have seen quite a jump actually, from 1,000 crores last month or 1,500 crores has gone up to about 8,000 crores now. So I think silver is the other part which is also catching a lot of attention in the market.
Do you anticipate this trend to persist, this significant inflows that you're seeing in terms of the gold and silver ETFs, especially considering how the prices have moved up in the last month or so? Do you see that trend continuing even at such elevated levels?
Yes, I think what is happening is, there is one part of investors who are building in this segment as an allocation in their portfolio, but there is this other segment who is probably also just chasing the returns to a large extent. So I would think till these levels keep on catching pace, the way it's been catching up in terms of the returns that we've been seeing, there will be some amount of chasing which will happen, but we will have to look at certain other nuances. I mean, you would be aware of the silver ETF, the crunch which has just come in terms of the physical silver. All of that will also have a role to play. I see that till the global uncertainties remain and till, gold still looks attractive with the central banks buying more and more gold, I think gold looks like a buy which could continue for some more time to come, unless there is some kind of sharp correction that we see here.
Suranjana Borthakur, thank you so much for sparing time and joining us to decode the mutual fund data for the month of September. The bottom line being that it's not a very sharp drop, but a drop nonetheless in comparison to the month of August, be it the equity flows, be it in the large cap funds, the mid cap funds, or the small cap funds. All of them have seen a decline in terms on a month-on-month basis. Not significant, but a drop nonetheless. Now, in a departure from tradition, the Cabinet's Appointments Committee has revised guidelines for appointing directors and CEOs at public sector banks, paving the way for State Bank of India to induct 1 out of its 4 managing directors from the private sector. Now, the move marks a significant shift in PSU bank appointments, and as a result of which you are seeing the kind of reaction that you are in these PSU banks, be it SBI or be it the lesser free float banks, say the UCO banks and the Indian Overseas Banks and the likes, all of them trading with gains of between 2 to 4%. Take a short break. More news and updates follow on the other side. Welcome back. The board meeting of Tata Trust is currently underway. Parikshit is joining in with the key developments from there. Parikshit.
Well, yes, the board meeting has been on since 10 a.m. this morning. All the trustees are present. Some are joining virtually. So the meeting is not yet over. They have been deliberating on the agenda, which was essentially for disbursement of funds for certain charitable projects, including a hospital for that matter. We've been told by our sources close to the Tata Group that the meeting has been taking off smoothly. None of the contentious issues, the differences which had emerged among trustees have been taken up or raised by anybody. There were some rumors about how the trust wanted Venu Srinivasan to move on. Nothing of that sort has happened. That's what we're told by sources. They are only discussing the current agenda of the meeting. They've broken for lunch. Another round of meetings is going to take place post-lunch to discuss the remaining agenda. Ahead of this meeting, we were told by sources that the trustees are confident that there will be an amicable resolution to all the differences, and some sort of harmonious working will emerge among the trustees as well.
Parikshit, thanks a lot for that update. Take a short break. More news to follow on the other side. Stay tuned. Welcome back. On to some news from West Asia. Now, hours after Israel and Hamas agreed to the first phase of US President Donald Trump's Gaza peace plan, the US leader said that he is planning to travel to Egypt to attend the formal signing of the ceasefire agreement between the warring parties. Trump also hailed the pact, saying that it could bring lasting peace to West Asia. Listen to what he had to say.
You sort of know what phase 2 is, but there will be disarming, there will be pullbacks, there will be a lot of things that are happening. I think it'll take place, and I think you're going to end up with peace in the Middle East. But we have to get our hostages back, and we weren't going to do it at the end. We're going to do it at the beginning.
And we call time on this edition of Business Lunch. From me and the team that put this show together, thank you so much for watching. There has been a slight cool-off from the highs of the day, but the Nifty is still holding on to gains of 100 points. Midcap radar on the other side.
Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. Markets surging. We are back above the 25,300 mark. The midcaps are in line with the benchmarks. Nifty Bank is outperforming. We do have the realty index, which is also supporting the moves in the broader markets. The advance decline ratio in favor of the advances. And yes, looking like a happy Friday for the bulls.
Good afternoon, Sonal. You're absolutely right. All of the four indices on the top of the screen are in the green. We have a lot lined up on the show. Some important developments as far as the Indian pharma space is concerned. We'll address that as well as we go forward in the show. So let's start off with the top headlines. Stocks perk up as foreign investment flows turn marginally positive amid some thought in India-US relation. Realty and utilities lead gains while metals drag and IT stocks sulk.
CDMO stock surge after US Senate approves the Biosecure Act. Macquarie says the passage reinforces view that pharma supply chain is shifting away from China. They reiterate their outperformed rating on Divi's Labs, Cohance Life, Syngene and Blue Jet Healthcare.
Tata Elxsi slips despite a largely inline quarter where constant currency revenue grew after 2 straight quarters of decline.
Tata Communications shares surge up to 9% after TCS announces plans to build data center business. Analysts believe that Tata Communications has large land bank which TCS can use for developing data center.
Gold financiers Muthoot Finance and Manappuram Finance slip in trade after gold prices retreat from record high levels.
All right, those are the top headlines for the markets. As we pointed out, comfortably above the 25,300 mark right now. Mid-caps are moving around in trade as well. We do have the realty index, which is one of the top gainers. PSU banking index also following suit. But yes, some profit booking is what we are seeing in Nifty Metals and Nifty IT as well. But mid-caps, they continue to be on our radar. This is our special segment, Mid-Cap Movers. Sudarshan is here with us to take us through the mid-caps that are moving around in trade. Sudarshan.
So stocks reacting to news flow and are higher in the trade. First one on the list is SBI Life after a strong update for the month of September. Second one is Prestige States after a strong quarterly update. It's for the second day the stock is higher. BSE continues to move higher after the reports related to SEBI's norm on the regulatory front. Manappuram Finance, all the gold financials are lower after a sharp drop in the gold prices on the global level. Manappuram Finance down more than 3%. All the CDMO names, Divi's Lab, Laurus Labs, Syngene, Blue Jet, Newland, all the stocks are higher, some in the range of 5 to 16%. That's after US Senate has approved Biosecure Act. Some of the more mid-cap gainers, first on the list is PG Electroplast. For the second straight day, it's up more than 5%. Voltas 2 is seeing big buying. It's up currently 3%. And Yes Bank, along with all the other PSU banks, this stock is also higher, more than 7%. Some of the metal stocks are lower today on the back of the rise in dollar index that we have seen overnight. Hind Copper, Hind Zinc, both the stocks are down somewhere in the range of 3 to 5%. And last on the list is Tata Elxsi is down nearly 3% despite a healthy set of earnings for Q2.
Thank you so much, Sudarshan, for joining us and giving us a list of all of the stocks in the broader end of the markets that are making the moves in today's session. But it's a good time to welcome Jay Thakkar from ICICI Securities for a quick technical check on the market. Good afternoon, Jay. Thank you so much for joining us. Well, Nifty about the 25,300 mark. Do you see further upside from current levels?
And yes, Nifty is almost like 4-day is what we are seeing. Nifty above this 25,000 levels, in fact, rather for the 5th day. And 25,000 levels, Vivek, is very interesting. I mean, above those levels, definitely one should be bullish on the index. At least for the near term, I think Nifty is likely to test those levels of 25,450, almost near to its previous swing highs. And once those levels are taken off, we may see it inching towards 25,700 as well. Now, why 25,000 is important and above and below that, you get this sense of bullishness or bearishness. The reason is that in past 22 weeks, so it's almost like, Vivek, we have seen half of the year. Nifty, from that 22 weeks, 16 weeks are the levels wherein Nifty tested the 25,000 levels, and then nearly around, say, 6 weeks wherein you saw Nifty about 25,000 or below those levels. So 25,000 levels are very important. I mean, most of the time it has been tested in this past 6 months, and above those levels we are bullish. We are seeing good short covering happening in the banking and financials. Mainly they are leading from the front in this rally, especially. Vivek, last rally which we saw from 24,400 until 25,400, we didn't see much of participation from IT and BFSI, but this time around banking and financials, which holds around 36 to 37% weightage in the Nifty. I mean, there is where we are seeing the bounce back, and also realty is bouncing back. So apart from IT, I think broadly most of the sectors are participating this time around. Hence, we are seeing a broad-based rally. Keeping this in mind, Vivek, I have a couple of buy recommendations. The first one is on Sona Comms, that is Sona BLW, and we have a positive news out here. I mean, to kind of build the robotics for the Indian international markets, as well as there are a lot of shorts getting accumulated in Sona Comms. So recently, I think there can be a short covering move in this. 460 is where I'm looking at the short-term target. On the lower side, 425 will act as a very critical support. So there's the good short-term upside which can be expected. And Union Bank from the PSU segment, I think, has been consolidating since a couple of trading sessions. And now I think that since the PSU banking pack is doing good, maybe SBI, PNB, and others, Bank of Baroda, PNB is likely to go into the ban, has not yet confirmed. But Union Bank trading around the levels of 140, I think, is likely to inch towards the levels of 155 in the short to medium term. One can buy this, placing a stop loss below 135. So here the risk reward is absolutely positive. So I'm bullish on most of the sectors. It's just that the IT is looking a bit sideways, and metals probably may go sideways. I don't know if the DXY continues to rise.
All right, Jay, thank you so much for joining in. With that, we'll slip into a short break. We get chatting with Nimish Mehta of Research Delta Advisors on the clearance of US Biosecure Act and a lot more.
Welcome back to Midcap Radar. Well, an important development as far as pharma companies are concerned. The US Senate has approved the Biosecure Act as a bipartisan measure to be included in the National Defense Authorization Act. Ekta joins in to explain.
Well, yes, definitely it is an important development which has taken place when it comes to the US Biosecure Act, where the Senate has passed it and now it's expected to go to the House. But just to put it into perspective, that it could possibly be a watered down version of what was expected. Because remember, in the earlier version, according to analysts, there were specific Chinese companies, biotech companies that were named. And now, according to people who are close to the matter, have indicated that the specific Chinese companies are probably left out of that purview of the Biosecure Act. Now, however, it's definitely a positive for Indian companies, irrespective for Indian CDMO companies, and they've already been seeing the benefits of a China Plus One come through. So, for example, the companies that we've spoken to in the past couple of weeks and even in the past couple of months have indicated that they have seen inquiries from Chinese CDMO companies rise by anywhere between 30 to 40%. And a lot of the business, however, takes a couple of months, even up to 36 months in terms of conversion. But even companies which were not looking at India or not interested in giving business to India are now looking at business in India and are looking at possibly smaller amounts to start with, say $100,000 or $200,000. Large pharma companies are talking to Indian companies in terms of business inquiries as well. So what we are seeing is that there is a push and there is definitely a flow of business which is coming into Indian companies. A couple of companies believe that maybe in the next couple of years, business could probably rise 3 times to 4 times for Indian CDMO companies simply because of the kind of flow of business. But it remains to be seen whether or not we can service that business given the scale that Indian CDMOs lack. We still have to scale up according to a lot of the industry watchers, and that would be something that we could probably see in the next couple of quarters.
All right, Ekta, thank you so much for explaining that change that has come by, the approval of Biosecure Act in the US. Nimish Mehta, founder partner research, Delta Advisors, is joining us now to understand which stocks are in focus on the back of this news and whether we'll see immediate benefit come by or not. Nimish, good afternoon. Thank you so much for joining in. First up, your take, which are the stocks which would be most benefiting the most from this? And do you think that benefit would immediately come by because it takes some time to build onto the benefits that are there in the Biosecure Act?
Yeah, sure. Thank you for having me on the show. We do track the industry, but won't be able to comment specifically on the stocks. However, I would agree to the commentary given by Ekta that it's a bottom-down version, and we continue to believe that it is going to be neutral for companies in India. Mainly because the watered-down version actually is not naming any companies. Wuxi Biotech, for example, was the biggest company in China who used to garner a lot of market share of CDMO industry. That name is no more given in the list, and the new version of the act actually tells about a list that will be prepared by Defense Department of the US. And companies within that list will be affected. What I understand is that Wuxi is still not a part of that list as well. So to that extent, I personally would feel that it is going to be a big step for any pharma company. And also we are seeing a lot of news around manufacturing to be shifted to US. So something which is as critical as national security, even if it is moving outside of China, I think measures would be to be under the US manufacturing control.
Right. Nimesh, thank you so much for giving us that perspective. Nimesh, one more question. We understand that, this particular bill still needs to be approved by the president before it becomes a reality. So typically, what is the timeline if you, have a sense of how exactly that particular system works? And secondly, are you saying that this need not necessarily mean a China plus one opportunity for India, but rather a reshoring back to the US market?
Yeah, so the first question, I clearly don't know how the timeline works in the US, the US parliamentary system.
Right.
But yeah, I clearly see that, because we have been hearing about what the Trump administration's emphasis on getting manufacturing back to US, not just for the pharma, but for any industry. And from that perspective, just few days back, we were also worried about whether they will be putting a tariff on generic industry, which obviously was not done. But from that perspective, I don't think China plus one today from the US market, or from the US perspective, may mean a shift to India always. And definitely not for products which are as important as the national security concern product.
So, Nimish, Ekta was also mentioning that some of these companies have also already started seeing some inquiries on the back of an expectation that there could be an approval that would come by. Now that it has come by, do you think we'll take some time to convert that into production and convert that into service, because we don't have that much capacity?
Again, I would repeat the same thing. I don't know about the inquiries, but logically, it really doesn't make a lot of sense. Also, we have heard about AstraZeneca, for example, Eli Lilly putting up a facility in India, which means that they might shift, even if they shift manufacturing, they would try to keep it under their control. But I don't know about the timeline, at what stage, at what companies are talking to the companies. That's very hard to know. Talk obviously does not mean that business is coming. So logically, it doesn't fit our understanding.
Okay, Nimish, one more question. See, typically a whole host of companies have actually mentioned that they have received RFPs, and it's taking a bit of time for them to materialize into final orders. Along with that, especially in the last few quarters, especially a company like Syngene have actually spoken about a very tough US biotech funding environment. With these coming into the picture, what is your opinion as far as the outlook for CDMO names in India are concerned?
The CDMO names so far, when we talk about CDMO, we are talking about several parts of the industry. The first and probably the most important part is where the innovator is getting their supplies from the CDMO supplier. And then there are obviously generic API suppliers and even the generic formulation suppliers and developers both. So for the last two part, I don't think there is going to be any problem, or it will continue the way it has been. And India has been kind of, at least on the formulation part, been dominating the industry. On API, yes, the shift is taking place from China to India, but that is for the worldwide market, not just for the US market. And that's also because US does not have the capacity, and it will be difficult for them to create capacities immediately. But about the first part, which means innovator getting their supplies from CDMO companies. As I mentioned, because these are anyway very important products, and innovator companies definitely can manufacture on their own. Obviously there will be some issues in creating capacities, but they would try to get it in the US, on the US soil.
All right, Nimish, thank you so much for joining us and explaining to us what this means. So yes, the market is getting excited, but you do not see immediate impact, positive impact come by for these pharma companies, because there's still some time in terms of building capacities and the China plus one theme to play out as well. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that. Welcome back. Well, above the 25,300 mark for now. The mid-caps are outperforming as well. So we end mid-cap radar on a positive note with all the 4 indices at the top of your screen in the green. We'll see which way things go. But for now, we'll take your leave, your stocks, when we return.
Hello, good afternoon. You've tuned into Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, markets as of now, you can see 25,300 on the screen for the Nifty 50. Will this sustain in the last 1.5 hours of trade is something that we'll be keeping an eye out on. But again, Nifty is about 25,300. The broader end of the market, that is also doing well. So yes, that is up 0.6% of gain almost for the Nifty mid-cap as well as a small cap. We're seeing gains coming in there, and advance decline ratio today is clearly in the favor of advances versus declines, so not much of a worry on that front. What's not doing well is Nifty IT. That's down almost 0.2% even as of now when you look at it. TCS's numbers have come in, Tata Elx's numbers have come in. So all because of that, we're seeing some bit of a pressure today, selling pressure coming in on the Nifty IT side. Keep an eye out on that. PSU banks, they are doing well, and Nifty Bank overall is also doing well. We're seeing almost 1% of gains that is coming in for the Nifty PSU Bank. 2% actually, while Nifty Bank overall is holding on to gains of 0.9%. And we'll see earnings coming in next week for most of these large banks as well. So that is something that we'll be keeping an eye out on, especially next weekend is what we'll watch out for in terms of big private bank earnings over there as well. But yesterday, bank is what is managing to hold on to gains. But that's how the market setup is looking like. Nothing to complain on that front. But this is a show where we solve all those stock-related queries that you all have sent us. And to do just that, today we have our experts joining in with us. Shivangi Sarda, analyst, equity, derivatives and technicals, broking and distribution at Motilal Oswal Financial Services, as well as independent market expert Shaina Mukaddam to answer all those queries. Shaina as well as Shivangi, good afternoon, and thank you so much for joining us on the show. Let me get started with the first query for today. We have this query that's coming from T.S. Narayan Swami, who's writing to us from Chennai. He's holding 20 shares of Sanofi India. This is at a price of 6,250 rupees per share. Long-term investor and wants to know whether to hold, sell, what should he do at current levels. Shaina, let me start with you.
Well, Sanofi, I believe he's gotten at higher levels. He must have gotten after the demerger. So a year back, slightly more than a year back, the consumer business was demerged and is into a separate company, Sanofi Consumer. So now Sanofi India is just purely pharmaceuticals. And if you look at valuations at current levels, it is not cheap. If you see on EV by EBITDA, it's about 20 times. Even on market cap to turnover, it's about 5 times. The market cap turnover ratio. So I would say that while it has got good products, it's an MNC. You can actually exit at any bounce that you get because it is expensive. So upside will be capped from here on.
Okay, so that is the view on Sanofi India. And like Shaina has also mentioned, there's a different entity. The part of the consumer business is now separate. So that is also something that one should keep an eye out on. Shivangi, your view for Sanofi India. They are holding Sanofi India as the viewers query on.
Thank you for having me. So we've seen that, technically speaking, the charts of Sanofi have kind of fizzled out, and we've seen on a calendar year basis, this stock is down by 25% this year. And we've seen that, any minor, attempts of recovery have not been respected. Even, last week we saw that there was some bit of support-based buying, but then the momentum is clearly missing at any small bounces. So, the capital has, eroded in this stock from the longest times. And I would recommend, one can exit and, get into better momentum stocks which are in flavor.
Okay, there are better momentum stocks that could be in favor, not too positive on Sanofi India. Can look at other names. That's a view there. Let's move on to the next query for today then. We have Shubham Vijay, who's writing to us from Pune. He's holding 28 shares of Allied Blenders. This is at a price of 281 rupees per share, making a good profit on this one. The other one is 10 shares of BHEL. This is at a price of 301 rupees. He's making a loss on this one right now. Wants to know what he should be doing now, whether to hold, sell, look at averaging any of this as well. Shaina, your view.
Allied Blenders, he's gotten at a good price. The IPO price was 281. So I would say even at current levels, he can continue to hold because the funds that they raised via the IPO, about 1,000 crores came into the company. That was utilized to repay part of the debt. So the interest cost has come down substantially. So while turnover is showing a steady growth, we are seeing the profits jumping. I think in terms of valuation also, it is not too expensive. given the fact that they've launched 2 new products in the last couple of years in whiskeys. Pretty well they're doing in terms of they're an Indian distillery company. So I would say hold Allied Blenders. He's gotten also at a good price. Now, as far as BHEL goes, I would say it is better to switch to L&T. See, BHEL has got huge orders on hand. Order book on hand is almost about 2 lakh crores. But the problem over here is the operational implementation that they're doing of these orders. First quarter, they run into losses. Margins were under pressure. Now we'll have to keep waiting and watching. So to that extent, I would say to be in a safer stock, better to be in L&T.
Okay, better to be in L&T than BHEL is what you're saying, right? Okay.
Yeah.
That's a view coming in there on the fundamentals. On the technicals, Shivangi, what's your view? Allied Blenders as well as BHEL. Allied Blenders, they're making profit. Should they book out profit, look at some other name? And BHEL, are these levels that one could look at maybe averaging, Shivangi?
Right, Blenders, we have seen that, this stock has been making higher top, higher bottom from the last 6 months. Technically speaking, it is quite strong, and we are, seeing that it is maintaining its upward sloping channel on the weekly basis as well. So steady returns over here. The returns have been quite stable over the spread time, which is positive. And it's taking support near its 50 DEMA multiple times that we've seen from the time May 2025 till date. So, of course, this stock is quite resilient over here. I would recommend a hold here. One could, of course, trail their stop losses ahead, and we could look at a support of 530 as an important level as a trailing stop loss for the next potential targets of around about 580 to 600 levels positionally. Now, of course, talking about the other stock, BHEL.
Yeah.
We've seen that, on the weekly basis, this stock has started to make, recovery from the last 4 to 5 odd weeks, and it is kind of recouped all of its losses of the previous, August month. Now, it is sustaining at the higher levels, but again, momentum is slightly missing over here. But of course, if one is holding it positionally, I would recommend we can still hold on to this one. Trading perspective, not so much, but positionally, the targets are looking good for 260 odd levels with a support of 235.
Okay, 260 odd levels for BHEL. Keep an eye out on that. And support level is also what you mentioned. Thanks for that, Shivangi. Next query for today, we have Meera Vasudev, who's writing to us from Hyderabad. She's holding 100 shares of Bajaj Auto. Price is 11,000 rupees. 11,700 is what she's bought it at. She's a long-term investor, doesn't mind holding this stock, but wants the view on this front. China, the last time we spoke to Bajaj Auto as well, they said that, the first 11 days right now so far was very good in terms of the festive season. Obviously, GST is something that comes as a benefit for consumers. But overall, what is your thought on Bajaj Auto?
The investor has gotten at very high levels. And what I would say is that even from current levels, the stock is not cheap. Still, I would recommend a hold. So I'm not saying to switch or get out of the stock, but hold it for long term. But I would say that because valuations are not too cheap, if you see price to book is about 6 times, EV by EBITDA is about 18 times. What I would say is that it could take some time for the investor to recover his buying price. Also, there are issues that could come about with regarding to the availability of important components that are imported from China. So to that extent, there may be some production issues. Otherwise, I think volumes in the last month were pretty good, as you mentioned, and the GST cut has been fully passed on. So hopefully, in the second half, volumes will be much better. Exports they're doing very well, and it is supported also by the rupee depreciation. So on all factors, it is reasonably priced, not cheap. So you can hold it for the long term.
Hold it for the long term. That's a view coming in. The buy price is clearly, I think, one of those highest that we've seen at least in the last 5 years when I was looking at it. So, Shivangi, your view for the viewer, should she maybe look at averaging at these levels? Because she's bought it at one of those highest prices, 11,700. What should she do now?
So, of course, Vinny, the buying price is quite high. But overall, if we look at Bajaj Auto, simply the chart structure right now, we have seen that, the auto space stocks have shown a little bit of tailwind from the sector cues. And we've seen that, of course, seasonality-wise also, these quarters tend to be quite positive for the auto stocks with respect to the festive buying and also the tax buying, which happens towards the end of the year. So overall, stock is getting ready for a good up move just right now, and it would be a good time to even enter and and average their positions. But of course, there is. Slight bit of, I would say the momentum is slightly less than the other auto stocks. But if we talk about the levels per se, positionally, we are looking at, 9,500 for Bajaj Auto, and the support would be at 8,650. So these could be the levels to watch out.
Okay, keeping an eye out on those levels over there. Thank you so much for that, Shivangi. But do stay on with us, Shivangi, as well as China. We're going to take a very short break. And viewers, do stay on with us as well, because we are answering more of your stock-related queries after the break, so don't go anywhere. Welcome back to your stocks on CNBC-TV18. We still have with us Shivangi Sarda as well as Shaina Mukaddam to answer all the stock-related queries. Let's move on to the next query. This is also again coming in from the auto sector. We have SK Datta who's writing to us from Kolkata, and it's an investment query. He wants to know if he can purchase Hyundai Motor shares at the current level. Shaina, your thoughts on the fundamentals for Hyundai Motor?
He can buy it if he wants, but at much lower levels than the current price, in my view. After that tepid listing that it had, the stock has run up. Now, I would say closer to 2000, in my view, would be better bet in terms of valuations. The stock ran up because they did pretty well. Even last month numbers were very good. With the GST cut, the volumes, they actually reported very good numbers in September. So there is hope that second half will be better. At the same time, I would say that be cautious. Like we saw in the first quarter, the numbers were very depressing. Lower profits, EBITDA was lower, turnover, they were not very exciting numbers. So I would say be cautious. Don't buy it at these expensive valuations. Buy it at dip.
Okay, buy it at dips, that's a word on the fundamentals. On the technicals, Shivangi, what is a level that one could look at for Hyundai Motors to buy it? Right? Because in the last 1 year, when you're looking at it, it's gone up almost 32%. Does it make sense right now, or should they wait, like Shaina is saying?
Auto space is in a lot of flavor, and ahead of these months also, we expect a lot of momentum to continue. Hyundai, if we talk about the stock per se, we've seen profit taking in the last 3 weeks, and even on the monthly basis, it's given up most of the gains of the September month. And of course, this stock has been, trading quite well in the last 6 months. But overall, I feel that, it has broken an important exponential moving average, which it was holding from quite a long time. So I would recommend a little wait and watch over here. And, one could look at 20 to 50 odd levels to again re-enter, which is an important retracement level as well. But nevertheless, if you want to focus on the auto and related space stocks, I would recommend the two-wheeler space, which is looking quite positive. So one can look at a TVS Motor or a Hero MotoCorp for that instance. The momentum is likely to be more over there with resilience. Okay. So this would be on my take.
Okay. So you're saying more on the two-wheeler side would be a better bet right now, and otherwise the levels that you've mentioned for Hyundai Motors, keep an eye out on that 2,250, I believe, right? Okay.
Yes.
Let's move on to the next query then for today. We have this one coming in from Mohit, who's writing to us from Mumbai. He's holding 100 shares of Vedanta, prices for 49 rupees per share. He wants to know whether he can hold it for 2 months. So there's a short-term query, Shaina. Just 2 months time period is what he wants to hold it for, making some bit of a profit here.
I would say that there is a bounce. So for a short term, yeah, he can continue holding. Even fundamentally, there are positives as well as negatives. They are talking of actually splitting the company into 5 units, and it has got good assets across the board. Like for example, you have zinc, you have aluminium, oil and gas. But at the same time, the government is putting a lot of caveats in its plans to reduce its debt by way of offloading stake, subdividing the company. So I would say that take the bounce that you get to exit.
Okay. And just a quick word, Shivangi, what should they do for Vedanta? 2 months, any target that you have?
So the Vedanta has been doing quite well, and it has recently surpassed its previous hurdle levels of 480 odd levels, and looking quite positive. In fact, the metal space is quite lucrative and has participated in this rally. So we're looking at 515 as the next immediate targets for the next couple of months, and 470 would be an important support to watch out.
Okay, keep an eye out on those levels over there for Vedanta. But that was the last query for today, ladies. So thank you so much, Shivangi, as well as Shaina, for joining us as always. Hope you all have a great weekend. And viewers, thank you so much for sending us your queries. Keep sending them in, and we'll be solving them on Monday, Wednesdays, and Fridays at 2 p.m. on your stocks. But don't go anywhere. Last hour of trade is still left. So you have closing bell up next.
on market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
It's a slightly red screen on the Asian markets.
The real culprits here have been China and India in terms of buying Russian oil.
Resistance does not change. It's 25,000. The high was 25,220. That is the first resistance, 25,200 broadly.
This kind of premium is bit on the higher side.
I think we currently have about 1.2 gigawatts of capacity.
The letter that we received a couple of days back was from Process.
It's a very, very quiet start this Friday morning, 25,176.
We've been kind of quite positive on the entire corporate earnings cycle.
This pertains to fresh restrictions that China is going to impose on certain material that is used in making lithium-ion batteries, anodes, and cathodes as well.
We will grow at this 20 to 25% revenue growth.
India could look at an expansion of 4 to 5x.
Market surging. We are back above the 25,300 mark.
All right, that was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I'm Ekta Batra and the entire team will be joining us soon. Well, it's turning out to be a session where we are seeing some amount of resilience really come through for the markets. We have the Nifty, which is in fact above 25,300, and we have the Midcap index, which is step in step with the frontliners today as well, so up around 0.5%, and the Bank Nifty, which has really been outperforming, so up around 1% currently for the Bank Nifty. In fact, it will be the 5th week of gains for the Nifty Bank if in case it does close with gains this week. So good going for the Bank Nifty as well. Overall, the advanced decline ratio has held steady through the trading session, so that's definitely a positive indicator. We have around 1,771 stocks advancing to around 1,079 stocks declining at this point in time on the National Stock Exchange. A good screen to definitely end the week at this point. Rima, hi.
Hi, indeed. The Nifty is up more than 1.5% so far this week. The Midcap index has exceeded a gain of close to about 2%. So it's a good finish. And markets have been inching higher. I think only one day this week we saw a little bit of profit booking or a pause. But on the whole, and today you're getting support coming in from the banks. So the Nifty banking index is up nearly 1%. Pharma is on the front foot, the Nifty Pharma index. And a lot of the regulatory overhangs this week at least seem to be out of the way, whether it's generics or, now even for the CDMO space, the push about the Biosecure Act. IT is not participating, but at least it's not a drag. The Nifty IT index is flat, but I think for the week, it's still up close to about 4.7%, making it, I think, the best sectoral gainer for the week, even though today it's not doing
absolutely.
much.
So it's definitely the export focus and maybe the pharmaceutical stocks really leading the way. And who can forget what's taken place with gold and silver this week? But that's a whole different discussion. Let's now tell you what we have lined up on Closing Bell today. Friday cheer on Dalal Street, Nifty hovering near day's high above those 25,300 levels. Good day for the pharmaceutical pack, and banks and IT and metals are having a down day. TCS's AI data center push over the next 5 to 7 years sends shares of Tata Communications higher. We'll take stock of what this means for the company in just a bit. CDMO plays are up and about after the US Senate has passed the Biosecure Act. But a law which is aimed at cutting ties between American biotech agencies and companies flagged as a national security risk, especially from China.
Okay, how should you position yourself then in the last hour of trade? What lies ahead? Let's get in a few calls from Mitesh Thakkar, who joins in from Bonanza Portfolio. Mitesh, afternoon, 25,300 and holding. Okay, before that, we'll get to the trading ideas. But the Nobel Peace Prize for 2025 has gone to Maria Corina Machado.
She's a Venezuelan politician and industrial engineer who's currently the opposition leader in Venezuela. So interesting that she's in fact won the Nobel Peace Prize for 2025. So we'll wait by for more details on that. But
I think
as
Trump
of now,
maybe Trump would have wanted this for himself, considering that he thinks that a lot of the wars have been ended on account of him.
There have been a lot of pitches from different countries with regards to what Trump being nominated for the Nobel Peace Prize as well. But as you can see, it has gone to someone else. Maria Corina Machado is the one who has won the Nobel Peace Prize for 2025. But we still have what's taking place with Gaza. So that might be, a nomination for next year for Trump.
Yeah, indeed. The first step towards an official peace after more than 2 years. 2023 is when the strife began. And, this is the first step. And there are multiple prongs to it. I think it begins with a ceasefire and then the exchange of hostages and prisoners of war. But for now, let's appreciate the great work done by Ms. Machado, and she's won the Nobel Peace Prize for 2025. But back to trade, back to markets, and back to Mitesh now. Mitesh, your calls?
Yeah, earlier in the day, I had suggested that 25, 350, 420 is the first target area. I think we are close to that. Maybe some profit booking will happen over there, but once we start getting past those levels, expect more momentum on the upside. So stay positive, take some profit tactically around this zone. But on the stock side, I have two banking names. Bandhan Bank is a buy with a stop at 164 for targets of 176, and HDFC Bank, that's a buy with a stop at 969 for targets of 1015.
Okay, all right. Well, Mitesh, the Nifty Pharma index has outperformed the Nifty this week. Any upside that you would see from current levels?
So I think a couple of pharma names are giving very strong reversal led by DVs. And the other one which I like is Aurobindo Pharma. I think, a lot of these stocks which have not participated are now showing signs of some kind of an upward momentum. So I expect pharma will see more upside. What is lagging is Glenmark to my mind. I think that's failed to pick up today. It's just about flat. But good chart patterns on DVs, Lupin and Aurobindo Pharma, and these are the stocks which I like. Lupin, I would want to see a breakout beyond 1984-85. Then we can see 2050, 2060 as the first target. Similarly, for Aurobindo Pharma, I think the first target is 1160, which is close by about 3% away. But beyond that, good chance that 1200 can be topped.
Got that. Let's talk about TCS. That's clearly been the stock of the day on the way down. It's currently lost close to about 1.5%. While the numbers are fine, a beat on the revenue and margins, maybe the street is just seeing a little bit of profit booking after the 5.5% rally from Monday to Thursday. So today it's taken a step back. But what has done very well actually is Tata Communications. Remember, TCS announced its data center play. They spoke about participating in the AI ecosystem, getting into adjacencies. And a part of that plan is to set up a 1 gigawatt AI data center capacity over the next 5 to 7 years. In the initial phase, they will begin with 150 megawatts, for which the company will invest $1 billion. Now, the street believes that for TCS, maybe it'll drive earnings, but it will, maybe to some extent impact their return ratios. Because IT services is very low on capex. The only expense that you have are your employees. So it gives very high return ratios, while a data center play is capex heavy. So the return ratios are lower. But the street is latching on to Tata Communications, and look at the way that stock has skyrocketed. For one, Tata Communication is a part of the Tata Group. It has a very large land bank that the company has been trying to monetize. So maybe TCS could look, because when we asked them about have you identified any land parcels, we said we're looking at all the land parcels, etc. But secondly, Tata Communication provides data center to data center connectivity, which basically means you connect one data center to another data center. You have to connect the data center even to places where the cloud is hosted, like the AWS cloud, etc. So that is second. And third, the data centers also need to be connected to the company's offices or branches. So that is the entire data center to data center connectivity, which Tata Communication focuses on. And in the investor meet, which happened in the month of June, the company did speak about data center, the connectivity. Earlier, many years back, they used to even own a data center. But I think in 2016, they exited, and now they have a 26% stake in STC. So earlier, it was owning it, but now they're enabling the data center play.
They had the data center before data center was sexy.
Yeah.
Basically before AI.
Before AI.
Before ChatGPT.
They still have a 26% stake in, I think, something called STC GDC or something. They have a 26% stake.
Yeah.
But for now, they're enabling the data center with connectivity.
Yeah, no, absolutely. Actually, let's just play out some of the sound bites from TCS management. We spoke with them yesterday on, of course, the data center business, AI, but of course, growth outlook, etc. as well. Sounding steadier on growth as well. Listen in.
We have to take this ambitious journey and be the largest AI-led services company. Currently, we are looking at about $1 billion, but just to clarify, we will be looking, this will come as equity and debt.
This $1 billion?
$1 billion. So my rule of thumb, like what I had is roughly 150 megawatts is $1 billion.
Okay.
Okay, so we are talking about 5 to 7 billion, but I'm not going to be investing all 5-7 billion year on. So it is going to be a 5 to 7 year exercise. We'll do first, what we intend to do now is establish a capacity of 150 megawatt to start with, which would start in about 18 months time, by which we should be operational.
Okay, that's how TCS is approaching the data center play. We have Sandeep Agarwal from Sovilo Investment Managers now joining in. Sandeep, the street doesn't seem very excited. They are showing aggression. They are talking about participating in the AI play in different ways, internal, external, getting closer to the customers, but also with acquisitions now, and lots of acquisitions. You know, they're going to get very aggressive, is their word. And now this AI data center, I mean, how should you think about it? And what could be the benefit to TCS? What could be the flip side, the negatives?
No, hi, good afternoon, and thanks for having me on the show. So the way you should see a data center business is that we need to know what is going inside the data center. So the way, you know, they are talking about the investment, which is like, you know, 5 to 7 billion. Basically, it is $1 billion for 150 megawatt. It seems that, you know, probably they will not be infusing too much of GPU or may not be infusing any GPU. And that, I think, is the biggest difference between other people who have announced similar capacity at 4 or 5 times of the capex. Now, if you are not going to put GPU in that, that means that you are not going to do backward integration, which means you will not have your own AI services. So basically, you will be enabling AI services to the hyperscalers probably through your data center, and not coming out with any backward integration product or services for the for AI. So I think that is the difference between what others are doing, what TCS is doing. In my opinion, as I believe that, you know, this business is better than distributing cash or giving buyback and all that. It is better than that. But obviously, you know, this business is also fast catching up, while on one side, like solar industry, demand is very high. At the same time, supply is also coming at a rapid pace. The advantage with any tech company to do that, you need two things for pure data centers. One is the land and another is the technology. So they have both in-house. So I think they will be at a slight advantage than many of the players who are coming with data center only with their strength of being in real estate. So I think TCS will have some advantage over that. But again, it is a different line of business, and the returns will not be similar to what, you know, the services business is making.
So what kind of returns, Sandeep? What is what kind of IRR should one expect from this business?
Right now, there is huge scarcity, but as I heard the management, they are talking about operationalizing it in 18 to 24 months. I don't know what the environment will be at that time. Currently, the returns are very good, but as I said, like same solar industry, it is becoming commoditized at a very fast pace. So we don't know after 24 months what kind of return you can expect. But definitely, I don't think that, you know, the returns will be commensurate with what they are doing in the IT service side. There will be some dilution. But again, it is much better than distributing cash like that, because when you put up the data center, you will slowly start acquiring companies with apps, and also you will develop some apps. So it will slowly, you can build a business around it in next 5, 7, 10 years, where, you know, it can compensate for your decline in the core IT services. I believe that, you know, this is a line of business which will help them to, you know, cover some losses on the growth part on the core IT services in next 3 to 5 years time.
So on the whole, you're happy with what the company is doing, the ambition and the aspiration.
Yeah, I think it is a good step. This is the best option rather than, you know, burning unnecessary huge amount of money in R&D and trying to do something. This is the middle path, I believe, where, you know, you will have better returns, and also you are diversifying and your growth will also be taken care of. So nothing will happen overnight, but in after 2 years you will see some benefit of it. Also remember, this will be very small portion of the total size of the revenue of TCS even in next 3 to 5 years time, and hence street may not be excited, because when you do the Excel modeling you don't get very exciting numbers on it.
Sandeep, well, we have all of the other IT companies coming out soon. What's your sense in terms of which one could probably surprise on the upside?
No, so if you see the estimates of the street, most of the analysts on the street are estimating very muted growth. If you see on year-over-year basis and even quarter-on-quarter basis, there is growth for 1 or 2. So as I have been maintaining my view that this industry is now X growth primarily because maximum market share gains which were possible has been already done, and this industry is matured industry. So I don't see this industry to grow at more than 2-3%. And Indian IT companies, despite all their strength, the large ones cannot grow more than mid-single to high single digit. And for that, I think there's something new has to happen to get a re-rating of the multiple. So this will become more like utility companies if it is only core IT services. So I believe that slowly the multiples will start trending between 16 to 20 times, and that will be the fair multiple where probably people would like to buy them for buybacks or for dividend or for different line of business. So it will be a multiple which will be assigned to the high cash flow generation and not to the substantially to the earnings growth.
By the way, sorry, unrelated to IT, but do you have a view on Ixigo, Sandeep?
Yeah, again, platform business. I will not comment on particular company because we run a PMS, but we love most of the platform companies. But also remember, in platform companies, there is one challenge that which space it is, that is very important. Number one. Number two, also how long it will take to make a material impact on the earnings. That is very important. While in many of the platform companies, they have started becoming profitable. The good part is that the whole ecosystem has become very rational. Now people are believing in turning profitable rather than just burning money. So I think very good times for most of the platforms. We see huge growth opportunity in all the platforms, most of the platforms where management quality is good. And I honestly believe that this is the space, platform is the space which investors should start looking for next 5-10 year perspective, because this is a space where we will be able to sweat. See, what has happened in big tech in US is that they are sweating the capital in the most optimum way through this big tech. So in India, the biggest resource is the manpower. So all these platforms in a way or other way, they are sweating the human resource, whether it is urban company or whether it is Zomato, whether it is Eternal, all are sweating the human resource. So this will be becoming very, very big for us. And we are very, very positive on the whole platform space. But obviously, based on valuation and other things, we buy or we will invest. That is a separate thing. But we love the platform space.
Okay, Sandeep, thank you very much for that. Ixigo too started trade lower, but it's managed to recover close to about 2% from the day's low and now is flat, 311 on late revenues. Tech versus the preferential issue, which is happening, is 280, and the stock is up 85% since the start of the year, very close to its 52-week high. We also had a chat with Alok Bajpai on the stake sale that they're doing to Process and the company's timeline for deploying the capital that they will receive.
We've got this intent a couple of days back, and the board has approved it this morning. And I think we essentially welcome an investor who has such deep experience, not just in technology but also being AI first in their thinking across the investments that they have made across the world as well as in India. So I think it's an investor whom we really respect, and therefore we did proceed with the primary transaction. At this point, we don't have any further information on the secondary transaction. They do have the right to appoint a member to the board so long as their holding remains above 10%. We have a timeline of next 2.5 years in terms of how we are thinking of deploying this. Most of the objects, we will utilize them up to December 31st, 2028 or March 31st, 2028. Now, the split of the utilization is as follows. Like 1 quarter is actually for organic, which I mentioned will be supporting our AI-led reinvention strategy, which is our disruption pod on AI. where we are working on some agentic AI capabilities, which will be more multimodal, conversational, hyper-personalized, preemptive, proactive, and which can act on your behalf. So that's one of the areas where we are doubling down on, and we will definitely not be shy of making further investments into.
Welcome back. Let's talk about stocks now. Hormus is now joining in, putting the spotlight on the top movers in the market. Hormus.
Some interesting movers that are emerging in the broader markets today. The banking names are the ones that are making a lot of noise, and South Indian Bank is one stock that has sprung up on the list of gainers within the small cap space, and 9.5% higher now on the stock. Is the biggest single day gain that you've seen since March of last year. The stock has moved in 7 out of the last 8 trading sessions. The volumes are already the highest since July of last year, and take a look at the volumes today. 9 crore shares of the stock have been traded already, and the 20-day average here is only 80 lakh shares, and it's done well for itself so far. South Indian Bank is up 35% in 2025, and it has delivered positive returns every year since the last 4 years, and it has also snapped a 5-day losing streak today, mind you. What has also done well today is Vishnu Prakash Punglia. After being smashed from its post-listing high, the stock is up 8% today, the biggest single day gain since July of last year. Volumes are the highest since December of 23, and we have had more than 1 crore shares of the stock that have been traded already. In the 20-day average here is only 17 lakh shares, but such has been the extent of the fall that the stock still remains below all of its key moving averages and also remains below its IPO price, which is 99 rupees, and currently trades at around 96. Now, and the underperformance has been such that the stock, barring October, has declined every single month since the start of April, and it is only because of this move that the stock has turned positive for the month of October as well. What's done well today is Jindal Photo. It did well yesterday. It continues to do well today as well. 6th day of gains now for the stock. 10% today as well after the 20% move since yesterday. The 37% the stock has moved in the last 6 sessions, and today's volumes have crossed yesterday's volumes. Yesterday's volumes were anywhere around 80,000 shares. Today we have had close to 3 lakh shares that have been traded on Jindal Photo. The 20-day average here is only 9,000 shares, and the stock has done well the month of October, up 37% so far, and in these very few trading sessions, October has already become the best month of the year for Jindal Photo.
All right, Hormus, thank you very much for that interesting list of stocks. Lesser talked about, but really making some moves. Shibani Sarkar Korean is with us, Head of Equity Research and Fund Manager at Kotak Mahindra Asset Management Company. She's our Alpha Manager of the day. Shibani, welcome to the program. Before I come to you, I just want to make a quick mention of what I think is a bit of a proxy to, it's like a proxy stock to hopes of US-India trade deal, rising or diminishing. I'm talking about Gokuldas exports. If you can have that stock up, I think about 8-9% as we speak, almost close to about 800 rupees. It basically was, it got smashed from 1200 to almost 720 or so. And today it is up 8.5%. Overnight phone call, that comment from Secretary Besant, and hopefully something, right? We'll see. But Shibani, as a fund manager, and we've heard this, right? Markets have not gone anywhere, but nothing is cheap. But you've got, event-related damage in Gokul, something like a Gokuldas, not just Gokuldas, KPR, bunch of other textile names. Is there an area, if it's a matter of time before it gets resolved, and you've got some comfort because of the event-related damage, do you think these are stocks, ideas that one should look at?
Yeah, hi Prashant. So of course, what's happening as far as trade and tariffs go, this is a period of uncertainty. Very difficult to take a call as to when this sorts out and in what form it sorts out. So therefore, from our portfolio perspective, what we have been trying to do is focus more on the domestic facing sectors where clearly there is a demand driver in terms of the policy push that we've seen, especially where discretionary consumption is concerned. Also look at sectors and spaces where valuations are still favorable, but there is upside in terms of earnings. So in that context, the few sectors that we have been positive on include the entire consumption pack, especially the discretionary consumption, which includes durables, autos, retail, and the like. We've also been positive on banks. We believe that while Q2 will be a muted quarter as far as banks are concerned, valuations are in favor, and Q2 should be a bottom as far as the margin pressure where the banks are concerned. So net from a portfolio construct perspective, like you mentioned, Valuations are still not cheap, but in pockets, especially where large caps are concerned, we believe that valuations have become reasonable and therefore tilt our portfolio from a risk reward perspective towards large caps and select mid caps. And within sectors, segments such as consumption, banks, and pockets of healthcare. That's how we are positioned.
Shibani, hi, welcome to the show. If you have to just drill down a little bit in terms of the select mid caps within the portfolio, just give us a sense in terms of the sectors, the type of stocks that you would probably be looking at.
So if you look at the mid-cap basket as a whole, valuations for the mid-cap space still continue to be above long-term averages. However, what we have noticed is that the earnings growth trajectory for mid-caps, again as a basket, have been performing better than the rest of the market, and therefore there is earnings support. So within the segment, like I said, fairly stock specific, more bottom up in nature. The discretionary consumption pack, parts of industrials, for example, where we see, again, earnings growth pick up. So it's pretty much stock specific as far as mid caps go. But at a headline level, we still believe that risk reward is more favorable for large caps. We would slightly be underweight on mid caps and underweight small caps as far as a portfolio construct and asset allocation goes.
Shibani, is it time to take a real look at technology names? I mean, even a conservative company like TCS realizes that perhaps organic growth is going to be very moderate, and now they are planning to be more efficient, a sharper focus on the capital that they own. And they just seem a little more aggressive, willing to, make some bets. We'll have to see how it plays out. But, given the intent, would you bet on technology names now?
So technology is a sector that we are closely watching out for. Of course, the sector has seen significant amount of turbulence, both in terms of demand coming off, as well as the narrative on the AI, which would possibly change dynamics for the sector. Our thought on technology is twofold. One, in the near term, there will still be macro challenges that the sector will have to face. However, as we were discussing, if there is a trigger that comes through in terms of a trade deal or a settlement on the tariff front, then there would be some amount of certainty or some amount of that turbulence possibly coming to an end. Secondly, of course, US macro and how the overall global demand pans out is important for the sector. Having said that, from an AI perspective, if you look at a slightly medium to longer term trajectory, our belief here is that Indian IT companies would possibly benefit with the transition and adoption of AI, especially at an enterprise level, where we believe that the amount of work that can come the way of Indian IT services players can go up meaningfully as more and more enterprises shift data to the cloud and also focus on getting their data arranged so that they can actually take advantage of AI. So structurally, we believe that IT players will continue to reskill their workforce to gain a part of this opportunity set that's coming along from an AI adoption perspective. Near term, of course, earnings are likely to be muted, and therefore that's the challenge for the sector. Here again, valuations have become fairly reasonable in context of its history, but until and unless growth comes back or there are signs of revival on growth, it is likely that the sector muddles through. But clearly, this is a sector that we will keep a close watch on. As and when things start to improve from a macro perspective, especially where US is concerned, or there is some stability or a trigger in terms of the tariff issue settling down, then this is a sector that can benefit.
Okay, all right. Well, Shibani, just wanted your thoughts in terms of the consumption space. We did see a couple of these companies come out with their Q2 updates. And let's in fact start with Titan, which surprised the street. The stock was up 3 to 4%. The street liked what it saw. And this is despite, gold prices being where they are. Would you be a buyer of Titan at these levels?
Unfortunately, cannot talk about a particular stock.
On a sector basis.
On the sector basis, this is a segment overall as far as discretionary consumption is concerned. We have been fairly positive. Of course, the impact of the various policy changes that have been made, starting from the budget with the income tax cut, along with the GST rationalization, as well as the policy rate cuts, will be seen in the subsequent quarters. However, the feel that we are getting in segments, for example, two-wheelers, four-wheelers, parts of durables, retail, A lot will also depend in terms of how commentary pans out in this quarter. Of course, this quarter will possibly, as I mentioned, will not see the full impact of these policy changes. But net-net, we believe that the environment is fairly supportive of growth and demand. And therefore, consumption as a basket, especially discretionary consumption across various pockets, as I mentioned, should benefit. Some amount of that has also already been factored in terms of stock prices. But overall, what we believe is that in pockets, valuations are still fairly reasonable. And as earnings come through with growth and demand, especially going into the festive season and beyond, this is a sector that we remain fairly positive on.
Thank you, Shibani, for joining in. Let's now get a handle on what's happening in the futures and options space. Sudarshan now joins in.
So as expected, we are seeing a huge short covering, and you are seeing that Nifty is trying to hold to the levels around 25,300. And today the major support is coming from the auto and pharma pack. Most of the pharma names are higher after US Senate has approved Biosecure Act. Nifty Bank is trying to hold levels around 56,700, and that's one of the major support levels that Nifty Bank is facing. If you look at the put-call ratio, it's currently at 1.36 versus previous day's close of 1.06. So what does it indicate? It's indicating that there is a huge put writing that's happening at some of the levels like 25,300, 25,200. You see a huge increase in the open interest, but at the same time, there's a sharp fall in the premium. 25,300 put, premium is down to 54 from the level of 136. 25,250 put, 39 versus 105. So support for Nifty is now around 25,150 to 25,200. Now look at the call options. 25,300 premium has risen to 110 from 47, and 25,500 call option. For that also premium has doubled to 22 versus 10. So support, as I told you, 25,150 to 25,200. Resistance has now moved higher, and that's in the range of 25,450 to 25,500. For Nifty Bank, support remains around 56,000, and resistance will be 57,200. Some of the stocks that are seeing fresh longs. First one is PG Electroplast. For the second straight day, it's up in the trade. In the last 2 days, it's up almost 7 to 8%. Divi's Labs seeing a fresh launch after the US Senate's approval to Biosecure Act, and also Cipla, it's amongst top Nifty gainers. Short covering candidates, KFIN, CDSL, after all the exchange names like MCX, BSE have been moving higher. Now these two names also have started seeing short covering, and one stock from the banking space, that's Bandhan Bank, that is also seeing short covering.
Okay. All right, Sudarshan, thanks very much for that. So a long list of stocks there coming in on the F&O space. I need to take a short break with the news that the Bank Nifty is holding up with a gain of around 391 odd points. So no troubles coming in there. Just watch out for stocks such as Ola Electric from the broader markets. That stock is down around 7.7% for the entire week. And even NetWeb has seen a significant amount of profit booking. Remember, it's a rank outperformer, but now down around 6.8% or 6.5% this week. Well, we'll take a short break, but as always, we'll get you a check on what dealing rooms are saying in our segment, The Street Chatter, and get you by today's Sell Tomorrow calls from our technical experts. Stay tuned.
100 points on the Nifty, 25,284. So basically, gains have plateaued out from the morning. I mean, there was that big flourish of an open and then a bit of move higher. But from mid-afternoon, it's kind of flatlined and around the same kind of levels. Well, let's talk about D-Street chatter. Nimish is with us with what he's picking up. Nimish, if you made a phone call after that Nobel Prize announcement, has that come up in conversation on a lighter note?
Not really, Prashant. So, again, from a market point of view, another strong day for the market. And I've been hinting for the last couple of days that there is an element of short covering, and that's playing out in today's market as well. A lot of the F&O stocks which are buzzing in trade has an element of short covering in today's market. And thankfully, it's backed by some bit of domestic buying as well. It's showing up in the institutional data as well for the last many days. The DIs are aggressive buyers. So that's playing out on the Nifty and on the broader markets as well. Technically, a close about the current levels of 25 to 250, 25, 300 levels can actually trigger a further short covering rally. Remember, even after the last few days of rally, the FIs are still net short on the Nifty of more than 90%. So there is still a powerful short covering rally, which is likely once the technical levels of 25, 300 is taken out. So that's overall feedback. From a sector perspective, clearly real estate stands out, and so is banking as well. Real estate was part of my chatter as well. There are some signs of buying as well from domestic funds into select real estate names. And remember, even for real estate stocks, there is a very strong element of a short covering rally as well. A lot of the stocks are in F&O now. Pharma is the other space which has done well today, largely the CDMO plays. But again, the seat seems to be a bit divided on how much to play the CDMO players only on this Biosecure Act. But from a directional point of view, a powerful short covering rally is already playing out. And there could be potentially furthermore if this technical level of 25,300 gets taken out on the upside.
This buying as well, right? I mean, yesterday also some 1,300 crores in cash buying. So that part, that selling is also stopped. Along with that, there's a lot of shorts in the system, as you said. In terms of stocks, Nimesh, what's on your list?
So the first on my list is Federal Bank. For the last couple of days, there is delivery-based buying happening in Federal Bank. The stock is buzzing as well. I understand a leading domestic mutual fund is an active buyer of late. And also for Federal Bank, there is a buzz of a corporate development coming very soon. So that's a trigger there. The second stock is Cipla. Part of the pharma basket has done well today, but for Cipla, there is a very strong indication that maybe you're going to see a potential global tie-up for one of the large molecules very soon. So that could be a big trigger as far as Cipla is concerned. The third stock is Ixigo Heavy. Institution-owned stock, nearly 15-16% is owned by FIs and DIs. For the last couple of days, the delivery volumes are quite high. And for Ixigo, the next big trigger is the monetization of one of the global assets. So that's something to track in that particular name. And the last stock is Thomas Cook. Been consolidating in the last couple of days, but I understand one leading AIF is an active seller. It looks like that last leg of the selling could be over in the next few days. So that could be the potential trigger as far as Thomas Cook is concerned.
Okay, all right, Nimish, thanks very much for that. Cipla, in fact, hasn't done much this year. It's up only around 2% but it's gained around 3% now, or close to 4% this month itself. Mitesh Thakkar now joins in to tell us what to buy or sell today for a reverse trade tomorrow. Mitesh, over to you.
Yeah. Can you hear me?
Yes, go ahead.
So I have a BTST on PG Electroparts. I think that's a stock which has been buzzing and has done well given some kind of a reversal. BTST here with a stop at 580 for targets of 594, and IndusInd Bank is the other stock on the list. That's a BTST with a stop at 756 for targets of 774.
Okay, all right, Mitesh, thanks very much for that. Well, let's get to one of the other big stories of the day, and that's definitely what's taking place with the entire CDMO space. Well, the news is that, and Macquarie had come out with a note earlier, where the amended version of the US Biosecure Act has been passed by the US Senate. However, that is now going to go to the House and then it's going to get a final sign-off from President Trump as well. Now, companies have said that the passing of the US Biosecure Act is going to provide further fillip when it comes to the China +1 factor. So companies, however, have already been benefiting from the China +1 factor. So, for example, companies have been seeing conversations with large pharma companies in the past 12 months odd. And companies that weren't even considering India are now looking at India for business. But they're looking at India for business at a very small scale. So, for example, they're looking at India for business when it comes to, say, sorry about that. When they're looking at India for business when it comes to, say, around $100,000 to $200,000 in terms of sales, but that could probably grow in the next 4 to 5 years. However, the final version of this particular law has to be reconciled and signed off by the president. And analysts are a little cautious about the fact that the Chinese biotech company WuXi has not figured in this list. So because of that, maybe there could be a dilution in terms of the opportunity for Indian companies, but that will be something that only time will tell, and we'll probably have to go along and see. But as of now, positive for the likes of Loris, as well as Blue Jet Healthcare, Divi's Labs, Syngene, all of them are in focus.
Okay, thank you very much for explaining that. The other big story has been the relentless rise that we've seen in precious metals. In fact, you can call it a frenzy in the silver market, with silver ETFs trading at a huge premium. Earlier today, we spoke with Nilesh Shah of Kotak Mutual Fund, and they have temporarily suspended contribution into the silver fund of funds. Listen in to the rationale behind this.
Physical silver is in shortages either due to short covering or because of festival season demand. We have silver ETF as well as silver ETF fund of fund. Now, in silver ETF being a listed security, there's no provision for suspension. But today, if an investor buys silver ETF or buys silver ETF fund of fund, they will be paying about 10% premium based on yesterday's NAV. We think that's a reasonably high premium. And while we remain bullish silver as an asset class, this kind of premium is a bit on the higher side. So we have taken a call to suspend subscription in our silver ETF fund of fund. The SIP and redemptions will continue. We will be able to procure physical silver, albeit at some premium, for whatever SIP flows comes to our fund of fund.
Okay, that's the view coming in from Nilesh Shah. Mayuresh Joshi of William O'Neill is now joining in. We've got about 10 minutes to go for trade. And the Nifty is currently still hovering with a gain of about 0.5%, but it's not built above 25,300 as we speak, just a bit shy. Mayuresh, wanted to get your thoughts in on Ixigo or late Travenues Tech. 10% process gets in, they have an option perhaps, or they might look to if they want to buy in the secondary market and increase their stake from the 10 to 16%. And process is doing a lot of work in AI. What does this mean for a company like Ixigo?
Afternoon, Rima. I think the opportunities are pretty huge and large because I think in spite of competition, I think the space itself has huge demand drivers over the next few quarters and years. And therefore, I think being a leading platform-based company within the space that they operate out of, they obviously have got the advantage. And obviously, I was hearing snippets of the management chat that you probably had. They seem to be very, very aggressive in terms of using the agentic AI agents in terms of incorporating them in terms of their systems and processes as well. And if they're able to do that successfully, which they have so far, I think it reduces the operational costs significantly. I know a few unlisted companies who are probably using that within the same space itself, not entirely in the domain that Ixigo probably operates out of, but because of tech, they've achieved scale as well as they've achieved cost efficiencies. At the same time, I think with expectations of competition, how does that brew? I think it takes a sufficient amount of time and cost to probably ensure profitability for running such platforms. So I think the future probably looks bright. Whether you get into the stock right now, I think numbers will do the talking. Our own sense is that pullback onto the stock is a better option and a viability.
Mayuresh, coming back with more questions, have to take a quick commercial break here with news that we are still sort of sticking with that 100-point gain on the index, 25,284. So stay with us. We are back in just a bit.
Welcome back. Well, for the Bank Nifty, it's holding up well, so up around 420 odd points. We have stocks such as South Indian Bank, which have done very well today, not a part of the Bank Nifty, but nonetheless, it's up around 10 odd percent at this point. It's gained 15% this week, so good going for that one. Even Yes Bank is up around 10 odd percent this week, so done well for Yes Bank. Talking about a couple of other stocks, even Marksons from the pharmaceutical space has gained around 10 odd percent. So good gains coming in on these specific stocks from the broader markets. Mayuresh, your thoughts on, South Indian, Yes Bank, what they could be reporting this quarter?
Afternoon, Ekta. No, I think relatively, earnings pain should bottom out as far as CASA deterioration is concerned, specifically for either the large or the mid-sized private sector banks. Also, the NIM compression that we've probably seen transpire over the last few months and the last few weeks in particular. I think that should largely be behind us as well. And therefore, I think there should be better reporting of numbers that should start coming through. Obviously, I think how advances growth probably happens, and more specifically, how do deposits probably grow in an environment where interest rate cuts have probably now happened, is something to be watched out for. So remain selective but constructive onto this space. I think our pick specifically within the mid-sized private banks might be something like a Karur Vysya Bank as an example, or CSB Bank.
Mayuresh, is the street getting too excited about Tata Communications and how it can benefit from TCS's data center play? Because it is going to be very gradual. 1 gigawatt capacity comes on stream only 5 to 7 years later. They begin with 150 megawatts. And as Sandeep was saying, we need to see there is a lot of supply also coming on stream. So the competitiveness of this infrastructure build out needs to be watched, how they can manage to execute that. So, I mean, the street's getting very excited about Tata Com.
Absolutely. I think you have seen a sentimental reaction, Riva, in terms of how the stock has probably moved. But again, I think in terms of their presentation that they put forth and the data packs that they probably release after every quarter's numbers, I think the expectations that they're largely building in, specifically in terms of their data revenues, which still account for a huge chunk, more than 80, 83, 84 odd percent as we speak, they're expecting to scale that up to almost 28,000 crores. As we exit FY28. And that's going to be incrementally led by a lot of initiatives that they're probably doing internally. What they've also targeted is EBITDA margins, which are around 19% right now, exit FY25, to be around 23 to 25% at the higher end of that band, with ROCs actually touching 25 odd percent. So whether they're able to achieve that, the kind of initiatives that they've probably taken in terms of all these aspects together is something to be watched out for. Obviously, I think two important aspects and elements in terms of their growth going forward as well is also going to be dependent on the strategic bets that they probably take. And therefore, I think monetization of other assets that they've probably got, the cloud fabric, the interaction fabric, the Bio AI cloud that they're probably getting into, is something to be seen. The only risk factor to watch out for is whether earnings get delayed in terms of their quest for these targets and the contingent AGR dues that still exist on their balance sheet.
Got that, Mayuresh. BSE is up 14% this week. And by the way, the capital markets index is up 5% this week. Your picks out of the space?
Afternoon, Prashant. So I think selective here again. We probably like asset management companies. HDFC Asset Management is an example that we are holding on to the stock in our global portfolios. Our sense is that the incremental additions that are probably happening in terms of SIPs, even though they might just plateau a tad bit over the last few months, are still continuing at a strong pace and would continue doing so over the next few months, next few years as well, which gives them a huge lead in terms of not just having a sufficient AUM as far as the equity portion is concerned, but even the cost optimization, which has largely happened. So asset managers as one space is something where ratings, rankings, institutional holding, the stuff that we see in Cancelim probably exists. On the exchanges itself, again, MCX a tad bit better placed, in our opinion. The optionalities that probably exist today in terms of gold, silver contracts, the expectations in terms of more contracts being added, institutional participation actually being infused as well through various means. And the mix that they probably got in terms of natural gas, crude, gold, silver, and the volatility that might still persist along all these commodities might actually hold this stock in a better stead compared to a piece.
I think we'll, Mayuresh, thank you very much for joining us. Appreciate your time here. Go have a good weekend. We'll see you back again soon. I think we'll just quickly wrap up things. 100 points in the Nifty and roughly 1.6 odd % for the Nifty for the week. Bank Nifty up about around that much. I think the mid-cap index and the small-cap indices between 1 3/4 and 2% higher. So all in all, a pretty decent week coming through. As I said, the capital markets index, the big winner. But that is not the only one. You had IT, of course. I mean, who can forget IT? 5%, by the way, on the IT index. Large cap IT stocks all up 4-5%. Healthcare, and that's hospitals, by the way. Fortis, Max Health, etc. So the index showed up with a 3% gain by close, and the real estate index with about a 2 1/3% gain as well. So that's the picture as far as markets are concerned. That is the weekly tally that I'm referring to. Well, I think we're going to take your leave. Thank you very much for staying with us here on Closing Bell. From the entire team, goodbye. But don't go anywhere because Editors Roundtable comes up next in just a bit.
The Wall Street gains for the second straight week to post its biggest weekly gain in 3 months. All frontline indices gained close to about 2%, with IT stocks leading the up move. In this week's edition of Editors Roundtable, we'll decode the week on the Wall Street. We'll tell you what to expect from the earnings season in Q2. We'll put the spotlight on the pharmaceutical stocks. I am Reema. With me are Nimesh, Prashant and Ekta joining in. And also joining us today, not in the studio, but we've got Sandeep Tandon, founder and CIO at Quant Mutual Fund. Hi guys, how do you feel?
I think the big news of the week came in the last hour of trading on Friday. Guess what?
Nobel Prize.
Nobel Prize?
Not to Donald Trump.
And it's not gone to Donald Trump.
So I think, I maybe say at the outset, I think today evening will be interesting and the weekend will be interesting.
Yeah.
With
We all hope for peace.
a lot of truths, being revealed in that sense. But markets were, I think,
I would say pink of health.
Absolutely, right? I mean,
IPOs, pink of health, the color as well. So. But no, so in a way, it's a good market, right? I mean, this week we saw a bit of momentum in the broader markets. Nifty is also up, a bit of short covering as well. The FI selling is reduced to a larger extent. DIs have been buying the market. So it's a feel-good market, so to speak. And now there's an anticipation that maybe you're going to see that finally deal with the US. If that has to happen, if that has to happen, then there is still a room for an aggressive short covering rally because on the Nifty, the FIs are still stored more than 90%. So, aggressive FI positioning on the short side, things changing at the margin, earnings so far, it's not been a disaster to start with. So, let's see how it goes. But
have there been some
market.
Nifty Diwali targets which have already come in?
I don't think people have started talking about Diwali targets and Diwali picks and all. I mean, last 3-4 years, every week or maybe every month was a Diwali, right? And so much of momentum, so much of rally. So I think people have forgot that.
So if I have to list the positives this week, one, the Nifty and the mid-caps up 1.5%, 2%. IPOs, LG Electronics saw 4 lakh crore, and despite that, you're seeing FIs also buying in the Indian markets. 3 continuous days of FIs buying in the cash market, so that's a positive. The phone call between Trump and President Donald Trump.
About that, right?
Gold and silver, continuing with their
But
frenzied
that point
run.
that you made, LG, 4.5 lakh crores out of the market. Typically, what did we say? We said IPOs are sucking out liquidity.
Yeah.
But with 4 lakh crore out blocked, not in the market.
And we still did well, and the FIs are also buying.
And this money will come back next week.
It's going to come back.
So imagine.
But let me just quickly, wrap up things in terms of what the week looked like. So Nifty 1.6% higher, Bank Nifty 1.8, Midcap 2%, Small Cap 1.5%. Sectorally, the IT index was up 5%. Healthcare was up 3%. Hospitals, by the way, right? Max, Fortis, etc. Real estate was up 2.3% as well. Large cap IT stocks, Infosys, TCS, Tech Mahindra, 4 to 5% gains here. Eternal was 6% higher this week. In the broader market, and I look at the NSE 500 universe, Tata Com was up 16%, although 10% of that 16% came on Friday. PG Electroplus 14%. BSE was up 14%. So that's, of course, I mean, we've been reporting on over the last couple of days, a little bit of change in stance at the regulator in terms of what they're thinking perhaps is on derivatives. The consultation paper itself on weekly options and longer tenure derivatives, perhaps a little delayed now. Nykaa was up 10.5%, Divi's was up 10%, and a bunch of these smaller, not so small also, but Yes Bank was up 10%, Karur Vysya was up 8.5%, Federal Bank was up 8%. I mentioned, hospitals, Fortis 8, Max Health 8. Some cuts, but these are largely, a bit of small reversals, right? Tata Investment went up like a rocket, down 7. NetWeb has been a rocket for all this year, was down about 6.5% or so. So that is basically where we stand. Sandeep Tandon is with us. Maybe we can go across to him for a quick, just a broad view before. Okay, can we go across to Sandeep? Sandeep, hi. Can you hear me?
Yeah, I can hear you.
Hi. What's the view, Sandeep? We were talking about some factors this week and perhaps what's important next week. How are you feeling, and do you think there's more risk on here?
Hey, Prashant, frankly speaking, is definitely a risk on. The biggest important thing which for me is an inflection point, we believe that USD INR pair is on the verge of peaking out. Okay. And that's a very important statement which I'm making based on our analytics. We have talked about USD and right from 2012. In our 2019 book, we talked about heading towards 90. We are approaching there. We are in the fag end of that. And the way we have seen selling exhaustion on the FI side, and last 3-4 days, we have seen that has tapered down. Gold and silver also on the verge of peaking out from a medium-term perspective. I think background is more constructive for India equities. We have been underperforming both emerging market as well as developed markets. Sentiments has been extremely bearish. People have virtually given up. And most important thing, some visibility is coming on the trade-related challenges which we have seen. And plus the government initiative on the GST side, plus income tax and the interest rate also. So I think the background is more constructive for second half than what we have seen now. And hence we are 98% invested in the equities.
Hi, Sandeep. In fact, I remember last time when we spoke, you're among the very few who were expecting the pullback, and it's actually playing out, right? And as you rightly said, now there is a visibility of some sort of a deal with the US as well. Given that, how would you position the market for the second half? IT has not done well in the first half, Pharma has not done well, and all these export-oriented auto stocks as well. Is that a place now to look at, given that there could be some deal with the US around the corner?
I think the way I look at, yes, IT obviously it is now trading in a neglected zone. The only challenge is that still the triggers are missing. So it should not be high conviction trades. We can say we can go all out and build exposure. I think it'll be too premature, but from a bottom fishing perspective, answer is yes. Auto obviously it has done well, and I think it has potential to do further well. But key question comes whether everything is priced in for the just GST thing or not. So I'll be slightly skeptical in the auto also building at the current levels. Rather, I will say that background is getting more constructive for the PSUs. Okay, PSU banks in particular, in general PSU. That's a theme which we think we are liking it for last few weeks. That's a thesis which has potential to move up. Then we're talking about large infra space. Consumption is also pretty mixed. It's very difficult to pinpoint one particular sector or talk about it. But I think these are the larger theses. Hotel and hospitality has done extremely well. I think we as a house remain constructive on this space also. I think few things are very clearly visible. And I'm saying forget other thing. Broadly, it is constructive. And you look at the depth of the market also, I expect it to improve further from the current levels.
Sandeep, I know I just heard you talk about technology, that it's in the neglected zone. That's great for value buying, but it still lacks positive triggers. But wanted to get your thoughts in what TCS is now talking about. Now they've articulated their vision. They want to be the world's largest AI, a tech services play. And this was a company which was very conservative, very cautious. They never made any acquisitions. They deployed all their capital either in buybacks or skilling existing talent. And now they're looking to build out a 1 gigawatt data center capacity, AI data center capacity. They're going to be very aggressive on the acquisition front. The word was very aggressive on the acquisition front. So do you think the company's positioning, the body language from what they had to say has changed to some extent? And would you read that positively? Because, till a month back, we were complaining that these IT companies are so cash rich and all they're doing with the capital is deploying it in buybacks. And that's an unproductive use of capital. Now they're making some bets, in the AI ecosystem. We'll have to see how it plays out. They execute on that, what the competitive landscape looks like. But at least it's a start. Would you read are we reading too much into what TCS has announced?
Generally, we don't give comments on individual company, but in general, I think we are too late for that. Today, we all remember Vishal Sikka, okay? What step he was taking at that point of time, and he was criticized, and unfortunately, he has to leave. So if you really ask me, we as an Indian IT company has already lost that opportunity. So which was there. So I think it will take some time. Now, personal view is that if TCS or Infosys and of the companies for last few months are talking aggressively on those lines, when whole world has moved to the next level. So, and even including China, look at, there's no comparison between us and China now. They're way ahead. Okay. At some time, and maybe a few years back, India was way ahead in this space. I think we have lost that opportunity. My personal view is that it will take 4 to 6 years more to rebuild and then say that we are also exist in this space. So I think it will be too premature to get too excited to see these statements. Companies, some of these large companies are reacting very late on this particular front.
Rima, I just want to say one thing on that data center, which is the question, right? What TCS is doing is they're not saying that we're building a large language model or something.
No.
They're just doing a data center.
Yeah, the infrastructure.
Data center as a business, it's an AI data center, but the AI part is
very small.
It's going to be, the data center is essentially going to be offered to, as we discussed, to hyperscalers. So it's like any other data center, which is not...
the only benefit is that they have the...
Yeah,
but the benefit is that it's in the Tata ecosystem, right? Like Tatas have the land bank, they have energy solutions, cooling solutions which they can leverage, like Tata Communication.
No, my only point was
that's the benefit TCS enjoys.
For them,
right?
it may be there's a lot of benefits, synergies, etc. My only thing is, does it leapfrog them into this AI race suddenly? No, because it is a data center. I mean, at the end of the day, and so
and
that's
it's
the point.
It's a passive infrastructure. Yeah. The question is that does it eventually open up, for the company to get into active infrastructure?
No, to me,
but it depends.
The welcome thing is at least they're thinking in slightly different directions. And I thought personally, that statement which they made, right? I think this is for the first time they
articulated
that
that
ambition was very clear that we want to be the world's #1 leading IT services, AI IT services technology company. So, the fact that they want to stay a services company, which I think they are, but also but they want to be ahead and sort of, a leader in that space.
And even the hard decision to let go of people. Yeah. It's hard for a company like TCS or any Tata Group company to let go of 12,000 people, but they took that, and we asked Kriti, and he said, it's the right thing to do. It was the right thing to do. So if you take that also as a signaling mechanism.
Absolutely.
But, Street was not very excited. Stock was down.
You're getting prepared for the Q2 numbers?
So it's going to be a soft quarter. At the margin, it's going to be weak. But in that sense, it will be a bottom quarter because for the last 5 quarters, we've been reporting weak numbers. So there is a lot of hope that maybe this is the bottom quarter, and from here on, one should look upwards. In terms of numbers, for Nifty earnings, it's going to be around 6% for Q2 versus 11% in Q1. So clearly at the margin, it will look weak. Even in terms of margin, you'll probably see a 40 basis point improvement in the margins for the Nifty 50 companies. So that's kind of a number. Apart from numbers, for a lot of sectors like autos, discretionary, retail and everybody, it'll be more of the commentary than the actual numbers for Q2 because Q2 was impacted because of GST, because of monsoons and everything. So the commentary would be more important rather than the actual numbers per se. In terms of the overall for Nifty EPS, Kotak is expecting a FY26 number of 1,086 and for FY27 a Nifty EPS of around 1,284. So that's on the margin on what kind of EPS to expect for 25 and 26. Now coming to individual sectors, banking is a big sector for us, big weight as well. It's going to be a weak quarter, and on this weak quarter, there could be further EPS cuts as well for the banking sector overall. So that's something on the banking side. I spoke about staples and discretionary. Apart from earnings, it's more about the commentary that's going to be quite important for that particular sector. So for that matter, for autos as well, it's going to be mixed, but the commentary is going to be quite important with the GST rate cut and everything. Telecom is going to be a mixed quarter again, with the ARPU seeing a bit of improvement, but no fireworks there. Even in metals, it's going to be a weak quarter, so to speak, and especially for a stock like JSPL, it's going to report a weak quarter, so some individual impact will come. Even for cement, it's going to be mixed with a slightly negative bias. So, as I said, at the margin itself, it's showing that just a 6% growth would mean that there is no big fireworks as far as earnings are concerned. Citi also puts out a note, and they explicitly mention about few positive and negative surprises. So in terms of positive surprises, according to the Citi note, they're expecting a positive surprise from Britannia. They can report a revenue growth as well as improvement in the margins as well. So that could be a big surprise. Within the banks, Bob is something that they're expecting good asset quality, good names and credit cost control as well. So Bob could be a positive surprise. And so is delivery, which can surprise positively in terms of earnings. In terms of negative surprises in this quarter, M&M is likely to, according to Citi note, because of the weak mix, you might miss on the numbers for M&M. Even PI Industries is expected to report a weak number according to the Citi note, and UBA United Breweries also stands out in terms of expecting a weak quarter because of disruption, because of monsoon. So that's the overall number. Net, a weak quarter, but could be a bottom quarter for in Q2, and which can probably see a bit of a heads up as to what to expect in Q3 and Q4 on the back of the commentary. So that's the net overall summary of Q2, what to expect in this quarter.
If the expected surprises pan out, will Citi be surprised? Anyway, I just on a lighter note, but that's useful, Nimesh. Sandeep, you look at so much, so many, I know, hundreds of indicators, right? I mean, sentiment, price, etc. is only part of it. I want to just jump to the other big talking point, which is gold and silver. And what is your analysis telling you about those two from here?
Prashant, we have been constructive for a while, but the way we are seeing the noise level, the urgency to buy, everybody is talking about, so typically it happened closer to the peak, not of the long-term cycle, but from a medium-term perspective, we expect that gold is on the verge of peaking out, and so is the case with silver to follow. So if you ask me if you have a core holding from longer term perspective, you want to hold your trade, answer is yes, one should remain invested if you are a long term. But if you are keen to build your exposure from the current level, then I think it's not advisable. One should wait from both perspective. From a USD INR pair which is peaking out, and if that start correcting from the current level, start appreciating, and so if the case gold correct, then the impact in rupee terms, gold and silver will be more meaningful. And hence, I will, as a investor, I will hold my position. But if I am a trader, I will book my profit maybe on immediate basis. When I say immediate basis, this month itself, I like to cut down my exposure. Nobody can time it so perfectly virtually at the top, but we are getting those indication that the time has come to cut down your leverage exposure if you have any.
Okay. All right. Okay, all right. Well, on that note, we'll take a break. But up next, we'll decode some more of the market action. And we'll get you why the Pharma index, in fact, outperformed the Nifty on the other side. Stay tuned. Welcome back. Well, one particular sector which stood out this week was the entire pharmaceutical space. In fact, the Nifty Pharma was up around 2% as compared to the Nifty. Now, there were two things that took place which actually probably removed a little bit of an overhang for the pharmaceutical space. First was the Trump administration said that they are not actively discussing Section 232, which is basically discussing any kind of tariffs on anything that could impose a national threat to their security, which could probably also include the dependence that the US has on generic drugs as well as APIs. So the reason for that is it's a relief for Indian companies because, you know, Indian generic companies comprise of around 40 to 50% of the US formulations at this point in time. And the manufacturing cost is so low, it's around 1/5 or 1/8 of what the US is. And hence it's unviable for the US to actually impose those kind of tariffs because then it'll raise prices for them. And then maybe some generic companies will think it's unviable for them to manufacture. And then there'll be a shortage of drugs in the US potentially. So to avoid that threat, maybe, tariffs on generic pharma or APIs probably off the table. The second thing is that Macquarie has said that there's an amended version of the US Biosecure Act which has been passed by the US Senate. It's going to go to the House, it's going to get the final sign-off from the President as well. But nonetheless, it is something that the street was looking for. It's positive for all of the CDMO companies, but this time it could be a watered-down version. The likes of WuXi, which is this big Chinese biotech company, is probably not named in that Biosecure Act, and hence maybe the potential for Indian CDMOs might not be as much as the non-watered down version which named WuXi. So let's see, time will tell whether or not we do have that incremental opportunity coming in. But Sandeep, wanted your thoughts on this. How are you placed on, say, generic Indian pharma, the Suns and the Lupins of the world, vis-a-vis the CDMO plays such as Loris and Divi's?
Frankly speaking, if the generic was a no-brainer trade, I have been talking about for a while, and it has come true now. But the challenge is that even analyst community was waiting for everything to become in black and white. We have to understand that US has no option but to import from India, and keep in mind it's not easy that you can replace because you require USD approval plants and a lot of other hygiene factor which is required. And if I'm not wrong, even the Indian generic market share in volume terms is actually closer to 60%, which is a very, very large numbers. When one of the large company has single-handedly has around close to 13% market share, which means this is one area they will not like to invest and see whatever they have done on the branded and the formulation, the additional duties they have put, which also support the generic. If your consumption on these branded and formulation come down, and people will move towards generic. So generic is anyway beneficiary on the stuff which Trump has taken. So we remain very excited about this space, and that's the reason generic has been a significantly overweight in our portfolio for a while now.
Okay, Sandeep, thank you very much for joining us today. Next time, please do come to the studio. We missed you here in person.
Thanks a lot. Yeah, our SIF is going on, so we were tied up with that part. Okay, take care. Thank you.
Thank you very much.
Thank you.
Well, that brings us to a close in this edition of Editors Roundtable. Next week's a big one, guys. Earnings, full throttle.
Yeah, especially you'll be busy with IT numbers.
Lots of IT numbers, and it ends with Reliance Industries. Yeah.
And then the following week we have Diwali, right?
The following week is Diwali. Well, thank you very much for watching this show. Goodbye, and continue watching CNBC TV18 for more news and updates.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The bulls maintain the momentum on the Lal Street. The Sensex and the Nifty gained 2% this week after a strong close on Friday. This is the biggest weekly gain in the last 3 months. Prime Minister Modi speaks to President Trump for the second time in 3 weeks, congratulates him for the success of the Gaza peace plan, reviews the progress on the India-US trade talks. China imposes fresh restrictions on rare earth magnets ahead of the potential meeting between President Xi and President Trump. Industry sources say curbs have been imposed on the export of certain electric vehicle technologies as well, restrictions to kick in from the 8th of November. The board of Tata Trust get into a huddle after an internal rift became public. Sources say the board meeting is going on smoothly. The agenda for the huddle is the disbursement of about 1,000 crore rupees for philanthropic activities. It has nothing to do with the current rift. For the first time, the government opens the position of Managing Director at State Bank of India to the private sector. Candidates with 21 years of professional experience, including 15 years in banking, will be eligible. Private equity firm Process buys a 10% stake in travel portal Ixigo's parent for nearly 1,300 crore rupees. Ixigo to use the funds for expansion and artificial intelligence. Israeli forces begin to withdraw from parts of Gaza after the ceasefire takes effect. Hamas has 72 hours after Israel's withdrawal to release hostages. The US military is likely to deploy 200 soldiers to oversee the ceasefire. President Trump's relentless campaign for the Nobel Peace Prize ends in disappointment. Venezuelan opposition leader Maria Corina Machado, who is currently in hiding, has been awarded the Nobel. The committee's citation says when authoritarians seize power, it is crucial to recognize courageous defenders of freedom who rise and resist. India and Afghanistan pledge to fight terrorism together as Afghanistan's foreign minister visits New Delhi. India will upgrade its technical mission in Kabul into a full-fledged embassy. Pressure cooker pioneer and the man behind the iconic prestige brand T.T. Jagannathan passes away at the age of 82. He revolutionized the cooker market by introducing the gasket release system, a safety innovation that made Prestige a household brand in India. And a giant of a man, T.T. Jagannathan there. But let's start with the day's market action. The Lal Street extended yesterday's gains. Nifty ended nearly at a one-month high, led by pharma and financials. For the week, the market gained for the second straight week. That's the Nifty for you, up by about 0.5%. Similar gains for the Sensex as well. For the week, 1.5% higher for both the Nifty and the Sensex, and the Midcap index up by about 2%. This is the biggest weekly gain that we've seen in the last 3 months. All frontline indices posting gains. Their capital market and IT stocks also gained 5% each. But staying with equity markets, gold ETFs have seen a strong surge in demand in September, receiving record high inflows. Investments rose over 280% compared to last month. Inflows into SIPs climbed to an all-time high. SIP inflows rising 4%. However, net inflows into equity mutual funds declined for a second consecutive month, dropping 9% from the previous month. In the commodities market, gold prices down below the $4,000 mark for the first time since breaching the milestone earlier this week. This as the dollar strengthened and investors booked profits after Israel and Hamas agreed to a ceasefire deal. Meanwhile, silver rose above the $50 mark for the first time. Momentum in the gold market, strong investment demand and a persistent supply deficit is continuing to support prices. Prime Minister Modi and US President Donald Trump held a telephonic conversation for the second time in 3 weeks. This announced on a post on X. Prime Minister Modi said that he congratulated President Trump on the success of the Gaza peace plan. He also said the two leaders reviewed the good progress achieved in trade negotiations between India and the US and agreed to stay in close touch over the coming weeks. Trump had earlier dialed the Prime Minister on the eve of his birthday. It was the first direct conversation between the two leaders since the Trump administration imposed 50% tariffs on Indian exports. US Treasury Secretary Scott Bessent expects India to buy less Russian oil and pivot its energy imports to the US. In an interview with Fox News, Bessent said that both India and China have played a big role in sustaining Russia's war against Ukraine through continued oil purchases. Take a look.
We're doing a lot on Russia, but the real culprits here have been the China and India in terms of buying Russian oil. They are keeping the Russian war machine going, and we put a 25% Russian oil tariff on India. And I think soon we're going to see a rebalancing where they're buying less Russian oil, more American oil. And if we were to do the same thing on China, I think the war would end quickly, but we need our NATO or European allies to join us. It's my strong belief that India is going to start rebalancing over the next few weeks and months, and we will see a diminishment of Russian oil in favor of U.S. oil.
Well, that is the U.S. Treasury Secretary there, and the U.S. Ambassador to India, Sergio Gore, and Deputy Secretary Michael Regas will be in India on a 6-day visit later this week. They are expected to meet Indian government officials to discuss bilateral issues. In a statement, the U.S. State Department said the U.S. will continue to work with India to strengthen our strategic partnership and promote a safer, stronger Indo-Pacific region. The 38-year-old Gore, a close aide of Trump, is the youngest ever U.S. ambassador to India. Indian pharma stocks surging today after the U.S. Senate approved the Biosecure Act. The act will prohibit federal funding for Chinese biotech companies, thereby potentially benefiting Indian pharma companies. However, the bill still needs to pass through the House of Representatives and receive presidential approval to become a law. The U.S. Embassy in India has clarified that the country did not supply any missiles to Pakistan. This has come after reports suggested that the Trump administration allegedly sold missiles to Islamabad. In a statement, the U.S. Embassy said the Department of War released a list of standard contract announcements which referred to an amendment to an existing foreign military sales contract. The embassy further clarified that no part of the contract modification for deliveries of new advanced medium-range air-to-air missiles were done to Pakistan. Now, the board of Tata Trust is in a meeting after an internal rift became public, though this board meeting has nothing to do with the current rift. The board meeting is going on smoothly. The agenda for the huddle is a disbursement of around 1,000 crore rupees for philanthropic activities. Santya joins us now from outside Taj Hotel in Mumbai, where the Tata Trust board is meeting. Santya, we saw some visuals there of trustees like Venu Srinivasan exiting. What do you know? Or what's going on?
So, Shireen, the meeting started at 10 in the morning, and as you mentioned, that the meeting really didn't have anything to do with various contentious issues the group is facing, but it was actually about allocation of healthcare and disbursement of funding to various philanthropic projects. And for the same, various groups, including some NGO groups as well, were present, and they gave their respective presentations to the board members who were to decide the disbursement of these fundings. At around 3:30, Venu Srinivasan left. The meeting actually took place in 3 phases. The first phase was over by around 11:30 in the morning, and the remaining 2 phases started after that. As of now, from what we are hearing so far, the meeting is going on smoothly as expected, because largely anything contentious was not on the agenda for this meeting, Shireen, especially nothing related to the meeting which took place in Delhi on this Tuesday, which was, which was actually led by Union Minister Amit Shah, or Union Home Minister Amit Shah, and in fact the FM was also present in the meeting. Today's Tata Trust meeting was largely about healthcare allocation and philanthropic projects and their fundings. Shri.
All right, Santya, many thanks for joining us at the Trust's meeting there in Mumbai. Shares of IT major TCS under pressure, although its second quarter performance surpassed expectations. The company also announced plans to build 1 gigawatt capacity at its AI data center. The IT major's headcount has fallen below the 6 lakh mark for the first time in over 3 years in Q2. TCS says the workforce changes are being driven by growth and not cost cutting. Speaking to CNBC-TV18, TCS CEO K. Krithivasan said the company is advancing its plans to become the world's largest AI-led tech services player via internal investments, workforce expansion and acquisitions. Take a look.
We have to take this ambitious journey and be the largest AI-led services company. Currently, we are looking at about $1 billion, but just to clarify, we will be looking, this will come as equity and debt.
This $1 billion?
1 billion. So my rule of thumb, like what I had is roughly 150 megawatts is $1 billion.
Okay.
Okay, so we are talking about 5 to 7 billion, but I'm not going to be investing all 5-7 billion year on. So it is going to be a 5 to 7 year exercise. We'll do first, what we intend to do now is establish a capacity of 150 megawatt to start with. Which would start in about 18 months' time, by which we should be operational.
Well, that's TCS's K. Krithivasan there on their AI plans. Workspace provider WeWork India making a muted debut on the Lal Street. The stock debuted at 650 rupees a share, almost flat compared to its issue price of 648 rupees. The issue was fully subscribed only on the final day of subscription, with institutional investors leading the demand. It's been a busy week for the primary market, and LG Electronics India rounded it off by garnering record bids. Crossed 4 lakh crores, the most for any Indian IPO. Hormuz is here to tell us more about what other records LG achieved during its IPO. Hormuz.
I've been talking about the frenzy in the IPO markets, but a couple of listings in the past, we've been highlighting those that fell almost 30-40% from their issue price as well. But then comes an IPO like LG, and that shows you the other side of the IPO market as well, the kind of frenzy that the IPO received. The bidding closed for a subscription on Thursday, and it received bids worth over 4 lakh crore rupees, and it became the first such Indian IPO to receive that kind of bids, and easily outbidding Bajaj Housing Finance, which IPO'd last year and had received bids worth over 3.2 lakh crore rupees. Now, the subscription was led by the institutional investors, which aggressively bid for the IPO, and on the final day of the bidding, their portion was subscribed 161 times compared to the total number of shares on offer. They had only 2 crore shares, around about those reserved for them, and they placed bids for almost 338 crore shares. And the non-institutional and the retail portion also saw healthy subscriptions of over 20 times, and the retail portion was subscribed around about 3.5 times in comparison to the total number of shares on offer. But what this has also done is that it has made LG the most subscribed large Indian IPO, and by large I mean whose size is 10,000 crores or more. You take a look at that record was previously held by SBI Cards, and that was subscribed around 26 times, and LG has received almost double of that subscription, or 54 times at the close of bidding on Thursday. And you take a look at the other names as well, be it Swiggy, be it Hyundai. The sheer size of their IPOs has kept those subscription numbers subdued, but LG, despite the larger subscription size, saw very, very healthy subscription figures. And now all eyes on the listing that takes place next week, and it shows this entire week of IPOs has shown us both sides of the IPO market.
Well, Hormuz, many thanks. Ixigo's parent company has sold 10% stake in the travel platform to global tech investor Prosus for 1,300 crores. Prosus can appoint a director to Ixigo's board once the deal is complete. Ixigo has said the company plans to use the funds for acquisitions and to double down on the hotel segment. So that's a big deal there in the travel space. Private sector professionals will now be eligible to apply for senior leadership positions in public sector banks. This will include the position of managing director at State Bank of India. The revised guidelines will allow candidates with at least 21 years of professional experience, including 15 years in the banking sector. So big move there for PSBs. Relief for Vedanta. The Supreme Court has refused to hear a plea seeking the investigation into allegations raised by US-based short seller Viceroy. The petition alleges inaction by regulators SEBI and RBI, along with the Ministry of Corporate Affairs. The government argued that the petition looks motivated. The centre also argued it has become a modus operandi of overseas short sellers to release reports and engage in litigation. The Supreme Court has dismissed a PIL seeking a judicial probe into the deaths of children in Madhya Pradesh and Rajasthan allegedly linked to toxic cough syrups. The plea also sought stricter oversight of pharmaceutical products. The centre argued that the states of Tamil Nadu and Madhya Pradesh are taking the necessary steps. Up next, pressure cooker pioneer and the man behind the iconic prestige brand TT Jagannathan passes at the age of 82. We bring you his life story right after this. External Affairs Minister S. Jaishankar held bilateral talks with Taliban Minister Amir Khan Muttaqi in the national capital today. This is the first time a top Taliban leader has visited India since they returned to power in 2021. In a press conference, Minister Jaishankar said India is fully committed to the sovereignty, territorial integrity and independence of Afghanistan. He added that India will reopen its embassy in Kabul. President Trump's relentless campaign for the Nobel Peace Prize has ended in disappointment. 58-year-old Venezuelan opposition leader Maria Corina Machado, who's currently in hiding, has been awarded the Nobel. The Nobel Committee's citation said that when authoritarians seize power, it is crucial to recognize courageous defenders who rise and resist. Pressure cooker pioneer and the man behind the iconic Prestige pressure cooker, T.T. Jagannathan, passed away at the age of 82. He revolutionized the cooker market by introducing the gasket release system, a safety innovation that made Prestige a household brand in India. Mangala Malu spoke with Jagannathan a few years ago on his pioneering innovation.
In fact, I read a lot about the gasket release system, so I would like you to explain to me exactly what it is. And what is this story? Because it saved 1 million lives.
We found that we were not selling outside South. There was no market because there was something going wrong. So I decided to go find out what was going wrong. And discovered that I traveled UP extensively and discovered that our pressure cookers were known to burst.
Oh.
And the pressure cooker bursting is not is dangerous. It could even kill. And I went to one of our dealers in Lucknow and he showed me his store. He had dozens of Prestige pressure cookers that have burst. So we were losing market share because they don't buy Prestige, it'll burst. We had to find out, I couldn't believe that we made pressure cookers that burst because we were very good manufacturing, there's no question about that. So something else had to be the reason. So when I analyzed the reason, I found out it was a spurious safety block. A pressure cooker has a weight valve, which maintains the pressure, but sometimes it can get blocked. When it gets blocked, the safety device is supposed to open up and release the pressure. But safety device is made of a tin bismuth alloy, which is very expensive.
Okay.
So the spurious guys used to make it out of pure aluminum, which won't melt. And so when the weight valve gets blocked, the pressure cooker will burst. And when a Prestige pressure cooker bursts, it's very violent. And so people were just off pressure cookers. So, and the company would have gone bankrupt if we knew that. So what happened was, I put on my thinking, thank God I was an engineer.
The IIT cap.
IIT, I helped put on my thinking cap and came up with what is called the gasket release system.
Okay.
Actually, it's such a simple thing looking at it now that you wonder why nobody discovered it before. It's just a hole in the lid.
Okay.
But that hole in the lid, what it does is, it does not depend upon the safety plug for secondary safety. The gasket comes out through the hole in the lid and releases pressure if it exceeds cooking pressure.
You did not patent it?
No, it was in fact not a good idea to patent it for two reasons. One is that in the US this used to happen. Pressure cookers used to burst. So the US market went away from pressure cookers. That is something I wanted to avoid in India.
Okay.
And India is the largest market of pressure cookers in the world today.
Absolutely.
15 million pieces. If we'd allowed pressure cookers to burst, it wouldn't have happened. That was one. So I did not want pressure cookers to get a bad reputation. The second is, if a pressure cooker burst anywhere, everybody thought it was Prestige.
Okay.
So I had to avoid that conception also. So we came up with the idea that we won't patent it.
Well, an end of an era there with the passing of T.T. Jagannathan, giant of a man, as I pointed out, didn't patent that gasket release system because he wanted more companies to benefit from that smart innovation. With that, it is time for us to wrap up this edition of Business 360. More news and updates will continue right here on CNBC-TV18. From all of us, goodbye. Thanks for watching.
to Indianomics. The Reserve Bank is proposing to liberalize rules governing financing mergers and acquisitions. Currently, companies don't get bank loans, nor can they raise foreign loans to do acquisitions. These restrictions are going to end soon. Companies will soon be allowed to tap bank loans and foreign loans to finance acquisition, but there's more. Foreign loans can also be used to buy real estate, purchase and development. That's not allowed now. Also, banks can lend more against REITs, units of REITs and InvITs, and also without any limit, they can lend against debt securities, listed debt. Companies can also raise much short-term foreign loans. Originally, it was 5 to 10 years. Now, ECBs can be raised for 3 years. What's the impact of all these huge changes? Will there be a flood of M&As, especially in industries like, say, cement, textiles, where there's fragmented capacity? Will dollars flow into Indian real estate, make real estate expensive for Indians? And will dollars flow in per se? Today on Indianomics, I have 3 experts to discuss these. Renuka Ramnath, founder and CEO at Multiples, Srinesh Srinivasan, Managing Director at Kotak Alternative Asset Managers, and Rahul Saraf, India Head of Investment Banking at Citi. Gentlemen and Renuka, thank you very much indeed for your time. Renuka, starting with you, since you have spearheaded so many companies into the market, is there going to be a spate of M&As?
No, I would look at it as a reform which will have extremely positive long-term impact. Nothing can change overnight. What India needs is enormous debt coming in for the kind of growth that we have planned. CRISIL has estimated about 120 lakh crore debt that corporate India need in the next 5 to 7 years. So this reform will really play into that need extremely effectively. The other thing is that large corporates in India are denied access to global capital on an even platform like their global peers, right? We are building companies here in India of global scale, global relevance, competing in the global market.
No, we could raise for raising capacity, but they could not raise to buy someone else's capacity.
Yeah, but ECB, there were other restrictions on the borrowing. It was not a level playing field. So I find the reform in the ECB guidelines extremely comprehensive. So it helps large corporates to get into a level playing field, and it helps small corporates to borrow now for M&A activity. Okay. Third, I think we should remember that in India, we had no mechanism to unlock the amount of value that is sitting in equity. Today, there is roughly $7 trillion by value between listed and unlisted put together of equity. We still have, India is a very fragmented market. You know, if you look at average market cap per company, we are at billion, and the next highest is China at 2 billion and US at 15 billion. Okay. So we are an extremely fragmented corporate, which brings with it a lot of inefficiency, and especially in the going forward global situation, these companies cannot compete and survive. So M&A consolidation is a must rather than a desire for us to go to that growth, keep the jobs, and move progressively rather than see a demise of a lot of companies around us. And I think this reform will definitely hugely facilitate it.
Certainly, huge financial muscle given to corporates, or at least, when the rules are finalized. Srini, your first thoughts on the ECB rules, but I also wanted to know about real estate. That was a sacred cow because, land becomes expensive for an Indian buyer. Do you see money rushing in? Because it's, I would think, a very lucrative business.
First of all, if you look at the entire package that RBI has put out for the banking industry as well as, M&A financing, the summary that you mentioned, I am most excited about it. And as we were discussing just before the show, this is the 1992 moment for the credit markets in India. 1992 was when foreign investors were permitted into the equity markets.
It was the equity moment.
Right. So in one stroke, RBI has opened up ECBs in terms of what is the end use that you can use it for, in terms of the pricing that you can, price it. It is linked to market conditions. And most importantly, in terms of who can actually provide ECB loans. If you look at the draft of what they have put out, it could be anybody who can provide an ECB loan.
Earlier, like it was my uncle living abroad can give it.
Exactly.
It says any resident abroad.
Any resident abroad can provide an ECB loan. So this is a great moment for ghar wapasi of all our dollars.
Okay. Yeah, especially since it shows more growth.
Absolutely. But what it also does for the banking industry, and I think as far as the banks are concerned in India, they've done two things. They have unleashed the banks in terms of the kind of reforms that they can operate as a conglomerate. And I think many banks which operate as conglomerates in multiple facets of financial services will find it so much easier to do business.
Yeah, overlapping rule restriction is gone.
That is one. Secondly, they've also, kindle the animal spirits of the banks which have an overseas presence, because the ECB regulation provide the overseas branches of banks also to participate in this whole financing market. And if, as Renuka said, if M&A financing is going to be a big play and which grabbed the headlines, M&A financing can be done by domestic banks, both rupee and foreign currency. It is a very interesting play of, what could potentially play out with regard to the credit markets.
We don't know that BOB has one of the largest number of foreign branches.
Exactly.
I think, now it will be appreciated.
Yeah.
Rahul, your thoughts. First of all, you're also addressing dollar investors among our viewers. Is there, did you tap any of the foreign FPI in your conversations? Did you get a sense that money is waiting to come?
I think the level playing field that Renuka talked about, where the Indian strategics now have the opportunity to tap the bank financing and do the acquisition. What were they doing earlier? They were taking private credit, NBFC financing, mutual fund financing. All of that was 100 to 200 to 250 basis points expensive. If you look at just from a corporate finance perspective, the math, it allows the Indian strategics to be at least 10 to 15% more competitive now compared to a foreign corporate or a private equity who was relying on offshore financing. So that's a big, cushion.
Big gap that is...
that has got bridged, yes.
Okay.
So I think that's interesting. And then, of course, the end-use restrictions on ECB, I think that allows both the tenor as well as the end-use, allows more diversity in terms of financing options. So all in all, very welcome.
You expect dollars to come in?
Expect dollars to come in for sure, 100%. Yes.
Okay, but before I take my first break, something which stock market investors will want to know, where will consolidation come first? Do you see it in, say, paints, cement, textiles? What is the first thought that comes to the mind?
I would say manufacturing, definitely. And I think family-owned businesses. We see a lot of activity in families wanting to kind of move forward by leaving the businesses either with private equity owners or strategics.
And we're already seeing that, right?
We are seeing, the recent transaction multiples did. VIP Industries is, standout example being a listed company.
Okay.
So there will be, I think, wherever there is family-owned business, right? This fragmented ownership, dilution issues for family, changing their mental framework from being a controlling shareholder to a minority shareholder because you want to be a large conglomerate. All of that is going to be very complicated. I think the right method they would see as working well for them and markets would be to consolidate.
Fair enough. Okay, Renuka, just hold on to that thought. We have to take a quick break, but more on which are the sectors that are going to benefit for you equity investors coming up after this break. Welcome back to this very special Indianomics. I've been discussing with three experts, Renuka Ramnath of Multiple, Srini Srinivasan of Kotak Alternate Asset, and Rahul Saraf of Citi India, the impact of the big liberalization announced by the Reserve Bank, both in external financing and bank financing. Gentlemen and Renuka, thank you very much for your patience. Srini, again, a kind of an equity-related question. Which sectors do you think are going to be, in for consolidation sooner rather than later?
I think there are much more than just consolidation. So the jugalbandi of reforms between SEBI and RBI, if it plays out well, for example, SEBI has carried out a bunch of reforms in the last board meeting. And now with this, one of the things that is actually not permitted by taking leverage is actually buyback of stocks. RBI has now permitted companies to buy other companies, right? Why can't companies buy their own shares? Taking leverage. Right? So this is obviously
a possibility.
We can certainly go and have a possibility on that. I think essentially the fundamental issue is that the capital efficiency, like Rahul mentioned, with regard to the cost of capital, that is going to change. That's the first fundamental thing. In terms of consolidation, traditional industries, certainly, and all those industries which today are not at scale. I think for the first time, I'm seeing both regulators, government, and other stakeholders talking scale. If we can't execute at scale in India, whether it is our infrastructure, roads, highways, ports, now new airports are getting inaugurated, we just cannot meet our Viksit Bharat goals. So I think this is a great reform. It provides, adequate, opportunity. The way to look at it is opportunity.
Well, Rahul, I wanted to ask you, this shortening ECB to 3 years rather than 5 to 10 years for most end users, is that going to, be a very big change for...
Yes, so the sweet spot in the ECB market or the foreign bond market is the 3 to 5 years. Most efficient pricing is at that level. The 7 to 10 years was reducing both in terms of capacity and interest. So the 3 to 5 years is a huge and welcome move. And we think a lot of interest will come in, both from a pricing perspective and availability.
You arrange deals.
Yes.
Until now, you would have gone to Renuka or Srini for, a deal.
I'll still go to them.
Now you also have, an SBI or whatever. You have the entire set of Indian banks as well. Do you think fewer deals go to private equity, or do you think just the number of deals increase?
I think the market is expanding, deals, the size, complexity is expanding. So there's always enough opportunity for private credit to come in. And there is, of course, a welcome move with banks coming in, ECB money coming in for the financing as well. So the pie will become bigger. The corporates will become bolder in terms of acquisition, and consolidation would likely to happen. So there's enough for everybody to play.
Oh, then let me ask you, are you at threat as private credit, now bank financing comes in, or it's not a threat? They're two different, distinct. Some people told me, no, private credit finances different kind of deals and banks won't get there. How should we look at it?
Yeah. So since you were very keen to know which sectors will get affected, Lata, maybe I'll just spend 10 seconds on that. I think the pharma and specialty chemicals industry in our country is extremely fragmented, owned by individuals or families, or even in listed companies controlled by families. I think this industry is definitely a potent industry for consolidation. IT services industry has strong cash flow characteristics, which is amenable for borrowing, for acquiring shares. I think this industry will also go for consolidation. And niche manufacturing and engineering. Now, coming to this, what does this reform really mean, right? It has shaken up the rigidity that we had put, whether in terms of you cannot borrow in short tenure, you have to borrow, you cannot borrow abroad. There were so many rigidity around capital, access to capital. It has shaken that up in the positive direction. Second, it has given flexibility in the cap structure. What is the problem people like Srini and I have? If you look at, based on Indian laws of the land, you hardly have any scope for creativity and appropriate capital structure. So you have debt, you have equity, Debt, you have no access, so you have only equity. And equity comes with a huge pressure on return. Even today, international investors want a dollar return, net dollar return in excess of 20%, which means a gross rupee return of more than 30%. So just demolishing the rigidity on the capital structure and increasing the access and giving liquidity to this stock of equity, that $7 trillion that I spoke about, you are completely changing the landscape. You know, today I feel more confident to imagine the India in the golden years, you know, where the per capita GDP can actually go double in the next 5 to 10 years, right?
No, the magical 5-figure per capita we think of.
It just unlocks the potential in, you know, in a very, very big way and allows for capable people. See, there is a lot of expertise. What do you do with the financial expertise if you have no access to appropriate financial instruments? So you are now bringing the expertise, the opportunity, and the capital. All of this existed and could not come together. Today, they will come together and make things happen.
Can I just pick up a point on the level playing field part of it? While now corporates have been given the flexibility to borrow and buy companies, the same flexibility is not allowed for the alternative investment funds in India.
Okay.
So when a company is up for sale in India, global capital providers, private equity firms can leverage their balance sheet or leverage their fund and buy those companies. Indian private equity fund managers, Renuka and me, if we have got an AIF, we cannot do this. So inadvertently, we are going to get pushed out and set up offshore vehicles rather than onshore vehicles. So this is, again, this is not a domain. This is more of a SEBI domain. So if leverage is going to be more available more freely to buy companies, not just for corporates, why not for funds?
Okay. No, I see all that is fine, but I have just this one thought. There was a reason why, you know, the Indian authorities were scared of debt. We were coming out of 1991 because we could not repay an IMF loan. We pawned gold. So that fear of debt was there. Now there is no reason because we have, you know, huge reserves. We have GCCs, we have, you know, services exports. Dollars are going to come.
And corporate debt, Lata, is at half.
Correct.
The world.
Seriously under
we are 50% of GDP, whereas the next highest country, Germany, is at 100%.
Yes.
We are at half of the next highest. And they themselves are at the half of the world's highest.
Also, with the digitalization, the watchfulness of the RBI and the central bank is much higher than before. And that allows them, you know, to be able to allow for some of these reforms to come in.
And also, I think this entire thing of not lending against shares happened around stock market scams. Right?
1994.
So it's a comeback after 25 years when we are a much reformed corporate India.
100%, 100%. But would you say, is there any sense of going overboard in terms of lending against REIT units, InvIT units, and unlimited, no limit on lending against debt securities, listed debt? Is that a little bit of going overboard? I mean, we don't know the final rules, but this is there in the...
Look, I think, so if I can... It's a question of how mature the lending system in the market is going to be. You can't frame rules and shackle the entire system in anticipation that something can go wrong, right? You free up the system and you correct it, you put safeguards as we progress going forward. And if there are a few people who burn themselves, so be it. We got to live with that. And that's important.
Okay, final question, because we are in multi-asset mode now. There's more gold and silver and land. I mean, I want your view on it.
I think it's
because I remember in 2008, Y.V. Reddy would really worry that a lot of private equity is not coming for the business. They say it's for a business, but actually it is for the land that business is sitting on. So I just fear whether those of us who perhaps don't have a home yet
No, I think if you look at the RBI draft circular, it's very clear. It is in existing permitted activities of real estate.
Yes, where FDI is permitted, you should permit.
Correct. So currently, land acquisition is not permitted activity.
In FDI also?
Even in FDI, unless it is for certain specific...
Real estate is allowed.
Correct. So real estate business is allowed. So I'm not sure whether, you know, you can straight away get that. You know, people may try and circumvent it, borrow in some other entity. All those things potentially can happen. Is this going to be a runaway, you know, inflation in land prices? Probably not. But it will definitely impact asset prices for sure. What I mean
How
by
and
that,
which?
yeah, because now you can buy office assets. That is a permitted activity. You can buy logistics assets. You can even buy other annuity income-producing assets like a road and other such infrastructure. So now the leverage available to buy these assets are much greater and much more flexible.
So you may see REITs
So you
and
will see,
InvITs.
absolutely, you will see value changes in these assets.
Yeah, and also I think the whole liquidity that it will bring back to the system is going to bring the ripple effects. I look
Going
at
back
it
now, I
much
think for
more
the first
as
time we will see liquidity in REITs and InvITs.
That is very, very important because absence of liquidity is deterrence to investment.
Absolutely.
So unless you solve this side of the equation, you're not going to get investments.
Just a final word. Did you talk to anyone? किसी से भी बात किया? Are dollars coming? I mean,
Dollars will come for sure. More flexibility, more availability, more liquidity, all of that will allow for more dollars to come in.
Are
It is an
foreigners-
opening up for.
Did foreigners sit up? Did this make news in the FPI
My email box is
newsletters?
choked. My email box is choked. In terms of.
That's a headline.
Also, I would say one other headline, if you want, is I think equity has been always the growth capital. We think debt will become a growth capital as well.
Yes, that's where we started by saying this is the 1992 moment for debt as well.
And to answer your question on private credit, it will sit very beautifully between equity and ECB.
Absolutely.
So the place for everyone, and everyone should be able to push up growth. Okay, we are looking at a glorious period of growth. Hopefully, Indian corporates should only find the animal spirits. The money and the instruments look like have been made available. On that positive note, wrap up on this edition of Indianomics. Thanks very much for watching.
Hello and welcome to Global Eye. I'm Parikshit Luthra. The top story we're tracking this evening: China has tightened its export rules over rare earth minerals in a move that could significantly impact global supply chains for electric vehicles. Industry sources have told CNBC-TV18 that the export restrictions will be applicable on a range of critical minerals, including lithium batteries, cathodes, graphite anodes. These curbs will be applicable to all nations. The Chinese government has also imposed restrictions on the export of certain electric vehicle technologies, tightening its grip over the global clean energy ecosystem. Beijing has also added at least 5 new categories of rare earth magnets to its export control list. The new controls are expected to kick in from the 8th of November and are likely to be in response to US's curbs on US chip exports to China. These curbs also come ahead of a potential meeting between President Xi and President Trump. The Indian auto industry has informed the government about the new export curbs, and they may approach them formally for further assistance in the coming days. We also learned that all automakers are evaluating these new export controls that China has imposed. While some have said there is no immediate impact, others do believe this is going to be a negative for the Indian auto industry, which is focusing on localization of cells and batteries in a big way. So what are we going to see in the next few weeks in terms of the impact on production, on sales? We're joined by Inar Tangent, Senior Fellow at the Tahe Institute and the Chairman of the Asia Narratives at Substack. We also have with us Sohail Nathani, Managing Partner at Economic Law Practice. Gentlemen, thank you very much for joining us on the program. Inar Tangent, could you give us a sense of why China has now gone ahead and taken this decision to impose extra export curbs on more rare earths and rare earth processing equipment, manufacturing equipment, material used in lithium-ion batteries? Why would China do that?
Well, they're reacting to what Donald Trump is doing who has been imposing more curbs, urging other countries to stop trading with China or to put large, export duties on them. As you remember, he went to Europe and said that he wanted 100% tariffs by the Europeans on both India and China. They're coming up to a meeting. Obviously, both sides are trying to show strong hands. Obviously, when you're dealing with Donald Trump, very mercurial, you have to take a very firm stance. Otherwise, he thinks he's more clever than you are and that he's somehow going to get over you. I think India has experienced this and nothing has changed. So right now, I would say this is tactical. But at some point, if there isn't some light at the end of these negotiations, it could turn into a reality.
Right. Sohail, if I were to try and understand from you, will these export controls impact lithium-ion batteries, their assembly in India, cell localization? And what about getting full assemblies? We had been seeing how Indian companies were trying to get around these export curbs on rare earth by getting full motors or full parts rather than getting the rare earth magnet itself. Will that also be impacted as a result of the new rules which kick in on the 8th of November?
So, I'd like to answer the question in two parts. Will it affect EVs? Yes, because you need these rare earth magnets to make batteries and motors. So it will affect local manufacturing, surely. And more importantly, even if you are able to import these materials in from China, there are going to be several restrictions on how you can use them and where you can re-export them. So on both counts, yes.
Sohail, would you say that China is now asking for more guarantees from India that these rare earths or equipment which goes into lithium-ion batteries, for that matter, is not going to be used for any kind of defense technology?
Yes, that is one of the requirements of the new China export control laws. And let's just understand what's going on. This is really a new, instead of warfare, a lawfare that we're seeing. As we heard earlier, the US has been using this tool very effectively, and now China is beginning to use this tool increasingly. And what differs in China using this tool is that they control depending on how you look at it, 70 to 90% of these raw materials, which are critical for both EVs, for defense, and for a host of other products. So being almost a monopoly supplier, they're able to dictate the rules a lot more effectively.
Right. That's an important point, Sohail. Let me go back to Inar Tangent once again. Inar, would you be able to tell us that earlier, of course, in April, we had seen China restricting the export of rare earth magnets, making them subject to very stringent licenses. India has not got any licenses for rare earth magnets since April, even though we say there is a bit of a thaw, some sort of relief, some sort of reset in ties. Having said that, does China now want to make sure that if US continues these import curbs, these export curbs on chips, then China would put restrictions on the entire electric vehicle supply chain?
Yes, I mean the concern in Beijing is that things that are being shipped to one country will end up in a third country, particularly the U.S. I don't think anybody has any kind of illusions that the U.S. wouldn't do whatever is necessary to get what they thought they can. You know, currently India imports nearly all of its rare earth permanent magnets, about 4,000 tons annually. And that's projected to double by 2030, and China's a large part of it. What my colleague was talking about is China actually mines only 70% of all the rare earth, but it processes 90%. They're about 10 to 15 years ahead of anybody else in terms of the processing part. So that's the crucial thing that people should be paying attention to. It's fine to say, as India said, that they're going to develop their own technology and processing, but it's going to take quite a bit of time in order to do that. It's a messy, difficult business. And it'll, as I said, there's going to be a lag time if it goes to. In fact, hopefully, this is just, as I said, tactical, kind of getting ready to confront the Trump.
Right. This is to confront Donald Trump. Let me go back to Sohail Nathani at this point. Sohail, what impact do you expect on the Indian EV industry, and what are some of the legal issues that importers are facing right now? We believe that there is no consignment of high rare earth magnets that are coming in. Do other categories of rare earth also get impacted?
I'm sorry, I didn't hear your question. The voice cut off a bit. Can you repeat it?
Right. Sohail, what I'm trying to understand is that we were anyway not getting high rare earth magnets from China. Do these new laws, new regulations from China indicate that it'll get even tougher to get electric vehicle batteries, cathodes, anodes, rare earth processing equipment into India? Are there more categories of rare earth which have been included?
Clearly, there have been 14 new categories, as I understand, that have been added to the April list. There are other restrictions as well in terms of technologies. And of course, this is designed to make it more difficult. But as Inar said, that is this just posturing, or is this the new normal where China is going to keep a chokehold on these kind of technologies? Only time will tell.
All right. Thank you very much, Sohail Nathani. So let's hope there is some breakthrough between Donald Trump and Xi Jinping as well. Thank you very much, Inar Tangent, for being with us as well. That's all we have time for in this segment. But we're taking a short break. On the other side, India and Afghanistan have pledged to fight terrorism together as Afghanistan's foreign minister visits New Delhi for the first time. The Indian government says it would reopen its embassy in Kabul. A special discussion with Tilak Devashar, former member of the National Security Advisory Board and a senior member of the Cabinet Secretariat, when we return. Welcome back to Global Eye. Diplomatic ties between India and Afghanistan are set for an upgrade. The Indian government has decided to reopen its embassy in Kabul, marking a major step forward in formally recognizing the Taliban regime. Afghanistan's Foreign Minister Khan Mutaqi was in Delhi this week and met External Affairs Minister Jaishankar. It marked the first high-level diplomatic visit to India since the Taliban overthrew an elected Afghan government in 2021. India had then shut down its embassy but always maintained a technical team to carry out humanitarian work. Deliberations between Afghanistan and India have come to speed in the past few months. The Afghan minister met with India's Foreign Secretary Vikram Misri in January this year. As Kabul's relations with New Delhi are seeing an improvement, its ties with Islamabad have been worsening. The Afghan city saw explosions overnight as Minister Mutaqi landed in India. While some speculate the overnight Kabul attack to have Pakistan's involvement, no official confirmation has been seen as yet. Investigations are still underway. In a joint statement, Jaishankar said that both nations face shared cross-border terrorism threats. Speaking at a press conference, the Afghan minister, Amir Khan Mutaqi, said that both nations should talk to the United States to urge them to remove sanctions on the Chabahar port in Iran's area. India's access to the port for trade with Afghanistan has been impacted because of the US sanctions. I'm now joined by Tilak Devashar, author and former member of the National Security Advisory Board. Thank you very much for joining us on the program, Mr. Devashar. Let me begin by asking you about the importance of External Affairs Minister's message that the Indian embassy in Kabul will be restored. What's the significance of this?
I think, first of all, the visit itself is very important because this is the first face-to-face physical meeting, bilateral meeting between the two external affairs ministers. Earlier, the EAM has spoken on phone, but this is the first face-to-face bilateral meeting. So that in itself is very significant, quite apart from what are the other takeaways from the meeting. Now, about the embassy, I think what the EAM mentioned was to upgrade the technical mission into an embassy, right? Now, an embassy has its own dynamic, has its own importance, and then what just a technical mission does. So yes, it is a very important step in our bilateral relationship.
Right. Sir, I would like to ask you about the fact that Amir Khan Mutaqi, the Afghan Taliban foreign minister, is here for almost a week-long visit. And there are going to be discussions not just on restoring diplomatic relations, but terrorism, trade and commerce, connectivity, sports relations, skilling individuals, healthcare. So what do you think is the view that India is taking on the relationship with Afghanistan for the years to come?
No, I think it's, as you just mentioned, the menu of sort of items to be discussed and on the agenda is so vast. And it shows that India is keen, as well as the Taliban are keen, to re-establish our relationship on a very strong footing, which is based on a wide variety of issues and to a certain extent are people-centric, are focused on what can we do for the people of Afghanistan. Since we've had long-standing relationship with the people, we've had civilizational links. And how do we do that? So I think, India has done a lot of humanitarian assistance, has provided medical assistance, provided during the earthquake, we were the first responders. So a wide array of issues and agenda to be discussed, focused on people-centric issues. I think it's very important.
Right. Now, let me also ask you about the fact that Afghanistan has invited Indian companies to explore mining opportunities in Afghanistan. Do you think Indian companies will consider trade and commerce, maybe setting up deeper operations in Afghanistan in the current atmosphere?
I think the companies will have to take a call, and especially first they look for advice from Government of India, and also the kind of assurances that the Taliban will give to provide security and safety to the Indian companies, to their equipment, so that they are able to conduct their business in a very stable and secure manner. I think companies will have to take that call and government will have to guide them. But this is a very big breakthrough because, the buzzword these days is strategic minerals, rare earth elements, or whatever you like to call them. And Afghanistan is one of those countries which is supposed to have a lot of them. China, as you know, is already into doing copper mining in a place called Desainik. I don't know whether they've started mining or not, but they have a contract for that. So similarly, I think if Indian companies are willing to go there and explore minerals, it will be a huge plus for both countries.
Right. Mutaki said that Afghanistan looks at India as a close friend. They will never allow any group to use its territory against India. Does this mean that we have some assurance from Afghanistan that they will not allow Pakistan-sponsored groups or any kind of foreign actor to use their soil against India?
Yes, I think so. I think this is one of the guarantees that we have been looking. You see, though Taliban is fully in control in Afghanistan, but there are ungoverned spaces because of the terrain, especially in the east, which borders Pakistan. So we were looking for assurances and guarantees for them that they would not allow anti-India activity from Afghan soil. And largely, which means Pakistan, like they have done in the past, to shift the camps of the Taliban, to shift the camps of the Lashkar and the Jaish into these areas. So now that the Taliban have given an assurance, and I think we can believe those assurances that they will make sure that no anti-India activity takes place from Afghan soil.
Absolutely. I would also like to ask you about the importance of the India-Afghanistan relationship and how important is it for India to restore full diplomatic relations with Afghanistan at the earliest, considering what's happening with Pakistan, considering what's happening with Iran right now, the kind of tensions we are seeing in the Middle East and the larger Islamic world. How critical is it for India to restore relations?
I think we have a very good level of engagement with the Taliban, especially after this visit. Now, recognition is a formal diplomatic status that each country awards. And here, I think India will go by the international consensus on formal diplomatic recognition. UN, what the Western world, what other countries come up with. Being a democratic country, India, cannot just break the international consensus. Especially, you're aware of the treatment of women. You're aware of that it's not an inclusive government. So these are the factors that India will have to consider before granting full-fledged diplomatic recognition. But short of that, I think we are having a full-scale engagement, especially after this visit, with Afghanistan. So formalities are there, nomenclatures are there, but short of that, I think, everything else is going to be done. But also, I'd like to point out one thing. The most significant thing that the EAM mentioned in his opening remarks is that India and Afghanistan are contiguous neighbors. Contiguous neighbor means that we share a border. We have commonality. So, this is a very significant remark. And I think this is the one that should be played out, that we consider Afghanistan not as a next door, or a neighbor once removed, but actually a contiguous neighbor.
Right. That's an important point, sir. And the EM also announced that there will be 6 new health projects that India will undertake. They will be gifting 20 new ambulances. Air connectivity will increase. Visas will increase as well. What do you think Afghanistan and the Afghan Taliban would want from India at this stage?
I think for them, developmental assistance is most important. There's medical help that India has announced, including CT scan. I think MRI machines were also talked about, because health is one issue which I don't think so the Taliban have been able to pay too much of attention due to financial constraints. So the ambulances, upgrading of medical facilities, visas is something that the Afghans would really value and cherish. Right. And they're really looking forward to that. And also, I think the AM talked about restarting or upgrading the projects that we were already involved in, and to open negotiations for new projects for the future.
Right. Can Afghanistan act as a buffer against Pakistan? And who do you think among different countries which have their embassies in Afghanistan right now, who do you think has the strongest relations with Afghanistan currently?
In terms of people-to-people contact, I think India has the best relationship. Over the years, the kind of help that, during the period of the Islamic Republic, we pumped in almost $3 billion of humanitarian aid, building projects which are people-friendly. No other country has done that. All of the countries were looking at security issues, They spent trillions or billions of dollars, but all on security issues. India was the only country that built hospitals, that built the parliament building, that built schools. So there is a lot of goodwill in Afghanistan for India amongst the people of Afghanistan. So I would say that we have the strongest relationship.
All right. Thank you very much, Mr. Devashar. With that, it's a wrap on this edition of Global Eye. Thank you for watching. Stay tuned to CNBC TV18 for more.
2025. It's been a steady year for the stock markets, with the Nifty gaining more than 6%, but the appetite for IPOs has been ravenous. More than 75 IPOs at last count have raised $14 billion so far, making India the fourth largest market for listings this year, following the US, Hong Kong and China. Just this week, we saw South Korea's LG Global, co-working giant WeWork, take their India units public, along with the large issue from Tata Capital. The frenzy is only expected to continue, with total fundraise projected to cross $20 billion. Now, in a recent report, Bernstein has called India the new IPO factory. But the soaring euphoria also warrants caution. The median returns of the main board IPOs this year has been less than 5%. More than 25% of the new issues are providing negative returns, and foreign investor interest in the primary market has been subdued. Welcome to the Editor's Playbook. This week, we take stock of the IPO market. We have a full house joining me, as always, Prashant, Nimesh, Sriram, and we're joined by the very wise, very young, and very grey Hormuz Patakia joining us on the program. Hormuz, welcome to the Editor's Playbook. So I'm going to start with you, Hormuz, because you've, of course, been on a weekly basis recapping what's been happening in the IPO market. We just gave our viewers some indicative ideas of the trends that have emerged in 2025 so far, but pass through what the data is telling us. Give us a report card, so to speak, of what's happened in the IPO market.
Firstly, thank you. Had I known that I would be part of this today, I would have colored my hair. But
That's your charm, or
come
on.
With this look, you're looking young.
Very editorial.
Young, wise,
very
and
editor
grey.
like Hormuz.
But it's been that kind of. The last few months have been clearly the way the IPO market has picked up pace, right? In the last 3 months, the July to September period, we've seen almost 1/3 of the total number of IPOs that we have had come up in just the last 3 months. And it's not as if that the market was doing so well that indices were hitting all-time highs, the people were looking to capitalize on it. But it was just this rush, some for exits, some of them to raise capital as well. And it's on both sides. The recent IPOs have presented both sides of the story. You saw LG yesterday. The bids were over 4.5 lakh crores. You've never seen such kind of bids in any IPO, for that matter. But on the flip side, there have been recent listings that are down 30-40% in just the first 2 days of their listing. So it's not as if it's all been good. The IPOs that have listed so far, at least 30 of them are trading below their issue price. And 15 of them at least are trading with single-digit returns. So it's not as if that even if there has been a rush for IPOs, it has delivered very strong returns for investors and so on. But the appetite continues. The pipeline is a huge one as well. We have Lenskart lined up, we have Grow lined up, and there are so many more that are lined up going forward as well.
Misho.
And PhonePe, indeed. So it's a huge pipeline that lies ahead. It just remains to be seen what kind of investor appetite continues going into the fourth quarter as well.
So,
that's important. Yeah, that's important, Nimesh, and I wanted to get you to comment on what we just heard there from Hormuz, because I remember that when we were chatting, I think it was a week or 2 weeks ago, when Nigel made the point as well that, look, while it seems like it's gangbusters, we went through this phase where every day you were talking about a new unicorn being minted, and the trend in 2025 has been about IPOs being minted, and I like the Bernstein IPO factory nomenclature for what we've seen in 2025. But you've been talking to fund managers, etc. Nimesh, what are you hearing?
So, let me put a bit of a ground check. As even, Hormuz pointed out, a lot of the recent IPO listings have been a bit disappointing, right? So now it's hitting the reality check. It's not like you get in an IPO and you're going to make money. So that's one thing. Second, from a market perspective, look, India has already seen $14 billion of fundraising, but India has been a rank underperformer this year Y2D, right? I mean, India is just up 3-4%, whereas the other markets are up 12, 13, or even in double digits. So in that sense, India's underperformed. And one of the reasons for this is the big suck of liquidity through the IPO market. Having said that, we've hit $14 billion. Given the pipeline, what Hormuz is talking about, and what's in the public domain, I think we will be as good as what it was last year. Last year we hit $21 billion, 21.3 to be precise. And looks like, with the kind of trend it is, even this year could be $20 billion plus. So $40 billion of IPO money is really a big thing. And this is all domestic domestic money, right? FIs have been net sellers in the India market. And even in the IPO market, Shireen, the breakup of the FI participation in the IPO market is not more than $5-6 billion. So all success of this IPOs of $14-15 billion is large part contributed by the retail money, the mutual fund money, so to speak. But now it is hitting a bit of a reality check. Even in the unlisted market, look at what happened to NSGL, or for that matter, even Tata Capital. The unlisted market price was 1,100 rupees, and the IPO came at 350. So it was a bit of a shocker for a lot of the unlisted investors as well. So my sense is, the IPO market is giving a bit of a, equilibrium to this market because of the supply. But now it's hitting a reality check as well for a lot of investors, both retail as well as institutional investors. It's not one way, making money in the IPO market.
Yeah, yeah. No, absolutely. There is no such thing as a one-way street, as we've often come to realize. But, Prashant, I want to bring up that point that Nimesh was making there on vocal for local. I mean, that really is the headline, isn't it, as far as the IPO story is concerned?
Oh, absolutely, Shireen. Just look at the numbers, and I think they are stark. It's in some ways a different version of the same statistic. The big story, of course, has been that locals have been big buyers of equities.
Whether it's open market
across
or
the board,
IPOs, any which ways.
and foreign investors have been big sellers. So $14 billion, Nimesh, right?
Yeah.
This year, in terms of IPO money. FIIs have sold $17 billion, and local investors, that is DIIs, have bought about $66 billion of stock. And the other, in a way, way to look at this is when we say locals have bought $66 billion, but the market has not done very much, it's also because of all of this, right? I mean, IPOs, $14 billion worth of IPO sales,
promoter sales,
block deals, and we're not even counting all of that.
Yeah.
So you count all of that, I mean, the numbers start to make sense. I just want to make a couple of broad points apart from this as well, right? So, for this, not for the sake of it, but I also think I want to take the other side of it. IPOs, and it's a question I think we've addressed on this program a couple of episodes earlier, which is what is the right time to come in at the time of an IPO? So this is, I just pulled up, the exact quote of what Warren Buffett has said about IPOs, right? And this is the exact quote. He says, an IPO is like a negotiated transaction. The seller chooses when to come public, and it's unlikely to be at a time that's favorable to you, right? He again said, by the way, the AGM, and this is from a quote from the AGM, you don't have to really worry about what's really going on in IPOs. People win lotteries every day. You don't want to get into a stupid game just because it's available. Now, but I think, just to qualify that last quote, Shireen, what he's talking about is that listing pop, that lottery. That, you put in money because you can make a quick 30-40% listing gains, which is, I think, why IPOs as a concept also get a bad name, right? Which is that people are playing for that day one listing pop, and that's the lottery aspect of it, which is what you don't want to do. But having said this, just to take the other side of the argument here, it's about capital formation, Shireen, right? As you yourself were alluding to earlier. And IPOs are, at the end of the day, allowing companies to raise money, which is essentially, building businesses. Of course, many of them are exits. I think about 50% of that $14 billion, about 50% is promoters selling stake. But the point is, what are they doing with all that money? Yeah, sure, they're buying some houses and they're buying, but they're also putting it back to the market. It's again going into companies which them are using this money so it's like a virtuous cycle in that sense. So there is that healthy aspect of it as well, which I think, as the title says, beyond the hype. And I think beyond the hype, it's the real story, the fact that markets are liquid, they're deep, they're allowing for this kind of capital formation to take place.
I just want to add one point to what Prashant said. Just to clarify, Shireen, while we're talking about IPOs, I just want to make a point. In the recent trend, it's not the IPO, it's actually an FPO. There is very rarely an IPO wherein the money's been raised for the company, for the capex or for the growth, right? This is largely an exit from a PE investor or a promoter. So from a retail investor point of view, I think one needs to be very, very careful. While we call it an IPO, is technically an exit for an
But that
for a
number,
PE
Nimesh, is
investor.
about 50%. So $14
No,
billion.
one second. One second. I just want to come in on the point that Nimesh was making, because I think that is an important point. And you know, when you talk to the likes of Nikhil Kamath, you talk to the likes of Sridhar Vembooz, and the question being asked of them is, why aren't you IPOing? Why aren't you IPOing? And the fact of the matter is, they don't need to raise the money. They don't need to provide the exit. They're sitting on enough cash at this point in time to fund whatever growth plans that they have, and they're not dependent on the need to provide an exit to an external investor, because they never drew in funds from an external investor. So their story is different, and that also bolsters the point that Nimesh was making. But there's another interesting aspect on why perhaps we've seen so many of these companies approaching the IPO market, approaching the public markets, and because we've actually seen the private markets go into a bit of a funk in the last few years. And after that kind of accelerated pace where, you know, big checks were being written out practically every other day, we did see a private market correction. We did see a private market holding back, so to speak. I mean, you talk to investors and everyone talks about how much dry powder that they were sitting on, and suddenly people were congratulating each other on the dry powder and the dry ammunition that they were sitting on, not on how much they were actually putting to work. And so that also pushed a lot of these companies, especially these new age companies, startup companies, loosely, if you like, to look at the IPO market. So that's been another interesting aspect on why we're seeing this big rush for IPOs. But go ahead, Nimesh.
So, Shireen, you know, the other part, I mean, you know, while we're talking about IPOs and FPOs and whatever, this is also a good point, because it's bringing in a bit of equilibrium to this market. Look, you know, as Prashant pointed out, $64 billion is what the domestic monies come in. And of course, a lot of IPO has been sucked into. Had not been the case, you know, India market would have been at a different level. The Ps would have been every stock would have been at 100 P. So from that perspective, when I talk to some bankers and all, they say, you know, it's needed that supply comes in, because it'll just bring a balance to this market. Otherwise, there wouldn't be a balance to this market. That is one side of it. The other side of the problem with the IPO market is, I was talking to some fund managers who were for the Diwali show, and you know, everybody seems to be tired now with the kind of amount of IPOs which are coming in, the kind of bandwidth they need to put in to evaluate these companies on a daily basis. You know, the biggest fund manager of this country was like, Nimesh, I'm done with. I've stopped meeting companies and I've stopped looking at IPO market.
That's a very interesting, right? So the biggest.
And for the kind of returns, the effort is like, you know, not.
But that's also a bit of a phenomenon of the pricing. These guys, the top 4 or 5, they do 20, 18, 15 IPOs in a day, in a year, and they make, you know, 20,000, 40,000, depending on whatever number. Goldman Sachs will do 2 and cover that number.
Of course.
So,
you know, just one more thing. I think Hormuz was pointing out the number of companies which have listed with gains and right. How many? 20%, 25% of.
Almost a third of them are below their issue price.
I was just thinking.
That table is coming.
Yeah, there you go. I was just thinking, even forget the IPO. In terms, if you look at the just average chance of you making money, forget about in an IPO. I think this would broadly be around the same, right?
On the same. And
one should generally assume that, you know, but that's also true in secondary markets, that 20% of the companies, I mean, it will involve you know, shady businesses, not all that strong fundamentals, etc. So I think when you look at these averages, I mean, so the point, what I was saying is that
agree with Prashant.
The listing pop is essentially the listing pop game. I think is what gets this entire space a bad, and that is the reason why a lot of people, when they say, right, and I think we've discussed this as well, the way to invest in IPOs is list, give it some time, because what will happen is that fizz will get out, all that, you know, everything will go out. There'll be a reality check, and you will find better prices.
That's the power of FOMO.
And there are so many such examples. There's so many such examples of that in the listing day pop that you play with. Idea Forge is a case in point here. The stock doubled on its listing. Today it's below its IPO price. And so it's that kind of.
That's the reality with most of the IPOs, Hormuz. That, you know, after 1 month, 3 months, 6 months, whatever, that euphoria will die. And you will get 8 out of 10 IPOs below the issue prices, and then nobody will chase them.
I think that is the one lesson that viewers should take away.
larger story, I think, and that's why the Bernstein headline, I think, is is an appropriate one, because it talks about this IPO factory. But at the end of the day, I think what it signals is the larger entrepreneurial aspiration.
Absolutely.
This is a new class of Indian entrepreneurs that we're seeing being minted on the Lal Street. We've gone through the era of, Dhirubhai Ambani. We've gone through the era of the Narayan Murthys, Azim Premjis, and so on and so forth. We're now heading into a new era of Indian entrepreneurship, of creating new Indian entrepreneurs. And I think that is also equally exciting about this story, outside, of course, of the numbers. Just going back to the conversation that I was having with the Atomberg guys, and I remember, Prashant, you and I were debating the Atomberg story as a contender for the disruptor category for the India Business Leader Awards. And today, they're talking about looking at an IPO next year, or at least aspiring to look at an IPO next year. So these are, two boys from IIT Bombay who in 2012 decided to set up a company. So I'm saying that there is a larger India entrepreneurial story that's also getting minted
I think
today.
somebody said this, right? It's going to be a $20 billion IPO market every year.
Every year.
That's the expectation.
It looks like, right? Last year was $21 billion. This year we end up at $20 billion. And if this momentum continues,
and
I
in
guess
the next 1 year, you have
could be
Reliance Jio,
a very
Misho.
normal norm for India. I mean,
but
US still raises $50 billion.
But it doesn't happen like that. If you go back last, I don't remember it, but it's very cyclical, because the market depends on the market.
Of course.
But that's normal. There's nothing.
It's chicken and egg. I mean, the more the IPOs come, the equity markets will not perform. If equity markets don't perform, there is no momentum for IPO market as well. So it's a bit of a.
But the pipeline is strong.
The pipeline is strong, but going back to, I think, one of the caveats that now so many people have put on the table, but I think we should reiterate that pricing. And, Sanjeev Bikhchandani telling me that, look, when he was doing the Naukri IPO, the Info Edge IPO, Rakesh Jhunjhunwala told him, I like what you're doing, I like your company, but tera bhav bahut zyada hai. I'm not going to invest. I don't like the price. So I think, at the end of the day, I think a lot of learnings, perhaps also as far as the appropriate pricing is concerned, is something that we will
because
see.
Prashant mentioned Warren Buffett, every single news organization, every website has a Warren Buffett quotes piece. Clearly, nobody is reading it. Don't go for an IPO because it's always on the seller's intent.
No, he doesn't say don't play it like a lottery, which is that on day one you want to make 30%, 40%, 50%, because otherwise.
So the median listing day gains for main board IPOs this year is 5%. And you know what, interestingly, because we are trying to be skeptical here, and we say SME IPOs are, maybe more risky than the main board IPOs, their median listing day gains is 4.8%. And even in terms of returns, while there are outliers and a lot of them have, not a lot, some of them have destroyed a lot of wealth, the median IPO returns has only, for the SME IPO segment, is only improving by the year. So as you can see on the screen, main board this year's returns 4.8%, SMEs 3%. Last year's, the IPOs that happened in 2024, the main board returns were -10. The SME IPO returns were -28. The year before that, SME IPOs did better. 13. The stocks that listed on the SME exchange in 2023 have returned 13%, whereas the main board IPOs that have listed in 2023 are -2.6%.
It was a peak frenzy year of SME IPOs.
Correct, right? But they have given more. They have returned more money, created more wealth for the investors.
The kind of frenzy that we saw, there was a lot of tightening has happened in the SME market by the regulators and everything. So that also has led to decent companies with a lot of due diligence, and also, that was one phase where that 1 year.
SME IPOs have to be approved by regulator? Not yet.
It's
only exchange.
Exchanges, yeah.
Exchange, yeah. That is a.
That's the only caveat, or an only.
I guess more needs to happen in
wisdom of the markets.
So just to add to what Shireen said on the pricing, Shireen, again, pricing is something which, we can say it's a market force. So nobody can really come with the right pricing. This is the right pricing for my stock or for my value. But I just want to add one point as far as pricing is concerned. The good part is, because of the sheer power of money that the domestic fund managers are sitting on, at least I could see in some of the big IPOs this year, the pricing power has come to the domestic mutual funds. No more the FIs take a call on the pricing. Okay, NSGL was a classic example. They were, I mean, a lot of FI investors were willing to pay a premium, but the domestic mutual fund guys came out and said, no, we want at a certain price, and the IPO had to come at that price. So in that sense, the pricing power, the decision to make at what price the IPOs can come. Now, to some extent, the force has come back to the domestic mutual fund.
And Shireen, the other thing is the experience itself, right? Which is the fact that is the IPO like a one-time money grab exercise and run? You raise as much as you can and then scoot, or you leave something on the table and the market rewards you over a period of time. So there is, I mean, today we spoke to the management of Ixigo on a transaction. Stock's done phenomenally well. I think over a 1 year period, it would be one of the best returning companies. IPO price was about 120 or something. So that is one. Look at LG, right? LG is a huge, they're asking for 77,000 crores in market cap. But the point is, you look at the P multiple, there's acknowledgement it is reasonable. They've lowered the price. They were asking for 130,000. They're asking for 77,000 crores in market cap. So, and of course, look at the subscription, 50 times or something compared to what they are. So I think there is that acknowledgement as well, that there is money to be made, and perhaps it's better if you, you price it reasonably, and then there is a...
Now, the example that comes to mind when you say price it well and it comes, DMart is an example, right? The IPO came at 299. Look where the stock is today.
The IPO came at 299. The listing happened at 599.
599, yeah.
And we saw a high of even 6,000 on the stock. So,
that's what you'll find when you walk into a DMart as well. 299, 599. So
DMart store bid starts from 29 also.
It was done that way by the money.
So it's 29 to 299.
It was done by the money in that sense. That 299 should be my IPO price. He insisted on that price. So.
With or without GST. But anyway, gentlemen, we're going to have to wrap up this conversation. It is clear there is clearly a move towards the public markets. There is a frenzy as is being experienced in the public markets today. India has emerged as an IPO factory, and India is likely to continue its momentum, its march towards putting more companies on to the public markets. As we pointed out, it does bolster the entrepreneurial energy, the entrepreneurial aspiration, but investors need to do their due diligence. Investors need to keep what is real in mind. Don't go for the listing pop. Don't treat it like a lottery. And of course, understand your companies well. I think that's the message here from all of us. But we will, of course, keep tracking the IPO markets and the listed space for you, as we always do. But on the editor's playbook for now, from Sriram, Hormuz, Nimesh, Prashant, and myself, many thanks for watching. We'll see you again next week. Till then, take care.
Mr. Kamath, it's a pleasure to have you here with us, and thank you for taking the time out for CNBC TV18. Sir, to begin with, the RBI has, unveiled sweeping regulatory changes, whether that is capital market financing, easier lending norms for, IPO financing, corporates, scrapping or rather deferring the ECL timeline significantly. What does this mean for the playing field for banks, whether that is the risk appetite, capital allocation, or even credit growth?
Thank you for having me. I look at it on a very broad frame, as it were. If I look at a few years back, what a bank could do and where we were at this point in time, for a variety of reasons, banks which were primarily in corporate lending, working capital and corporate loans, and also infrastructure credit. So one side of the book, more than 50% was these type of assets. The other side was retail assets. That has flipped, and particularly post-COVID, that has flipped in a very hard way, where you now have a majority of the assets retail, and then you have corporate. To me, what it meant was that banks were missing out on opportunities in an economy which is growing around, let me round out the number, at 7%. So in a 7% economy, the key driver is going to be your corporate side of the economy. And the banks were somehow getting left out of that sector for a variety of reasons, some of which have been now addressed. There are other reasons which are more structural. For example, there's greater access to capital markets now, which till 5-7 years back, the pension industry, the long-term savings industry, the insurance industry, the MF industry was still growing. But now it's growing at a pace. So good corporates, large corporates can access that market directly. And so the banks, in a way where you could see in their capital adequacy was very flush, as it were. So I think this opens up equal opportunity in a way for banks. And to me, it is excellent news.
But, in terms of signaling from RBI, do you think this is a very different regulator than what we had a few years ago? And, is the signal that this is a more growth-friendly regulation, or as some in the industry have expressed concerns, some of the dilution of prudential, guardrails as well?
No, I don't agree with that second proposition up front. In my 55 years in business, I have not seen the RBI, not taking its eye off the ball. They're never ever. They are always very focused. So that is not an issue. In terms of various regulators, regulatory heads doing various things over a period of time. Again, when I look at things over time, and particularly from '96, when I was in a, I'd say, position where I could take a better look, regulation has always followed what is possible given the environment. So we must remember, sometimes we don't put it into context. We hit $500 billion as a GDP only in 2004. So the regulations that were appropriate for that period of time were in place during that point of time. That is, as we headed from $250 billion to $500 billion, and I think it took us 20 or 25 years. Regulations were appropriate. And we might have had views on that, but they were appropriate. And then growth momentum started. And we could see easing happening. So I would think that at each point in time, every 5 years, let us say, in RBI, I have seen an evolution in terms of how they look at what they need to do in the context of the overall economy, in a policy construct and a supervisory construct. So I think what they have done is appropriate, considering where we are
at the moment.
This moment.
So, M&E financing, how significant is it allowing banks to finance acquisitions? Because, what has really changed from RBI earlier not wanting to allow banks to do it to now, changing its stance on the matter?
We actually have to go back to answer this question many decades.
Yeah.
And, some of us, I think, are too young to have understood why this was not done. So there was a period of time when we thought acquisition by one company of another company typically is a hostile route. And that the bank should not be an instrument in doing this. So this was long back. So I think that has now been set right in current context where everything is the market. and everything goes through the marketplace.
Yeah.
And in any case, if acquisition financing has to be done, there are other people providing private credit to
Private
do this.
credit
Or
is doing it.
you go through the capital market route and do this. So I would think, looking at the risks at that point in time, the way business was being done at that point in time, that was something that was not allowed. And now, in a completely different context, I believe the Reserve Bank has done the right thing to open it up, because it's an excellent avenue of business for banks.
Yeah, how much credit do you think all of these measures put together could really unlock? And more importantly, while this is an enabler for banks to lend more, is there real demand on the ground from corporates, given the deleveraging cycle we've seen and the global uncertainties?
There are two different things here.
Yeah.
Deleveraging, I think, is now a mindset issue with the Indian corporate.
Yeah.
They will not leverage themselves, by and large, the larger companies. I think at the MSME end, that will happen in due course. But we are talking of the mid to large corporates.
Yeah.
So it's not a question of deleveraging. This was for business purpose and acquisition.
Yeah.
And in most cases, these acquisitions are in a friendly mode.
Not hostile takeover.
So now you need to, it's not hostile,
Yeah.
but you need to understand whether there are risks. What are the securities? What is the underlying value of those securities? All those, that analytical skill is required, and I'm sure banks will come up to speed on that. Now, your question was, is there demand?
Yeah.
I'll say this, I'll not put a number to it,
Yeah.
but every single, I would say, global entity that I talk to, of whatever type, if they are in the financial services business, so I'm not naming it is a bank, non-bank, investment bank, I'm saying every single entity
Yeah.
in the financial services business globally was looking at India as a great place to come and set up a private credit business.
Okay.
Bringing in external funding and then providing this credit which Indian banks were not allowed to do for the marketplace. So the curiosity that was there, the interest that was there, and the opportunity that they saw, to me means that it was a very large number that is being talked.
That is on the corporate side, sir, but, with the government's GST rationalization, to what extent do you think could there be a growth delta add from these cuts alone, especially when it comes to retail credit demand?
Yeah. So for the retail side of it, if I were a banker, what would I look at it? I have two businesses. One is my corporate customers who produce things for the retail industry, and my retail industry. At any point in time, what you need to look at, I would think, are three numbers. What is the overall growth in the economy?
Yeah.
And I say I round it off to 7%.
Yeah.
It's a very healthy growth, which should have a multiplier effect of, say, 1.5 to 1 3/4 times. So we should see credit growth growing at maybe 11, 12% without any problem. So that has to be facilitated for the system, combining both corporate and retail. Within that, the retail side, let us assume, was hitting a bit of facing some sluggishness.
Yeah.
The GST cut elevates that sluggishness. You're now able to breathe better.
Yeah.
The retail customer is able to buy what the customer aspired for, and then going forward. So that is happening. However, having said that, I think on the retail side, there is need for caution. I think there is need for caution in a whole range of products, particularly unsecured products in nature.
Yeah.
If you look at unsecured products, and you need to be very clear that these are not consumption spend which you cannot really afford to service.
Yeah.
Now, that is dangerous.
Yeah.
I'm not saying that that is visible, but that is dangerous. Some stress has been seen in some areas, but I'm sure between the regulators and the concerned companies and concerned businesses, they'll take care of it. But overall, good for business.
You have flagged this over-leverage in retail credit before as well, especially, I think you spoke about fintechs lending to people with not such good credit scores, often with multiple open credit lines. Are there some kind of guardrails that banks must preemptively put in place, apart from the risk weights being raised, to ensure that there is no bubble?
See, you put it very nicely to say multiple credit lines.
Yeah.
For a banker, that is taken as, evergreening. So you use one credit line to green another one, and you take another one to green the earlier one, and so on. I think by and large, this about 3 years back, the Reserve Bank took steps, increasing risk weightages and things like that to curb that. So, and you're seeing that in the overall credit quality of the banking portfolio, where NPAs are at level and sustained to be at levels which I have not seen in my career. So less than 0.5% for most large entities. To me, the riskier side is very clear to identify, and one could look at it deeper to see to what extent there is a risk. But risk surfaces when NIMs go too high. So NIMs go too high for one of two reasons, either greed or provisioning. So we need to see what is really driving us, because a high NIM would also mean that the customer has to bear that burden of interest, which he or she is not able to bear.
Well, that is the retail side of it. But, just picking up a theme on, again, something that you'd spoken about earlier, banking system in the last 10, 20 or even the 50 odd years that you've seen it has changed dramatically. It is nothing like it was before. It's more of a digital platform, and the competition is not just from fintechs. It is from every company that has tech. You see the scramble for deposits, for instance, something that banks have been struggling with. Do you think the traditional banking model itself needs a bit of a rethink and overhaul?
That will evolve over time. However, what needs overall is the technology platforms that the entire financial system is using around the world, not just India, because these are all legacies. In most cases, the core platforms, the engines, are at least 30 to 40 years old. And then you have modern players using players who came up in the last 4 or 5 years using modern systems. Now, this competition is unequal. So the incumbents and the legacy for using legacy platforms need to think, how do I get to the current state? It's not as easy as I'm making out to, but their ability to traverse this journey will mean whether they come under competition or not. If they traverse it, there is no competition. They will. They are the big boys. They have got the muscle, so they will be able to hold their territory.
But are the big boys investing enough in technology to your mind?
It's not investing enough or not. They are investing a lot more than they ought to, but they're not investing it right. I'll make this very clear. Technology investments by big players in the fintechs around the world, in the financial services industry, not fintechs, around the world, they're not investing what they ought to invest. They're investing much more than what they ought to invest, but in things which will not take them anywhere. So they are basically taking forward legacies. You need to make a complete break from legacies and move to platforms which are current. That's not happening.
Okay, that is something to take note of, sir. Just to step back and look at the broader economy, you said we're a 7% growing economy. RBI has a 6.8% kind of a number. We remain the fastest growing.
I never quarrel with what the policymakers have put out. So as I get slightly older, I round off, so that's easy for everybody to keep in their mind.
But, what is the sustainability of this 6.8, 7% kind of a growth with the global turmoil that we're seeing?
To me, in a way, we are a microcosm. We need to keep track of what's happening around the world, but we are a microcosm. Why do I say that? I think I've seen transformations happening over, say, if I look at 50 years. And you start with Japan, the 70s. 70 to 90, 92 was there. China, 2000 to, or late 1990s to 2015, 16 was the heyday where they had double-digit growth and so on. One thing is very clear, that transformation journey is a long journey. And once it starts, it's very difficult to put a spanner or throw a spanner in the works. So it goes on. Yeah, there are these global things that are happening around you, but as long as you manage your economy in a prudent manner and are focused, and I must say that whether it's our government, whether it's our regulators, everybody is clearly focused on doing the right thing by India. So that keeps your growth engine going on. So I'm a firm believer that Viksit Bharat is something out there that will happen. And the journey is to 2047. And that journey, you take it at 7% plus, I think will get us to a stage where we are a developed country.
Capital markets are on fire. I think we've had 78 IPOs this year, $14 billion and much more in the pipeline, if that tells you a story.
But I'm looking at not only that, I'm looking at the debt market also.
Debt market also is maturing, Well, on that note, Mr. Kamath, it's been such a pleasure speaking with you. We'd like to continue this conversation. Unfortunately, we've run out of time. But thank you so much. Thank you for gracing us with your presence.
Global FinTech Fest, and we've saved the best for the last. This is where we show you how AI meets FinTech. This is where digital payments, bank, and technology come together and is literally on display.
Yes, from how we pay to how we protect our money. Artificial intelligence is powering it all, and we are here to check out what India's fintech innovators are bringing to the table. So Rachna, let's not waste time. Let's check them all out, and you go take the left and I'll take the right, okay?
Now I am here at Amazon Pay's booth. Now Amazon Pay has launched UPI Circle, which lets one person manage UPI payments for their family or their friends all securely, which means if you get onto the UPI Circle, you can make payment for yourself, but also for your mom, dad, your best friend, all securely using artificial intelligence. Now let's go back to Madiha and see what she's covering.
So we asked around just to check about what people are liking here the most, and MasterCard is one such exhibitor. They're about securing your data and your money through tokens. So your card details convert into tokens, and your personal details, your personal choices convert into tokens, and that's how you get a seamless, easy transaction without disclosing your personal details. It is reimagining how customers interact with financial technology, and I'll show you how this works. Avinav, can you show us how your details convert into tokens?
So when I'm up and about, I don't even carry my wallet, I don't carry my card, all I have is my phone. So what we do is, your card is, the PAN and the card number is not shared with the phone. A unique token is saved on the phone. And when I'm trying to make a payment, all I need to do is, even before unlocking my phone, I just swipe up, I authenticate it with my fingerprint, and there you see it, I'm ready to tap.
So, as I said, it is about converting your personal details, your card details, protecting your money through tokens. So let's see now what Rachna has with her.
At the Bharat Pay stall, and this IPO-bound fintech has announced the launch of Bharat Pay X, which is a payment gateway. This is for easier payments across sellers, merchants, and even consumers. But what's also interesting is that they have announced the launch of BharatPayX.ai, which is a virtual 24/7 assistant to help you out with queries. Now let's again go back to Madiha and see what she is up to.
So biometrics and payment security seems to be the theme this year. At Navi, they're going all futuristic. They've become the first UPI-based payments app in India to roll out biometric-based payments. So you don't need a PIN, just your face or the fingerprint to make the transaction. And we'll show you how it works right on his phone.
So let's say this. I'm sending to one of the friends. I'm on this, okay? So this is already, biometric is already activated for me. So I'll click pay. Okay, I just put the biometric.
And the payment is done.
Done.
Yes, Madiha, while biometric may be the theme that you're picking on, I am here at the Ray-Ban Meta stall where you can make payments through the glasses. So I'll just quickly show you how. So these are the Ray-Ban Meta glasses that I'm wearing, and I just have to simply look at the scanner and say, hey Meta, make a payment of 1 rupee. And then it just scans and the payment is done. Okay, so now we are here at the Razorpay stall, and they've announced something special and interesting with respect to artificial intelligence in partnership with NPCI and OpenAI. So you take us through how this works.
Yeah, I can do it live with you right in front of you, right? Internet is a little patchy, so please pardon me for that. Bunch of jammers around, but I'm going to just type something over here quickly. As you can say that I've just said over here that I'm craving a Dairy Milk Silk, can you help me buy it? So it calls Big Basket and it figures it out. It says, here's the item. It's at 102.94 right now on a small discount. I can see the image, and it asked me, would you like to place the order for this? And I said, yeah, yes, please. And it again calls multiple tools and then says, add it to cart. Would you like to pay using UPI Reserve Pay? What I've done is I've set up a one-time, mandate on using UPI Reserve Pay. said that up to 10,000 rupees you can keep debiting on my behalf over here. So I just say yes, of course, and that's it. The payment is successfully initiated. The order has been placed, and I can further track the shipment and the delivery status and all of that.
So that was Razorpay's US agentic AI integration announcement, but I think this is it for me. From here at GFF, let's see what Madiha has.
There are so many booths and so much to see, but at least we've covered the top few.
I think we did more than a few, and what was interesting is that even though fintech has been around for a while, what we saw here in terms of innovation is that now fintech is getting smarter, faster, and more futuristic in nature.
Clearly, the innovation wave is just getting started.
Even though it's curtains down here at GFF 2025.
So in Mumbai with Rachna Dhanrajani, this is Madiha Mujawar for CNBC-TV18.
and a very warm welcome to this special edition of Startup Street, coming to you from the Global FinTech Fest 2025. I'm Ritu Singh. Now, one of the key highlights of the FinTech Fest this time around has been Prime Minister Narendra Modi sharing a stage with UK's Prime Minister Keir Starmer, and the two leaders talking about the synergies between London's thriving FinTech ecosystem and India's very own digital public infrastructure. Now, in keeping with that theme of collaboration, Graphcore, which is an AI compute company that is part of the SoftBank Group, has now announced plans to invest £1 billion into India to set up an AI engineering campus in India's own Silicon Valley in Bengaluru. And to talk about the significance of this investment and the company's plans for India, I am now joined by Graphcore CEO Nigel Toon. Let me start by asking you about your plans for India itself. You've announced a major £1 billion investment into the region. Tell us how critical, India will be to the overall scheme of things for Graphcore.
Well, lots have changed at Graphcore since we were acquired by SoftBank about a year ago. We've had major investment coming into the company as a result from the SoftBank Group. We're on path to have £1 billion invested in the business, and soon we'll be at £1 billion a year. And as part of that, we're scaling up our operations. We're scaling up in the UK, but we also have taken the decision to really lean into the incredible talent that exists in India, particularly around semiconductor design, and to build a development center in Bengaluru. And so that is what we are announcing. We're starting with 100 positions from day one, growing quickly to 500 people the next decade. That's at least £1 billion investment into the India economy. And I think as part of the CETA trade agreements that have been announced between our countries, it's just an incredible opportunity for us to collaborate and to really lean in and work together.
Well, it's great to hear that, Nigel. But briefly for our viewers, what is your vision for this AI campus in Bangalore? And how significant a role will Bangalore, this center itself, play when it comes to Graphcore's work overall?
So we are going to be building some of the world's most advanced AI processors, and the team in Bangalore will be absolutely in the center of that, working in physical design, in logical design, in verification around what will be the world's most advanced AI processors. So really working at the absolute cutting edge, working in the very latest semiconductor technologies. We're already working at 2 nanometer and 3 nanometer, and we'll continue to push down to smaller geometry semiconductor technology. So the engineers will absolutely be working in the leading edge of semiconductor design and process design.
Well, speaking of those engineers, Nigel, you'll hire 500 people to begin with, but over time, what is your plan in terms of, what kind of employment generation opportunity this could provide, and how quickly you're going to scale up this center?
So like we said, we have 100 jobs open today. So we are looking to hire 100 people immediately, and then we will scale that team up to 500 people over the next, we hope, 2 years. And then I think we need to see how we expand beyond that point. But, this is a very significant investment on our part. I think we're very keen to hire the very best engineers. And I think based on the products and the way that we hope that this will expand, there's really the opportunity to grow to a very large site here. Obviously, within the SoftBank family, we also have ARM that has a very large facility. And I think it gives us a sense of the kind of scale that we can then achieve in Graphcore as well, perhaps trying to emulate, some of the success that they've had in that region as well.
Well, Nigel, Graphcore expanding into India and setting up this center in Bengaluru, how does, to your mind, does this tie up with India's own ambition of setting up its own semiconductor industry right here? I mean, how does this tie in with that?
Well, I think the key thing is the skills, isn't it, and the talent. So, creating that platform on which we can build the talent and really work at the very leading edge of technology. Hopefully we can be a place in which people come and learn the very best techniques, and perhaps they then go off and use those in the future in other companies, or they grow within the GraphCore business. So I think this is really a long-term investment in talent at the leading edge. Processor design is some of the most complex that you do in semiconductor. It needs the very latest semiconductor technology, the most advanced design techniques. And I think, that the talent that we build as a result of that is really going to benefit the ecosystem here.
I guess, Nigel, what I wanted to understand is how GraphCore is going to be working with India's national initiatives when it comes to semiconductor. And, what is the sort of policy or infrastructure requirement that a company like you would have to succeed in India?
Well, I think, first of all, we're doing this as a commercial venture. We're not relying on incentives or grants. This is GraphCore and SoftBank, investing. I believe that SoftBank has invested about $12 billion into the Indian economy through various investments and initiatives that they've had. So this is a continuation of that process, and we're not relying on any particular grants or support to do this. But I think one of the things within the CETA agreement, obviously, is some sections around IP, and I think it's very helpful, in terms of the collaboration between UK and India and the ways in which we can work together in this area. And I think we're really keen to kind of become a citizen within India and feel part of the initiatives that are being built here in the country.
Well, Nigel, finally, to wrap up, a broader question on this AI compute race we're seeing around the world, and giants like NVIDIA and so on and so forth dominating this race, so to speak. What is the edge that GraphCore will have, and what are your larger ambitions in this area over a period of time?
Well, it feels like AI is very developed already, but we're still just at the very, very beginning. We're going to see a lot of advances still in the AI area. Power consumption is absolutely critical, so the efficiency of the compute, and I think that's something where we've always had an edge, and we'll continue to bring that edge. Innovation around the software ecosystem as well. Really being a provider of a platform here.
Well, GraphCore is not the only company from UK looking to tap into the India opportunity. Fintech major Revolut, a major player from UK's financial ecosystem, is also looking to launch operations in India and has now announced ambitious plans to onboard as many as 20 million Indian users on its app come 2030. To talk more about Revolut's plan for India and how significant the market is going to be for the fintech major, I am now joined by Paroma Chatterjee, who is the CEO of Revolut India. Paroma, thank you so much for your time here on CNBC-TV18. Tell us about Revolut and its plans for India, how critical a market this will be, and what are you going to start off with?
So Revolut globally has made an announcement of its ambition to be present in 30 countries and have 100 million users.
Yeah.
And in a market like India,
yeah,
can become easily the highest contributor in terms of the number of customers' vision for
yeah,
Revolut overall.
Yeah.
Now, in order to do that, in a market like India, we're starting off with an all-in-one payments app that we're launching here, which means that it will have a PPI wallet with our own customizable Revolut handle, along with a domestic prepaid card against the prepaid wallet balances, which will have reward points that can be redeemed against goodies, as well as an international Forex multi-currency card with really affordable exchange rates. So it's an all-in-one product, and this product will also be available in a kids variant, where it can be given to your under 18s with parental controls on that particular product. So a family suite of an entire payments product managed through one single app.
But when does all of this go live in India?
So it is live with our employees currently.
Okay, which is a closed user group.
Which is a closed user group.
Yeah.
And post the reveal that we've done at the GFF today, we're actually going to start onboarding people out of a wait list, which is already 350,000 in number.
Okay, you have a 350,000 wait list already.
Yes, so it's been a very humbling experience. It is the largest ever wait list that Revolut has seen in any of the 40 markets that it has launched.
And this will be a paid premium subscription based?
We will have all
model?
variants. The entry level will be free, and after that there will be a premium subscription as well as a metal subscription, where the benefits are going to be different based on the subscription plan that a user chooses to go for.
But what is sort of the targets that you've set for yourself? I read you said you want to get to 20 million users in India by 2030. I mean, what would that mean in terms of, again, you know, average revenue per user? What are your expectations? How soon you could scale it? What will you start with in your first year?
So initially, one of our targets is an app target itself. In 19 countries, we're the most downloaded financial services app, and we would love to become that in India as well, even though the challenge is quite huge with a number of different apps which are already there in the Indian market. But that is the first target. The second target, as you rightly said, there are 200 million aspiring Indian middle class young digital natives. And we expect to convert at least 10% of them, which would lead to 20 million customers over the next 5 years. And this is all full KYC customers. We're not just talking app downloads here. Customers who actually go through the Aadhaar video KYC based onboarding. And therefore, we have the facility to offer them the full suite of financial services that we get licenses for. And in terms of transactions, we also do not believe in having customers just for the sake of having the customer as a vanity metric, but actually transacting customers. We aim to process more than $7 billion worth of transactions from these 20 million customers.
All right, but like you said, this is a tough market to be in, whether that is the regulatory regime or the competition, because we have a whole host of fintechs with all kinds of products already out there with a head start to you. You know, so how will you make your niche and how will you convert these customers, you know, going forward after this waitlist is cleared?
So the answer was actually inherent in your question. Today in the Indian fintech ecosystem, there are different players who are offering different products. There are domestic payment players offering UPI solutions. There are a few players who are maybe offering something on Forex. There may be a credit card out there which is rewarding spends for high-end salaried users. But there is no one single app that customers can go to do both domestic and Forex and have a rewarding card-like spend experience on a debit or prepaid platform. So we're actually combining all of that and giving customers that one single option, and that too for the entire family. So we actually believe that that is a need which is there in the market, which is yet to be addressed. And it is a difficult mode to cross, which we have, because you need a different license of a PPI license to do domestic. You need a different 82 license to do Forex. So we have spent the time to secure the licenses to be able to make this offering available in the market.
But is there a larger ambition for Revolut in India? I mean, beyond these Forex and domestic payment options, at some point, would you want to look at, you know, credit distribution?
Let me not get into the specifics, but as you know, globally, in 20 plus countries, we're a full-fledged digital bank. And the overall
India
ambition...
doesn't have digital banking licenses yet.
Fair, but overall Revolut's ambition is to offer as many financial services products to its users as possible in every market. So in the long run, even the ambition in India is to build on different products and offer as many products as our users need on the one single platform. We're starting with payments because, as I said, unifying payments onto one app for the entire family is a space that we thought was ripe to be disrupted, with this segment of customers really growing and disposable income in this segment going up. So we're starting off with that. First order of business is going to be to double down and become the most loved payments app for this set of customers, and then gradually bring the rest of the financial services products also into the Indian market.
But if I may step back and ask, you've been present in all of these countries all these years. What made this the right time to enter India? Of course, you took your time securing your licenses and, you know, securing your wait list. But what made this the right time for Revolut to be in India?
think two things. One is post-COVID, the company kind of stepped back in 2021-22 timeframe to think about going beyond UK and Europe, which had been its home turf for the first 5-6 years. And when you think about global expansion, the first country whose name pops up in your head in the world of digital finance is India. And therefore, it was a logical step to want to get into this burgeoning ecosystem here in India.
Well, of course. Let me finally ask you, Revolut is committing $13 million globally, to expand to get to its 30 new markets that you're talking about. How much of this will come to India? What kind of investments are you willing to make to grow here?
Let me not commit an actual number. What you would be aware of is Revolut already made an upfront investment of $45 million into our business even before we launched. To pay for the operating expenses and to build the tech platform and the product. Because that is where we needed localization of Revolut's entire global tech stack to make it fit for purpose for India and customize. Like building UPI, it has been built for the first time within the Revolut ecosystem. Building an Aadhaar and video KYC based onboarding system, that's also been built for the first time in Revolut's ecosystem. So a company that was willing to make that order of magnitude of upfront investments and the rest of the money that is available, as you know, for expansion countries, they are on tap for any country based on how the country scales.
So there's no allocation that X percentage of $13 billion would go into India, for instance?
No, we don't operate on a budgeting mechanism. It's as and when the country scales, the amount of money that is needed to support that country comes in. So it's a very different philosophy, which will translate into a much higher order of magnitude of investments that the market will see.
All right, on that note, we're going to have to slip into a short break, but don't go anywhere. We're back in just a moment with a whole lot more. Welcome back. You're still tuned into Startup Street. Now, it's been an action-packed 3 days here at the Global FinTech Festival 2025 in Mumbai. And now that it is finally coming to an end, we have 3 special guests joining us to unpack all of that transpired this time around, the big highlights to watch out for, and what the next Global FinTech Festival will hold in store. On that note, let me welcome Srinivas Jain, the Executive Director at SBI Mutual Fund, Sohini Rajola, Executive Director of Growth at NPCI, and Yashraj Irande from BCG joining in to give us all of those highlights. Yash, let me put you in a spot and ask you, if you were to really look at a big shift that has happened from GFF 2024 to 2025, whether that is, exporting our fintech, CBDC, everything that's been talked about. What do you think is the one big change that all stakeholders in the ecosystem need to stand up and take note of?
So, Ritu, I think this year has been in a different order of magnitude when it comes to really driving game-changing reforms and policy moves. And why this is important is because we have a very important gateway getting created in the form of Gift City.
Yeah.
And we saw in the inaugural a major launch of foreign currency exchange, which brings down settlement to a matter of 3 minutes, in fact, real time. But it's more than that. I think that's a fulcrum through which talent, technology, capital, ideas, that really gets unlocked. And as PM Modi was quoted, if you tap into Gift City, you tap into the rest of the world. And I think this time, while everything is much better than last year, I think just the global integration of talent, technology, capital and ideas that has happened is very, very different.
Let me pick up on capital and ask you, sir, in your hat as a venture capitalist as well. After GFF, what is the sense you get? This funding winter we'd spoken about last year, which has seen some improvement, but we're getting a mixed picture when we talk to the founders here, especially on valuations, on the kind of check sizes they're getting. How are things shaping up on that front?
So first of all, we have had a series of IPOs.
Yes,
and then,
it's been a busy week.
And also there is a lineup of other startups which are going to go for IPO.
Yeah.
So that has given a positive signal, and many conversations here talked about IPOs opening up, and that's giving an exit route for the venture capital industry and for the founders to go public. Second, the excitement that GFF 2025 has created, plus the large number of international visitors, especially investors who have come here, I think they got an appreciation of the length and the breadth of innovation that's happening in India. And I'm hopeful that that will now translate to, conversations started here, but result in funding and things like that. So I'm very optimistic that GFF opened up the funding tap for fintech startups.
Well, fingers crossed that happens, but any initial sense you could give us about the kind of investment decisions that have been taken, or what kind of investments could materialize out of this wonderful expo you set up here to showcase the kind of technology that is going behind the work in some of these companies?
So we don't have investment numbers, but the conversations are positive.
Okay.
The numbers till now, for example, we are now in October, right? So this fiscal, the numbers are actually as good or better than last year.
Okay.
So I am very optimistic that GFF only will now increase the interest in India.
Well, Sohini, balancing innovation and regulatory oversight has also been one of the themes that we've heard from some of the founders here. There was last year this talk of regulation stifling innovation at some point. Now a spate of, digital lending guidelines to payment aggregator guidelines and so on and so forth have come out. What is the sense there? I mean, are founders, of the view that regulators still playing catch up? Or do they feel comforted by the fact that, certain guardrails have been put in place that makes things black and white perhaps easier for them?
So, Ritu, I think if you go by the launches that we witnessed here, and there were a bunch of NPCI launches, but there were also launches that the RBI Innovation Hub and in fact the RBI FinTech department put up, right? And if you look at those launches, I think the regulators really leading from the front. There was a sandbox announced, there were a few CBDC models announced, and it would be too much of a stretch to say they are catching up. I think they are really front and center. Of course, it is the regulator's role to ensure that the guardrails are put in place, but the vibrant ecosystem, what we see here, and also the very participative journey of the regulator, I think it puts us in a very, very good place.
Okay.
So, we have had lots of roundtables,
Yeah.
not just with our regulator, but international
Global,
regulators
17
also.
regulators are part of the GFF this time. Yeah.
Those conversations actually will now, I believe, result in the regulators getting the feedback from the startups. Guardrails are necessary, I believe. And regulators now will probably take those inputs, and hopefully there will be now some, let's say, modifications in the coming days, I feel.
Well, Yash, since you also speak to a lot of these players in the industry, what has been the single biggest ask this year?
So, I think there are actually not one, but there are three things which are very important. And there are three numbers that kind of matter. The first is affordability. Any innovation that we bring, it needs to touch as many Indians as possible. And we speak about AI, and we have really made sure that we have a clear path towards AI for all. And the number that matters there is 200 rupees a month.
What is
Going down
200
to 50
rupees a month?
We believe in India we can make AI affordable for an average MSME owner or an average Indian customer for today as low as 200 rupees a month, but with India scale it can go down to as low as 50 rupees a month in the matter of next 2 to 3 years. So I think that's the one thing. The second thing that matters is a number that I care about a lot, which is 10 lakh crores.
Okay.
Which is the amount of Indian capital, domestic capital that can get allocated to unlisted securities, basically startups in India.
So that's the dry powder you're talking about, 10
That's
lakh
dry
crores.
powder. It is sitting on the balance sheets of our institutions, our HNIs.
Waiting to be deployed.
And it can be deployed, and the path to getting there is also very clear. And now we need to walk the path. Still, just knowing the path doesn't mean you can walk it. We have to walk it, but that's it. So that's the second thing, 10 lakh crore on capital. And I think the third number, which I must credit Chris sir for, is 7 is equal to 1,000, which is that the max 7 companies in US are not 7, they are 1,000 companies.
Okay.
1,000 companies have been acquired by these 7 companies in the last 10 years. And we need to get the M&A market to be as liquid and vibrant.
So consolidation will be a theme to watch out for?
Whether it's consolidation or whether it is actually proliferation of new ideas, because there is a way to actually create liquidity. I think it's going to be the latter. But in India, the ratio of an M&A market to IPO market is between 1 to 1.5, depending on which year you look at. In US, that ratio is 17 to 18 times. And there also, the Reserve Bank governor has already made the move toward allowing banks to finance M&A, but I think there are a few changes that we can do in terms of our legal structure and how M&A is supported to also really create deep liquidity in the market. So I think those are the three big asks. How do we drive scale and affordability? How do we make capital available? And how do we really allow flourishing in a liquid environment so that ideas can find valuation?
On that note, we're going to wrap up this special edition of Startup Street. Thank you so much for tuning in. It's a goodbye, and thank you for watching.
opening bell on the CNBC real-time exchange. And the big board, it's Phoenix Education Partners, provider of online higher ed.
A little over $1 trillion, that is the WHO's estimate of what mental health can cost India's economy between 2012 to 2030. In fact, it is a challenge and a crisis that the government acknowledges. The Economic Survey of 2024 has made a note of this and has also laid out a roadmap on what India needs to do to address this crisis. The gap is stark. It's stark in urban areas. It's even starker in rural areas. We're here in Chhindwara in Madhya Pradesh to talk about the work that is being done to bridge the access deficit that exists. And we're here with three very special individuals who are, with the use of their foundation, trying to turn things around, not just here in Chhindwara, but also across 19 districts in 8 different states in the country. Deepika Padukone, Dr. Shyam Bhatt and Anisha Padukone, many thanks for joining us here on CNBC-TV18. And let me start by congratulating each one of you on 10 years of LLL. Deepika, let's start with that. 10 years ago, when you decided to channel what was a very passionate but a personal choice for you to have this conversation, mainstream this conversation, which then resulted in the foundation and the work that the foundation is doing. 10 years on, your own evolution in dealing with this issue, but also the work that the foundation has been able to do, what do you make of it?
Wow. I still remember that first meeting in my home at the dining table. And it was just the three of us. It was myself and Dr. Shyam and Anna Chandy, who were also the people that I went to when I was seeking help. And I called them over, we sat together and I said, I want to do something for mental health in India. So 10 years ago, who that team was going to be, what we were going to do, how we were going to go about it. If you asked me to think 10 years on where we'd be, and if I don't think I'd imagine us sitting here today. All I know is that it was a deeply personal experience, and just going public with my experience was not enough. I knew very early on that this was something I wanted to share with the world, but also do something more. And then of course it took us a couple of years to sit together and to arrive at where we are today. So whether it's a rural program or a school program or a general practitioners program or just general public awareness, I think all of that has been, just years to the ground, understanding what it is. Of course, even back then, awareness, destigmatizing mental illness. Were and continue to be our focus area. But along with that, if you ask me 10 years ago, if we do a rural program, I don't know. But, so I think, and we've just been one of those, we also, if I may say, I think there was a lot of skepticism when we started about a celebrity coming out and sharing her experience with mental illness. Was it a publicity stunt? Was she being paid by a pharmaceutical company, if you remember that? So we've had to deal with all of, we had to deal with all of that. And I remember saying to the team, even at that point, that we just put our head down and continue to do the work that we have to do. A lot of times I think under it reached a point where the team was doing such incredible work and still afraid to take credit for it. And then one day I said, you know what? I think the time has come now where we have to start taking ownership of the work that we're doing. Because I think we've proven ourselves. So it's been I think that has been the journey from people being unsure to finally to us putting our heads down and doing the work. And I think today now the work is there for everyone to see. And I think there is nothing more gratifying than when we come to districts like this where we actually do the work and, to see firsthand, experience firsthand the change or the impact that we've been able to create. There is nothing more gratifying.
Deepika, before I talk to you about the meetings that you've had today, I know you visited homes of people that the foundation's work has impacted. I want to go back to what you said, that there was skepticism about, is she doing this for the money? Is she doing this for publicity? But along with that, there was also judgment and scrutiny. In your case, heightened judgment and scrutiny because you are, of course, a public figure and all of this was happening up for public consumption. But it also made me reflect that that's actually what happens to most people who are dealing with mental health issues. Because unlike a fever or a cough or a cold or even more debilitating diseases like cancer, it's not physical. You cannot see, feel, touch it. It's the invisibilization almost of the illness. As you have conversations today, do you feel like the response has changed? That there is now much more of an acknowledgement of the fact that this is not just somebody making stuff up. This is real.
Yes, very much. And I think that COVID's made that easier. So I think if anyone had any doubt that anything like mental illness, doesn't exist, I think post-COVID, I think it's become very clear to people. But yes, I think add to that, I think the consistent work that we have been doing around awareness, around destigmatization. And you're absolutely right that, the illness is such that unlike a fracture, unlike a fever, unlike diabetes, it's not something that you see. So the stigma, or rather what I was dealing with was twofold. One is, should I come, I didn't have any doubt about that, but yes, of course, it was not a common illness that that someone would easily relate to. So that, but yes, I do think that today people talk about it a lot more openly. For example, I think even the fact that the Prime Minister today has, Man Ki Baat or Pariksha Pe Charcha, which specifically focuses on mental health. Or the fact that I think a lot of corporates today have experts coming in, talking to their employees about the importance of mental health. Schools have experts coming in and doing intervention. It may not be a part of curriculum. It may not be something that they do on an ongoing basis, but they do have people coming in. The media at large, I think, the way the media is covering mental health today, everyone's aware about mental health, World Mental Health Day. The fact that we're sitting and doing this interview, I remember when we did this 10 years ago, World Mental Health Day was not marked on anyone's calendar. But now I see even media houses gearing up for World Mental Health Day.
Yeah, but I hope it doesn't become like Women's Day, where everybody has the conversation on Women's Day and then forgets about it. I hope that there is sustained engagement.
You're right, absolutely. But to me, it doesn't feel like that. To me, it doesn't feel like one of those conversations that will sort of disappear over a period of time. I don't think so, but I understand what you're saying. And I do feel like more and more people talk about it, cover it, and, maybe even include it. There's so much that we can talk about in terms of what more we can do, but definitely, I think in the last 10 years, we've really come a long way.
Anisha, let's talk about the last 10 years and what it's actually taken as far as execution is concerned. Because from, Deepika saying that, look, I want to give back and I want to do something about it, to actually ensuring that you roll this out. We have a problem as far as practitioners are concerned. We don't have enough practitioners. We don't have enough institutions that cater to the problem of mental health. And by all accounts, you look at any government data, the gap between requirement and treatment is as high as 70 to 90%. So the execution challenges of being able to address this complex issue, what's been the hardest part so far?
So I think probably the fact that with mental health, any avenue that you look at or anywhere that you see requires an intervention and requires support. And I think what we've done, if I may say so myself, I think what we've done well is not spreading ourselves too thin. And by that, I mean understanding at the core what this organization is about, what we stand for, what our strengths are. And therefore, where is the maximum impact that we can actually make? When we started early on, it was, a no-brainer that awareness is something that we could look at, given the ability that we have to influence the general public, and that's really what we focused on. So for almost for about 5 to 7 years, that was the whole and soul of what the organization did. So I think it's been a combination of, strategy and understanding where our strengths lie, and then combined with, knowledge of experts like Dr. Sham from the field who understand, where these gaps are, as well as, sort of the little research that is available in India, and then plugging that to try and zero in on, our focus areas, and which is why we sort of reached to the 3 A's, as we call it, the awareness, access, and affordability, which is where we are today.
And it's interesting that, while Deepika is now saying, let's take ownership of the work that we're doing, but very few people, I mean, I've been chatting with a few of the people here, including the Sarpanch, and they had no idea that the foundation had anything to do with Deepika. So you're not really riding on Deepika. The foundation is doing what it wants to do. But Dr. Sham, let's address the issue of resilience, of reducing the burden. The focus so far, not just in India, but world over, seems to be on recovery. And perhaps we need also to focus much more on recognition, reduction, and resilience. As you look at planning out or mapping out the next stage of what the foundation does, what will the pillars be?
Yeah, that's a great point, Shireen. We know that mental illnesses can be prevented by certain practices. And some of these practices have been part of our cultural and social, history. Meaning that if you come here, now we are here in this rural area, and what we see is that there's a strong sense of community. There's a strong sense of collective purpose. We have nature around us. People are exercising, they're eating good food. Now, these are fundamental pillars of health, both physical and mental. And so one of the things we want to do is ensure that people can, live in a way that helps them maintain their mental health. That's really important. The second part, of course, is that you want to be able to integrate different practices in a cohesive...
Not copy-paste what the West has done and sort of templatize that in India.
Definitely not. And I think that's really important to underline, and that's certainly something we as a foundation are looking at. The first many years, we were working strongly in increasing awareness about mental health, and I think, as in the last many years, that's happened. But we also want people to appreciate what elements are required to maintain mental health. And as you correctly pointed out, we don't want people just aping the West. Psychotherapy or talk therapy or psychological treatment has to be culturally relevant. We can't be importing things, without making sure that it fits into our culture. And that includes integrating insights from our spiritual traditions, practices like yoga, meditation, along with Western psychiatry and medicines when they're required. There's nothing, obviously that's important, but we don't want to go the Western way where we're not doing everything else required to maintain the society's mental health.
And look at the person holistically, and not just as the symptoms that they're experiencing at a particular point in time, and look at everything else that surrounds that individual, because so much has to do with the context that an individual is also faced with and living in. But Deepika, coming back to you, since we're talking about mainstreaming the issue around mental health, it's a conversation now at workplaces because the impact on productivity is being felt, it's being recognized, and it's being acknowledged. But are you starting to see, for instance, movies, the entertainment world wanting to take this up seriously as an issue without being preachy about it, but making it part of the discussion, the dialogue, the conversations, from a film perspective?
I mean, I don't know if I can speak for anyone else, but that's definitely my endeavor. Either in my individual capacity as an actor or via my production house. And I've been very vocal about this, that slowly but surely, I am focused on bringing about change in the workplace as far as the Indian film industry is concerned, because it's brutal, right? And I think we have a tendency of working in a way that is chalta hai. If a system has been working well, or well, I don't know according to whom, but if it's been working well for this long, then why shake the apple cart? And I've never really been that person. I'm always looking at how can we better something? How can we, how can we better? And so I think whether it's our work hours, whether it's our working conditions, whether it's the food that we eat, I think all of this needs to be looked at. Now,
there's a lot of pushback coming your way as well,
so
and
now
very publicly so.
If, by virtue of being a woman, if that's coming across as being pushy or whatever, then so be it. But it is no secret that a lot of male superstars in the Indian film industry have been working for 8 hours for years, and it's never made headlines.
So why should it be any different for women?
I don't know.
But you're saying that the lens is different.
Yeah, I don't want to take names now and make this into like this whole thing. But it's very commonly publicly known about a lot of male actors who've been working for 8 hours for years. A lot of them work only 8 hours Monday to Friday. They do not work on weekends. Yes, I think the larger issue being that while the Indian film industry is termed as an industry, we've never really worked like an industry. We are a very disorganized industry. And I think it's time that we brought in some sort of, some systems into this culture of...
Are you the lone voice, or are there at least other women who agree with what you have to say and would like to see
I also know a lot of women now and newly turned mothers who have also started working 8 hours. But that also surprisingly didn't make headlines. So I'm not sure about this myself.
It's just you, is it?
I have no idea.
But do you believe that you're going to have to pay a price for asking what you believe is fair?
I've done this at many levels, Shri. This is not new to me. I think even as far as pay is concerned, I've had to deal with whatever comes with, I don't even know what to call it, but I'm someone who I always fought my battles silently, and for some strange reason sometimes they become public, which is not the way I know and not the way I've been brought up. But yes, to fight my battles and to do it silently and in a dignified way is the way I know.
But Shyam and Anisha, let me get you to comment on that. What we have seen, of course, in India, the legislation in place. 2025, we had a landmark order from the Supreme Court, which basically said that it is a fundamental right, which is mental health. So the framework is there, but the gaps still exist, and the gaps are fairly large at this point in time. How do we ensure that the two converge? What is actually in policy, on paper, but becomes applicable in practice?
I think it's a combination of working collaboratively. Policy, of course, you have lawmakers, you have civil society organizations, and I think at least in my opinion, the first sort of landmark initiative was the Mental Health Care Act in 2017, and we haven't looked back since as a country where mental health is concerned. But like you rightly said, there are gaps at the at the ground level in terms of implementation. I think what it would require is for organizations, for NGOs or private sector organizations to work collaboratively with the government and ensure that what is there in writing is also sort of practiced and implemented. and it's easier said than done. We're talking only about mental health. You know, there are hundreds of other causes in this country.
Absolutely.
And hundreds of other things going on. So
income inequality, urbanization, I mean, you know, all of those issues need to be addressed as well.
Absolutely. So there's a lot to address, but at least where Live, Love, Laugh is concerned, I think the next decade of our work, you know, we'll try and focus on some of what you've mentioned. I did mention the 3 A's, the awareness, the access and the affordability. But I do think advocacy is an area that we have a very unique ability to make a big difference in, and hopefully we can sit here 10 years from now, have another interview, and you know, have done a lot of things in this space
and talk about new milestones or fresh achievements. But you know, as you look at the road ahead and you look at the next 10 years and what you want to achieve, outside of capital, which each one of you has said that fundraising is ongoing and is perpetual. But outside of that, what are the 2 or 3 things that you would like to prioritize from the foundation's perspective?
Well, I think firstly, of course, we continue to do awareness work because that's always going to be necessary, both in rural and in urban areas. That'll be ongoing. Secondly, we are also, as Anisha was saying, through advocacy, etc., we want to make sure that we improve accessibility, whether it's in terms of what insurance companies can provide for people or what government agencies can provide. How can we help increase the number of mental health professionals who are coming into practice in our country? And then how can we standardize practice? Because right now there isn't a single regulatory body which examines the practice of psychotherapy and ensures there's some regulation around it. So I think that's an important aspect as well. And then culturally appropriate, relevant therapies for India. That's really important in my opinion. As I was saying earlier, mental health is obviously universal, but people are different, cultures are different, our psyches are different, and we cannot import therapeutic practices blindly into our country.
Spending capacity is different.
Spending capacity is different. The whole, we have to rethink the mental health approach in this country. And one of the things is prevention, obviously. And prevention is largely maintaining things that we already have in our society and then adding what we need to from science, but using it appropriately for our country, which might include
enough data, though.
That's what I was going to say, which might include more research in this area. For example, there are a lot of treatments from Indian medicine, from our culture that haven't yet been adequately validated. We need to do more research about that. We need to do more research about the kinds of therapies, psychotherapies that would work for India. So absolutely, we need a lot more data because a lot of data is on Western populations that may not have much relevance to our population.
Is that something the foundation may want to explore, getting
something
into?
we're already doing.
We are.
Absolutely. I mean, I have to give you an example. I think, like Dr. Shah was alluding to earlier, the ability for, at least in rural areas, to have the backing and support of a community. And as we're doing with the community-based mental health program. If you look at the need gap in the country as well as, you know, compare the number of people suffering from mental illness as well as the number of professionals, we're probably not going to, you know, cover up that gap for a long time to come. And so what are the other types of interventions, you know, can we learn from other organizations that are doing similar work? And so the community-based model is something that we, you know, back in 2016 identified can apply culturally to India. And that's what we're seeing on the ground, the power of collaboration, working together. You know, you have beneficiaries, you have their caregivers, you have the ASHA workers, you have district level administration, you have sarpanches. So the whole sort of rural community coming together. I'm not sure if something like that would work in urban areas because it's, you know, we're sort of moving towards more nuclear families. And but I think largely India is still a collectivist society. So I think that's something we could, you know, tap into.
And this is an example of what we are seeing here in Chinwara, where it's one psychiatrist who visits, but we have the ASHA workers, we have local counselors, peer counselors, and they have transformed the mental health of this community with, you know, we have reduced the need for psychiatrists, leveraging all the other resources that this community has. And that's amazing to see a community that's empowered through knowledge, awareness and motivation and a sense of community. You know, it's amazing.
Absolutely, and that's one of the ways of being able to bridge the large deficit that we have in terms of practitioners. But Deepika, I want to go back to what you said, that you like challenging the status quo, that you consider yourself almost a disruptor in many ways. But it couldn't have been easy. I mean, you know, it's one thing today you are one of India's biggest brands, one of the biggest brands globally as well. You have the money to speak up, and that brings with it power and authority. But how did you find your feet? How did you find your voice? What did it take for you to be able to get here, to get to this position of calling yourself a disruptor and a challenger, so to speak?
I don't know if any, I think I've always been like that.
I can actually take that if you're okay. So I have, in cricket, if I can give you a cricket analogy, I'm the non-striker who's watching her on strike batting, right?
Yeah.
So, and I see this similarity between her and my dad. I think they have the ability to break out of their comfort zone when required, and sometimes even before someone else realizes it. So I think, my dad did that in his career. He moved to his training base from India to Denmark in the 80s or late 70s, which was absolutely unheard of. And I think she's done similar things as well at various levels. So I would actually put that as sort of number one. And then secondly, I think just the ability to constantly reinvent, whether it is, in terms of the craft itself, or understanding the requirements. I mean, we don't come from a film family, right? So today, if I step on a film set, I don't know what is going on. So I can imagine.
Except that you were very good with all the cameras this afternoon. You knew exactly which one was doing what.
I've done enough of these interviews. But, I can just imagine, for her to say, I want to be an actor, and then stepping on a set and not knowing anybody or not knowing what's going on. So basically just having to learn everything from scratch.
Right? Being thrown into the deep end.
So coming back to the first point that I made, which is just fearless and ability to step out of your comfort zone.
And if I may add, I think also for me, this deep need to be ridiculously honest and authentic. Even if it means I make mistakes, or I say things that people don't agree with, or walk a path that, that people have not. I basically have no, I'm okay with conflict. I'm okay with dealing with conflict and addressing conflict. I'm okay with ruffling feathers. I'm not someone, and like you've said, I've said, I'm okay with challenging the status quo. Because I've just always been like that as a child. I've never been someone who will just see something for the way it is and just be okay with it. If something's okay, it's okay. That's great. But if I can see that something can be different or can be better, even if there are systems that have been age-old, I'm okay to ruffle those feathers.
We just heard from your sister here that you also like reinventing yourself, and you've done a fair amount of that. I mean, you're now activist, philanthropist, entrepreneur, and of course continue to be an entertainer. What next as far as Deepika Padukone is concerned?
I mean, right now, just motherhood, which is so gratifying and beautiful. And but it's, Shireen, is also not like I sit there saying,
Hello and welcome to Global Eye. I'm Parikshit Luthra. The top story we're tracking this evening: China has tightened its export rules over rare earth minerals in a move that could significantly impact global supply chains for electric vehicles. Industry sources have told CNBC-TV18 that the export restrictions will be applicable on a range of critical minerals, including lithium batteries, cathodes, graphite anodes. These curbs will be applicable to all nations. The Chinese government has also imposed restrictions on the export of certain electric vehicle technologies, tightening its grip over the global clean energy ecosystem. Beijing has also added at least 5 new categories of rare earth magnets to its export control list. The new controls are expected to kick in from the 8th of November and are likely to be in response to US's curbs on US chip exports to China. These curbs also come ahead of a potential meeting between President Xi and President Trump. The Indian auto industry has informed the government about the new export curbs, and they may approach them formally for further assistance in the coming days. We also learned that all automakers are evaluating these new export controls that China has imposed. While some have said there is no immediate impact, others do believe this is going to be a negative for the Indian auto industry, which is focusing on localization of cells and batteries in a big way. So what are we going to see in the next few weeks in terms of the impact on production, on sales? We're joined by Inar Tangent, Senior Fellow at the Tahe Institute and the Chairman of the Asia Narratives at Substack. We also have with us Sohail Nathani, Managing Partner at Economic Law Practice. Gentlemen, thank you very much for joining us on the program. Inar Tangent, could you give us a sense of why China has now gone ahead and taken this decision to impose extra export curbs on more rare earths and rare earth processing equipment, manufacturing equipment, material used in lithium-ion batteries? Why would China do that?
Well, they're reacting to what Donald Trump is doing, who has been imposing more curbs, urging other countries to stop trading with China or to put large, export duties on them. As you remember, he went to Europe and said that he wanted 100% tariffs by the Europeans on both India and China. They're coming up to a meeting. Obviously, both sides are trying to show strong hands. Obviously, when you're dealing with Donald Trump, very mercurial, you have to take a very firm stance. Otherwise, he thinks he's more clever than you are and that he's somehow going to get over you. I think India has experienced this and nothing has changed. So right now, I would say this is tactical, but at some point, if there isn't some light at the end of these negotiations, it could turn into a reality.
Right. Sohail, if I were to try and understand from you, will these export controls impact lithium-ion batteries, their assembly in India, cell localization? And what about getting full assemblies? We had been seeing how Indian companies were trying to get around these export curbs on rare earth by getting full motors or full parts rather than getting the rare earth magnet itself. Will that also be impacted as a result of the new rules which kick in on the 8th of November?
So, I'd like to answer the question in 2 parts. Will it affect EVs? Yes, because you need these rare earth magnets to make batteries and motors. So it will affect local manufacturing, surely. And more importantly, even if you are able to import these materials in from China, there are going to be several restrictions on how you can use them and where you can re-export them. So on both counts, yes.
Sohail, would you say that China is now asking for more guarantees from India that these rare earths or equipment which goes into lithium-ion batteries, for that matter, is not going to be used for any kind of defense technology?
Yes, that is one of the requirements of the new China export control laws. And let's just understand what's going on. This is really a new, instead of warfare, a lawfare that we're seeing. As we heard earlier, the US has been using this tool very effectively, and now China is beginning to use this tool increasingly. And what differs in China using this tool is that they control depending on how you look at it, 70 to 90% of these raw materials, which are critical for both EVs, for defense, and for a host of other products. So being almost a monopoly supplier, they're able to dictate the rules a lot more effectively.
Right. That's an important point, Sohail. Let me go back to Inar Tangent once again. Inar, would you be able to tell us that earlier, of course, in April, we had seen China restricting the export of rare earth magnets, making them subject to very stringent licenses. India has not got any licenses for rare earth magnets since April, even though we say there is a bit of a thaw, some sort of relief, some sort of reset in ties. Having said that, does China now want to make sure that if US continues these import curbs, these export curbs on chips, then China would put restrictions on the entire electric vehicle supply chain?
Yes, I mean, the concern in Beijing is that things that are being shipped to one country will end up in a third country, particularly the U.S. I don't think anybody has any kind of illusions that the U.S. wouldn't do whatever is necessary to get what they thought they can. You know, currently India imports nearly all of its rare earth permanent magnets, about 4,000 tons annually. And that's projected to double by 2030. And China's a large part of it. What my colleague was talking about is China actually mines only 70% of all the rare earth, but it processes 90%. They're about 10 to 15 years ahead of anybody else in terms of the processing part. So that's the crucial thing that people should be paying attention to. It's fine to say, as India said, that they're going to develop their own technology and processing, but it's going to take quite a bit of time in order to do that. It's a messy, difficult business. And it'll, as I said, there's going to be a lag time if it goes through. In fact, hopefully, this is just, as I said, tactical, kind of getting ready to confront the Trump.
Right. This is to confront Donald Trump. Let me go back to Sohail Nathani at this point. Sohail, what impact do you expect on the Indian EV industry, and what are some of the legal issues that importers are facing right now? We believe that there is no consignment of high rare earth magnets that are coming in. Do other categories of rare earth also get impacted?
I'm sorry, I didn't hear your question. The voice cut off a bit. Can you repeat it?
Right. Sohail, what I'm trying to understand is that we were anyway not getting high rare earth magnets from China. Do these new laws, new regulations from China indicate that it'll get even tougher to get electric vehicle batteries, cathodes, anodes, rare earth processing equipment into India? Are there more categories of rare earth which have been included?
Clearly, there have been 14 new categories, as I understand, that have been added to the April list. There are other restrictions as well in terms of technologies. And of course, this is designed to make it more difficult. But as Inar said, that is this just posturing, or is this the new normal where China is going to keep a chokehold on these kind of technologies? Only time will tell.
All right. Thank you very much, Sohail Nathani. So let's hope there is some breakthrough between Donald Trump and Xi Jinping as well. Thank you very much, Inar Tangent, for being with us as well. That's all we have time for in this segment. But we're taking a short break. On the other side, India and Afghanistan have pledged to fight terrorism together as Afghanistan's foreign minister visits New Delhi for the first time. The Indian government says it would reopen its embassy in Kabul. A special discussion with Tilak Devashar, former member of the National Security Advisory Board and a senior member of the Cabinet Secretariat, when we return. Welcome back to Global Eye. Diplomatic ties between India and Afghanistan are set for an upgrade. The Indian government has decided to reopen its embassy in Kabul, marking a major step forward in formally recognizing the Taliban regime. Afghanistan's Foreign Minister Khan Mutaki was in Delhi this week and met External Affairs Minister Jaishankar. It marked the first high-level diplomatic visit to India since the Taliban overthrew an elected Afghan government in 2021. India had then shut down its embassy but always maintained a technical team to carry out humanitarian work. Deliberations between Afghanistan and India have come to speed in the past few months. The Afghan minister met with India's Foreign Secretary Vikram Misri in January this year. As Kabul's relations with New Delhi are seeing an improvement, its ties with Islamabad have been worsening. The Afghan city saw explosions overnight as Minister Mutaki landed in India. While some speculate the overnight Kabul attack to have Pakistan's involvement, no official confirmation has been seen as yet. Investigations are still underway. In a joint statement, Jaishankar said that both nations face shared cross-border terrorism threats. Speaking at a press conference, the Afghan minister, Amir Khan Mutaki, said that both nations should talk to the United States to urge them to remove sanctions on the Chabahar port in Iran's area. India's access to the port for trade with Afghanistan has been impacted because of the US sanctions. I'm now joined by Tilak Devashar, author and former member of the National Security Advisory Board. Thank you very much for joining us on the program, Mr. Devashar. Let me begin by asking you about the importance of External Affairs Minister's message that the Indian embassy in Kabul will be restored. What's the significance of this?
I think, first of all, the visit itself is very important because this is the first face-to-face physical meeting, bilateral meeting between the two external affairs ministers. Earlier, the EAM has spoken on phone, but this is the first face-to-face bilateral meeting. So that in itself is very significant, quite apart from what are the other takeaways from the meeting. Now, about the embassy, I think what the EAM mentioned was to upgrade the technical mission into an embassy, right? Now, an embassy has its own dynamic, has its own importance, and then what just a technical mission does. So yes, it is a very important step in our bilateral relationship.
Right. Sir, I would like to ask you about the fact that Amir Khan Mutaki, the Afghan Taliban foreign minister, is here for almost a week-long visit. And there are going to be discussions not just on restoring diplomatic relations, but terrorism, trade and commerce, connectivity, sports relations, skilling individuals, healthcare. So what do you think is the view that India is taking on the relationship with Afghanistan for the years to come?
No, I think it's, as you just mentioned, the menu of sort of items to be discussed and on the agenda is so vast. And it shows that India is keen, as well as the Taliban are keen, to re-establish our relationship on a very strong footing, which is based on a wide variety of issues and to a certain extent are people-centric, are focused on what can we do for the people of Afghanistan. Since we've had long-standing relationship with the people, we've had civilizational links. And how do we do that? So I think, India has done a lot of humanitarian assistance, has provided medical assistance, provided during the earthquake, we were the first responders. So a wide array of issues and agenda to be discussed, focused on people-centric issues. I think it's very important.
Right. Now, let me also ask you about the fact that Afghanistan has invited Indian companies to explore mining opportunities in Afghanistan. Do you think Indian companies will consider trade and commerce, maybe setting up deeper operations in Afghanistan in the current atmosphere?
I think the companies will have to take a call, and especially first they look for advice from Government of India, and also the kind of assurances that the Taliban will give to provide security and safety to the Indian companies, to their equipment, so that they are able to conduct their business in a very stable and secure manner. I think companies will have to take that call and government will have to guide them. But this is a very big breakthrough because, the buzzword these days is strategic minerals, rare earth elements, or whatever you like to call them. And Afghanistan is one of those countries which is supposed to have a lot of them. China, as you know, is already into doing copper mining in a place called Desainik. I don't know whether they've started mining or not, but they have a contract for that. So similarly, I think if Indian companies are willing to go there and explore minerals, it will be a huge plus for both countries.
Right. Mutaki said that Afghanistan looks at India as a close friend. They will never allow any group to use its territory against India. Does this mean that we have some assurance from Afghanistan that they will not allow Pakistan-sponsored groups or any kind of foreign actor to use their soil against India?
Yes, I think so. I think this is one of the guarantees that we have been looking. You see, though Taliban is fully in control in Afghanistan, but there are ungoverned spaces because of the terrain, especially in the east, which borders Pakistan. So we were looking for assurances and guarantees for them that they would not allow anti-India activity from Afghan soil. And largely, which means Pakistan, like they have done in the past, to shift the camps of the Taliban, to shift the camps of the Lashkar and the Jaish into these areas. So now that the Taliban have given an assurance, and I think we can believe those assurances that they will make sure that no anti-India activity takes place from Afghan soil.
Absolutely. I would also like to ask you about the importance of the India-Afghanistan relationship and how important is it for India to restore full diplomatic relations with Afghanistan at the earliest, considering what's happening with Pakistan, considering what's happening with Iran right now, the kind of tensions we are seeing in the Middle East and the larger Islamic world. How critical is it for India to restore relations?
I think we have a very good level of engagement with the Taliban, especially after this visit. Now, recognition is a formal diplomatic status that each country awards. And here, I think India will go by the international consensus on formal diplomatic recognition. UN, what the Western world, what other countries come up with. Being a democratic country, India, cannot just break the international consensus. Especially, you're aware of the treatment of women. You're aware of that it's not an inclusive government. So these are the factors that India will have to consider before granting full-fledged diplomatic recognition. But short of that, I think we are having a full-scale engagement, especially after this visit, with Afghanistan. So formalities are there, nomenclatures are there, but short of that, I think, everything else is going to be done. But also, I'd like to point out one thing. The most significant thing that the EAM mentioned in his opening remarks is that India and Afghanistan are contiguous neighbors. Contiguous neighbor means that we share a border. We have commonality. So, this is a very significant remark. And I think this is the one that should be played out, that we consider Afghanistan not as a next door, or a neighbor once removed, but actually a contiguous neighbor.
Right. That's an important point, sir. And the EAM also announced that there will be 6 new health projects that India will undertake. They will be gifting 20 new ambulances. Air connectivity will increase. Visas will increase as well. What do you think Afghanistan and the Afghan Taliban would want from India at this stage?
I think for them, developmental assistance is most important. There's medical help that India has announced, including CT scan. I think MRI machines were also talked about, because health is one issue which I don't think the Taliban have been able to pay too much of attention due to financial constraints. So the ambulances, upgrading of medical facilities, visas is something that the Afghans would really value and cherish. Right. And they're really looking forward to that. And also, I think the EAM talked about restarting or upgrading the projects that we were already involved in, and to open negotiations for new projects for the future.
Right. Can Afghanistan act as a buffer against Pakistan? And who do you think among different countries which have their embassies in Afghanistan right now, who do you think has the strongest relations with Afghanistan currently?
In terms of people-to-people contact, I think India has the best relationship. Over the years, the kind of help that, during the period of the Islamic Republic, we pumped in almost $3 billion of humanitarian aid, building projects which are people-friendly. No other country has done that. All of the countries were looking at security issues, They spent trillions or billions of dollars, but all on security issues. India was the only country that built hospitals, that built the parliament building, that built schools. So there is a lot of goodwill in Afghanistan for India amongst the people of Afghanistan. So I would say that we have the strongest relationship.
All right. Thank you very much, Mr. Devashar. With that, it's a wrap on this edition of Global Eye. Thank you for watching. Stay tuned to CNBC TV18 for more.
Hello and welcome to India Business Hour. I'm Ashmit Kumar. Here are the headlines that we're tracking this evening. Bulls maintain the momentum on the Lal Street. Sensex and Nifty gained 2% this week after a strong close on Friday. This is the biggest weekly gain in the last 3 months. Equity mutual fund inflows dropped 9% in September, but flows into gold and silver exchange-traded funds soar. Gold ETFs see inflows of over 8,300 crore rupees, and silver hits a record high of over 5,300 crores. Prime Minister Modi speaks to US President Trump for the second time in 3 weeks, congratulates him for the success of the Gaza peace plan, reviews the progress on trade talks. China imposes fresh restrictions on rare earth magnets ahead of a potential meeting between President Xi and President Trump. Industry sources say curbs have been imposed on export of certain electric vehicle technologies as well, restrictions to kick in from the 8th of November. Shapoorji Mistry reiterates demand for listing of Tata Sons, calls it not just a financial move but a moral and social imperative. Tata Trust's board met in Mumbai for the first time after the internal rift became public. For the first time, government opens the position of managing director at SBI to the private sector. Candidates with 21 years of professional experience, including 15 years in banking, will be eligible. Microsoft promises to notify customers about suspension of services due to foreign government orders. Says it is even open to a legal fight to protect data access to Indian public sector and critical infra in case of sanctions. This comes after Microsoft denied data access to Nayara Energy following sanctions by the European Union. Private equity firm Prosus buys 10% stake in travel portal Ixigo's parent for nearly 1,300 crore rupees. Ixigo to use the funds for expansion and artificial intelligence. Israeli forces begin to withdraw from parts of Gaza after ceasefire takes effect. Hamas has 72 hours after Israel's withdrawal to release the hostages. United States military likely to deploy 200 soldiers to oversee the ceasefire. Donald Trump to visit Israel on Monday. President Trump's relentless campaign for the Nobel Peace Prize ends in disappointment. Venezuelan opposition leader Maria Corina Machado, who is currently in hiding, has been awarded the Nobel. A White House spokesperson says the Nobel Committee placed politics over peace. Pressure cooker pioneer and the man behind the iconic prestige brand, T.T. Jagannathan, passes away at the age of 82. He revolutionized the cooker market by introducing the gasket release system, a safety innovation that made Prestige a household brand in India. Well, let's begin with the day's market action. The large street extended yesterday's gains. The Nifty ended at nearly one-month highs led by Pharma and financials. For the week, the market gained for the second straight week, posting biggest weekly gains in 3 months. All frontline indices posted gains of nearly 2%. Capital market and IT stocks also gained 5% each. And staying with the equities markets, gold ETFs saw a strong surge in demand in September, receiving record high inflows. Investments rose by over 280% compared to last year, while over 5,000 crore rupees were invested in silver ETFs. Inflows into SIPs climbed to an all-time high, SIP inflows rising by 4%. However, net inflows into equity mutual funds declined for a second consecutive month, dropping 9% from the month of August. Now, meanwhile, WTI crude has extended its fall, slipping below the $60 per barrel mark for the first time since May. This as the market's risk premium faded after Israel and Hamas agreed to the first phase of a plan to end the war in Gaza. Surplus supply also weighed in on the prices. Now, Prime Minister Modi and US President Donald Trump held a telephonic conversation for the second time in 3 weeks. In a post on X, Prime Minister Modi said that he congratulated President Trump on the success of the Gaza peace plan. He also said that the two leaders also reviewed the good progress achieved in the trade negotiations and agreed to stay in close touch over the coming weeks. Meanwhile, US Treasury Secretary Scott Bessent expects India to buy less Russian oil and pivot its energy imports to the US. In an interview with Fox News, Bessent said that both the countries, India and China, have played a big role in sustaining Russia's war against Ukraine through continued oil purchases.
We're doing a lot on Russia, but the real culprits here have been China and India in terms of buying Russian oil. They are keeping the Russian war machine going, and we put a 25% Russian oil tariff on India, and I think soon we're going to see a rebalancing where they're buying less Russian oil, more American oil, and if we were to do the same thing on China, I think the war would end quickly, but we need our NATO or European allies to join us. It's my strong belief that India is going to start rebalancing over the next few weeks and months, and we will see a diminishment of Russian oil in favor of U.S. oil.
Now, newly appointed U.S. Ambassador to India, Sergio Gore, and Deputy Secretary Michael Rigas will be in India on the 6-day visit later this week. They are expected to meet Indian government officials to discuss bilateral issues. In a statement, the 38-year-old Gore, a close aide of Trump, is the youngest ever U.S. Ambassador to India. Now, Indian pharma stocks surged after the U.S. Senate approved the Biosecure Act. This act will prohibit federal funding for Chinese biotech companies, thereby potentially benefiting Indian pharma companies. However, the bills still need to be passed through the House of Representatives and received presidential approval to become a law. United States Embassy in India has clarified that the country did not supply any missiles to Pakistan. This has come after reports suggested that the Trump administration allegedly sold missiles to Islamabad. In a statement, the embassy said that the Department of War released a list of standard contract announcements which referred to an amendment to an existing foreign military sales contract. The embassy further clarified that no part of the contract modification is for deliveries of new advanced medium-range air-to-air missiles to Pakistan. Now, China has imposed fresh restrictions on rare earth magnets ahead of a potential meeting between President Xi and President Trump. Industry sources have said that these restrictions have been imposed on export of certain electric vehicle technologies as well. Parikshit Luthra now joins us with more details. Parikshit, tell us, what are your sources telling you?
The Indian automobile industry is clearly evaluating the impact of the latest import restrictions which have been imposed by China on the EV supply chain. In April this year, they had imposed restrictions on the export of rare earth magnets, making it very clear that this would have to go through a licensing process, and such rare earth magnets cannot be used for defense equipment, and therefore China required guarantees to be given. Now, as a result of the US-China tensions and possibly as a negotiating tactic, China has gone ahead and imposed restrictions on 5 to 6 other categories of rare earth magnets which are used in automobiles, consumer electronics for that matter. They have also put restrictions on the export of lithium-ion batteries, anodes and cathodes, and material, raw material, which goes into making lithium-ion batteries as well. So what these restrictions could do is make it further difficult to get electronic components or components of electric vehicles from China into India. We were already not getting high rare earth magnets, and we believe that the supply chain of light rare earth or even medium rare earth magnets is going to get further impacted in the days to come, unless and until US and China don't arrive at some sort of solution. Some automakers have told us that this could be a negative for the auto industry if things don't ease up in the next few months. Others have said they do not face any kind of immediate impact. Why is that? This is because many companies have started finding alternate supply chains, or they've started importing full assemblies, or they have in advance got large orders of light rare earth magnets or made some modifications to their electric vehicle components here in India. So everyone has been trying to find a way out, but how these restrictions in China will further impact the auto industry, I think the next few weeks will tell a lot.
Right, Parikshit, thanks a lot for that. Now, staying with China, the country has announced that ships coming in from the US will be charged for docking at Chinese ports. As per CNBC, Beijing will charge 400 yuan per net ton for US vessels starting the 14th of October. This comes as a response to US imposing a $50 fee on Chinese ships. Chinese officials have also said that the new fee would apply to vessels owned by US businesses, organizations, individuals, or entities holding a 25% or greater stake. Now on to the latest in the battle within the Tata Group. The Shapoorji Mistry Group has reiterated demand for listing of Tata Sons. In a statement, the largest private shareholder in Tata Sons called it not just a financial move, but a moral and social imperative. The board of Tata Trust met in Mumbai for the first time after the internal rift became public. Shilpa Rani-Petta is joining us now with more details. Shilpa, what is the latest and what is this statement that is being made by the Shapoorji Pallonji Group?
Well, as you rightly pointed out, the board of the Tata Trust held a day-long meeting today. Now, while we understand that the meeting went cordially and it was largely centered around discussion of dispersal of funds for charitable activities, Shapoorji Pallonji Mistry soon released a statement. Now, in the statement, Mistry and the Shapoorji Pallonji Group has once again reiterated its long-standing demand for the public listing of Tata Sons, calling for greater transparency and corporate governance within the Tata Group. Group. Now, in a statement that was issued today, Shapoorji Pallonji Mistry, the head of the SP Group, said that the recent developments within Tata Trust make this an appropriate time to revisit this issue. He said that the listing of Tata Sons would uphold the principles on transparency and fairness that was envisioned by Jamshedji Tata and strengthen trust among employees, investors, and the public, who he called other stakeholders. Now, the group also referred to the Reserve Bank of India's scale-based regulatory framework, under which Tata Sons, as an upper layer NBFC, is required to comply with additional norms by the 30th September 2025. Now, he maintained that he is confident that the RBI would ensure compliance in line with the principles and fairness of public interest. Now, the SP Group, which holds about 18% stake in Tata Sons, has maintained that a public listing is not just a financial move, but a moral and social imperative. Now, the statement argues that the listing would unlock value for over 1.2 crore shareholders of listed Tata companies who are indirect shareholders of Tata Sons, and will also benefit Tata Trust through a more equitable and transparent dividend policy, which will then ensure sustained fund inflows into the trust, which can then be dedicated to charitable activities. Now, the SP Group also concluded that its position is not in conflict, but in consonance with the ideals of Jamshedji Tata. Back to you.
Now, shares of IT majors TCS were under pressure, although its second quarter performance surpassed expectations. The IT majors headcount fell below the 6 lakh mark for the first time in 3 years in Q2. The company has said that workforce changes are driven by growth and not cost cutting. Speaking to CNBC-TV18, TCS CEO K. Krithivasan said that the company is advancing its plans to become the world's largest AI-led tech services player via internal investments, workforce expansion, and acquisitions.
We have to take this ambitious journey and be the largest AI-led services company. Currently, we are looking at about $1 billion, but just to clarify, we will be looking, this will come as equity and debt.
This $1 billion?
$1 billion. So my rule of thumb, like what I had is roughly 150 megawatts is $1 billion.
Okay.
Okay, so we are talking about 5 to 7 billion, but I'm not going to be investing all 5-7 billion year on. So it is going to be a 5 to 7 year exercise. We'll do first, what we intend to do now is establish a capacity of 150 megawatt to start with, which would start in about 18 months time, by which we should be operational.
And a relief for Vedanta, the Supreme Court has refused to hear a plea seeking investigations into the allegations raised by US-based short seller Viceroy. The petition alleged inaction by regulators SEBI and RBI, along with the Ministry of Corporate Affairs. The government argued that petition looked motivated. The centre also argued that this has become a modus operandi of overseas short sellers to release reports and then engage in litigation. And speaking of Vedanta, the government has opposed the extension of Vedanta's production sharing contract for Cambay Basin Oil and Gas Block in Delhi High Court. The court was hearing a plea by Vedanta challenging the government decision to reject the company's application for extension. The production sharing contract ended in 2023. The government submitted that rejection of Vedanta's plea for extension was due to defaults by the company. The government claimed that there was no need for interim relief, with ONGC planning to take over at a moment's notice. Now, workspace provider WeWork India made a muted debut on Dalal Street. The stock debuted at 650 rupees per share, almost flat compared to its issue price of 648 rupees. The issue was fully subscribed only on the final day of subscription, with institutional investors' bid leading to the demand. Ixigo's parent company has sold 10% stake in travel platform to global tech investor Prosus for 1,300 crore rupees. Prosus can appoint a director to Ixigo's board once the deal has been completed. Ixigo has said that the company plans to use the funds for acquisitions and to double down on the hotel segment. Now, Microsoft has promised to notify customers about suspension of services due to foreign government orders. In a statement, the company said that it is even open to a legal fight to protect data access to Indian public sector and critical infrastructure in case of sanctions. This comes after Microsoft had denied access to Nayara Energy following sanctions by the European Union. They had restored that action after Nayara had moved the Delhi High Court. Now, private sector professionals will now be eligible to apply for senior leadership positions in the public sector banks. This will include the position of Managing Director at State Bank of India. The revised guidelines will allow candidates with at least 21 years of professional experience, including 15 years in the banking sector. The Executive Director position at large public banks will also be made available to the private sector. The experience needed to fill this position will be 18 years minimum, with 12 years experience in the banking sector. Now, the Supreme Court has dismissed a PIL seeking a judicial probe into the deaths of children in Madhya Pradesh and Rajasthan, allegedly linked to toxic cough syrups. The plea also sought stricter oversight of pharmaceutical products. The centre argued that the states of Tamil Nadu and Madhya Pradesh are taking necessary steps. And coming up on India Business Hour, pressure cooker pioneer and the man behind the iconic prestige brand TT Jagannathan passes away at the age of 82. We will get you an interview with him in just a bit. And you can also catch all CNBC TV18's news and updates on YouTube, Facebook, Instagram, X, and Geo Hotstar. Do subscribe to CNBC TV18 Access for exclusive stories and special shows like The Editor's Playbook and many others. External Affairs Minister S. Jaishankar held bilateral talks with Taliban Minister Amir Khan Muttaqi in the national capital. This is the first time a top Taliban leader has visited India since they overthrew an elected government in 2021. Minister Jaishankar said that India is fully committed to the sovereignty, territorial integrity and independence of Afghanistan. India has decided to reopen the Kabul embassy.
India is fully committed to the sovereignty, territorial integrity and independence of Afghanistan. Closer cooperation between us contributes to your national development as well as regional stability and resilience. To enhance that, I am pleased to announce today the upgrading of India's technical mission in Kabul to the status of Embassy of India.
Now, Israeli forces have begun to withdraw from parts of Gaza after ceasefire took effect. Hamas has 72 hours after Israel's withdrawal to release hostages. The United States military is likely to deploy 200 soldiers to oversee the ceasefire. United States President Donald Trump demanded that Israeli hostages must be released immediately.
I don't know what phase 2 is, but there will be disarming, there will be pullbacks, there will be a lot of things that are happening. I think it'll take place, and I think you're going to end up with peace in the Middle East. But we have to get our hostages back, and we weren't going to do it at the end, we're going to do it at the beginning.
The Supreme Court has given the centre 6 weeks' time to respond to a plea seeking restoration of statehood to J&K. Petitioners flagged that the Apex Court's judgment in the Article 370 case recorded the centre's undertaking to restore statehood. The plea also argued that the argument of security and border states to strip statehood from J&K could also be applied to the states of Uttar Pradesh, which borders Nepal. Now, President Trump's relentless campaign for the Nobel Peace Prize has ended in disappointment. 58-year-old Venezuelan opposition leader Maria Corina Machado, who is currently in hiding, has been awarded the Nobel Peace Prize. A White House spokesperson said that the Nobel Committee placed politics over peace. Machado, in her first reaction after the announcement, said that she believed that they are very close to achieving freedom for Venezuela.
It has been a very long journey at a very high cost for Venezuelan society. And for years, for many years, the world didn't realize how hard, how difficult, how painful and destructive this process had been. And the Venezuelan people persevered. And I believe that we are very close to achieving, finally, freedom for our country and peace for the region.
I don't think anyone present here will object, or anyone from your audience will object, when I say that there have been cases when the Nobel Prize Committee gave the Peace Prize to people who did nothing for peace. But ultimately, it's not up to me to judge. And I don't know whether the current US president is worthy of the prize, but he really is doing a lot.
Now, pressure cooker pioneer and the man behind the iconic prestige brand TT Jagannathan has passed away at the age of 82. He revolutionized the cooker market by introducing the gasket release system, a safety innovation that made Prestige a household brand in India. Manglam Malu spoke to Jagannathan a few years ago on his pioneering innovation.
In fact, I read a lot about the gasket release system, so I would like you to explain to me exactly what it is and what is this story, because it saved 1 million lives.
We found that we were not selling outside South. There was no market because there was something going wrong. So I decided to go find out what was going wrong, and discovered that I traveled UP extensively and discovered that our pressure cookers were known to burst.
Oh.
And the pressure cooker bursting is not is dangerous. It could even kill. And I went to one of our dealers in Lucknow, and he showed me his store. He had dozens of Prestige pressure cookers that had burst. So we were losing market share because they don't buy Prestige, it will burst. We had to find out. I couldn't believe that we made pressure cookers that burst, because we were very good manufacturing. There's no question about that. So something else had to be the reason. So when I analyzed the reason, I found out it was a spurious safety block. A pressure cooker has a weight valve, which maintains the pressure, but sometimes it gets blocked. When it gets blocked, the safety device is supposed to open up and release the pressure. But safety device is made of a tin bismuth alloy, which is very expensive. So the spurious guys used to make it out pure aluminum, which won't melt. And so when the weight valve gets blocked, the pressure cooker will burst. And when a prestige pressure cooker bursts, it's very violent. And so people were just off pressure cookers. So, and the company would have gone bankrupt if we knew that. So what happened was, I put on my thinking, thank God I was an engineer.
The IIT cap.
IIT, I helped. Put on my thinking cap and came up with what is called the gasket release system. Actually, it's such a simple thing looking at it now that you wonder why nobody discovered it before. It's just a hole in the lid. But that hole in the lid, what it does is, it does not depend upon the safety plug for secondary safety. The gasket comes out through the hole in the lid and releases pressure if it exceeds cooking pressure.
You did not patent it?
No, it was in fact not a good idea to patent it for two reasons. One is that in the US this used to happen, pressure cookers used to burst, so the US market went away from pressure cookers. That is something I wanted to avoid in India. And India is the largest market of pressure cookers in the world today. 15 million pieces. If we'd allowed pressure cookers to burst, it wouldn't have happened. That was one. So I did not want pressure cookers to get a bad reputation. The second is, if a pressure cooker burst anywhere, everybody thought it was prestige. So I had to avoid that conception also, so we came up with the idea that we won't patent it.
Well, with that, it's a wrap on this edition of India Business Hour. Thank you so much for watching. News and updates will continue right here on CNBC-TV18.
Dalal Street gains for the second straight week to post its biggest weekly gain in 3 months. All frontline indices gained close to about 2%, with IT stocks leading the up move. In this week's edition of Editors Roundtable, we'll decode the week on Dalal Street. We'll tell you what to expect from the earnings season in Q2. We'll put the spotlight on the pharmaceutical stocks. I am Reema. With me are Nimesh, Prashant and Ekta joining in. And also joining us today, not in the studio, but we've got Sandeep Tandon, founder and CIO at Quant Mutual Fund. Hi guys, how do you feel?
Well, I think the big news of the week came in the last hour of trading on Friday. Guess what?
Nobel Prize.
Nobel Prize?
Not to Donald Trump.
And it's not gone to Donald Trump.
So I think, I maybe say at the outset, I think today evening will be interesting and the weekend will be interesting.
Yeah.
With,
Watch for the tweets. We all hope for peace.
A lot of truths, being revealed in that sense. But markets were, I think,
I would say pink of health.
Absolutely, right? I mean,
IPOs, pink of health, the color as well. So. But no, so in a way, it's a good market, right? I mean, this week we saw a bit of momentum in the broader markets. Nifty is also up, a bit of short covering as well. The FI selling has reduced to a larger extent. DIs have been buying the market. So it's a feel-good market, so to speak. And now there's an anticipation that maybe you're going to see that finally deal with the US. If that has to happen, if that has to happen, then there is still a room for an aggressive short covering rally, because on the Nifty, the FIs are still short more than 90%. So, aggressive FI positioning on the short side, things changing at the margin, earnings so far, it's not been a disaster to start with. So let's see how it goes. But
have there been some Nifty Diwali targets which have already come in?
I don't think people have started talking about Diwali targets and Diwali picks and all. I mean, last 3-4 years, every week or maybe every month was a Diwali, right? I mean, so much of momentum, so much of rally. So I think people have forgot that.
So if I have to list the positives this week, one, the Nifty and the Midcaps up 1.5%, 2%. IPOs, LG Electronics saw 4 lakh crore, and despite that, you're seeing FIs also buying in the Indian markets. 3 continuous days of FIs buying in the cash market, so that's a positive. The phone call between Trump and President Donald Trump.
About that, right?
Gold and silver, continuing with their
But
frenzied
that point
run.
that you made, LG, 4.5 lakh crores out of the market. Typically, what did we say? We said IPOs are sucking out liquidity.
Yeah.
But with 4 lakh crore out, blocked, not in the market.
And we still did well, and the FIs are also buying.
And this money will come back next week.
It's going to come back.
So imagine.
But let me just quickly, wrap up things in terms of what the week looked like. So Nifty 1.6% higher, Bank Nifty 1.8, Midcap 2%, Small Cap 1.5%. Sectorally, the IT index was up 5%. Healthcare was up 3%. Hospitals, by the way, right? Max, Fortis, etc. Real estate was up 2.3% as well. Large cap IT stocks, Infosys, TCS, Tech Mahindra, 4 to 5% gains here. Eternal was 6% higher this week. In the broader market, and I look at the NSE 500 universe, Tata Com was up 16%, although 10% of that 16% came on Friday. PG Electroplast 14%. BSE was up 14%. So that's, of course, I mean, we've been reporting on over the last couple of days, a little bit of change in stance at the regulator in terms of what they're thinking perhaps is on derivatives. The consultation paper itself on weekly options and longer tenure derivatives, perhaps a little delayed now. Nykaa was up 10.5%, Divi's was up 10%, and a bunch of these smaller, not so small also, but Yes Bank was up 10%, Karur Vysya was up 8.5%, Federal Bank was up 8%. I mentioned, hospitals, Fortis 8, Max Health 8. Some cuts, but these are largely, a bit of small reversals, right? Tata Investment went up like a rocket, down 7. NetWeb has been a rocket for all this year, was down about 6.5% or so. So that is basically where we stand. Sandeep Tandon is with us. Maybe we can go across to him for a quick, just a broad view before. Okay, can we go across to Sandeep? Sandeep, hi. Can you hear me?
Yeah, I can hear you.
Hi. What's the view, Sandeep? We were talking about some factors this week and perhaps what's important next week. How are you feeling, and do you think there's more risk on here?
Hey, Prashant, frankly speaking, is definitely a risk on. The biggest important thing which for me is an inflection point, we believe that USD INR pair is on the verge of peaking out. Okay. And that's a very important statement which I'm making based on our analytics. We have talked about USD and right from 2012. In our 2019 book, we talked about heading towards 90. We are approaching there. We are in the fag end of that. And the way we have seen selling exhaustion on the FI side, and last 3-4 days, we have seen that has tapered down. Gold and silver also on the verge of peaking out from a medium-term perspective. I think background is more constructive for India equities. We have been underperforming both emerging market as well as developed markets. Sentiments has been extremely bearish. People have virtually given up. And most important thing, some visibility is coming on the trade-related challenges which we have seen. And plus the government initiative on the GST side, plus income tax and the interest rate also. So I think the background is more constructive for second half than what we have seen now. And hence we are 98% invested in the equities.
Hi Sandeep, in fact I remember last time when we spoke, you're among the very few who were expecting the pullback, and it's actually playing out, right? And you, as you rightly said, now there is a visibility of some sort of a deal with the US as well. Given that, how would you position the market for the second half? IT has not done well in the first half, Pharma has not done well, and all these export-oriented auto stocks as well. Is that a place now to look at, given that there could be some deal with the US around the corner?
I think the way I look at, yes, IT obviously it is now trading in a neglected zone. The only challenge is that still the triggers are missing. So it should not be high conviction trades. We can say we can go all out and build exposure. I think it'll be too premature, but from a bottom fishing perspective, answer is yes. Auto obviously it has done well, and I think it has potential to do further well. But key question comes whether everything is priced in for the just GST thing or not. So I'll be slightly skeptical in the auto also building at the current levels. Rather, I will say that background is getting more constructive for the PSUs. Okay, PSU banks in particular, in general PSU. That's a theme which we think we are liking it for last few weeks. That's a thesis which has potential to move up. Then we're talking about large infra space. Consumption is also pretty mixed. It's very difficult to pinpoint one particular sector or talk about it. But I think these are the larger theses. Hotel and hospitality has done extremely well. I think we as a house remain constructive on this space also. I think few things are very clearly visible. And I'm saying forget other thing. Broadly, it is constructive. And you look at the depth of the market also, I expect it to improve further from the current levels.
Sandeep, I know I just heard you talk about technology, that it's in the neglected zone. That's great for value buying, but it still lacks positive triggers. But wanted to get your thoughts in what TCS is now talking about. Now they've articulated their vision. They want to be the world's largest AI, a tech services play. And this was a company which was very conservative, very cautious. They never made any acquisitions. They deployed all their capital either in buybacks or skilling existing talent. And now they're looking to build out a 1 gigawatt data center capacity, AI data center capacity. They're going to be very aggressive on the acquisition front. The word was very aggressive on the acquisition front. So do you think the company's positioning, the body language from what they had to say has changed to some extent? And would you read that positively? Because, till a month back, we were complaining that these IT companies are so cash rich and all they're doing with the capital is deploying it in buybacks. And that's an unproductive use of capital. Now they're making some bets, in the AI ecosystem. We'll have to see how it plays out. They execute on that, what the competitive landscape looks like. But at least it's a start. Would you read are we reading too much into what TCS has announced?
Generally, we don't give comments on individual company, but in general, I think we are too late for that. Today, we all remember Vishal Sikka, okay? What step he was taking at that point of time, and he was criticized, and unfortunately, he has to leave. So if you really ask me, we as an Indian IT company has already lost that opportunity. So which was there. So I think it will take some time. Now, personal view is that if TCS or Infosys and of the companies for last few months are talking aggressively on those lines, when whole world has moved to the next level. So, and even including China, look at, there is no comparison between us and China now. They are way ahead. Okay, at some time, and maybe a few years back, India was way ahead in this space. I think we have lost that opportunity. My personal view is that it will take 4 to 6 years more to rebuild and then say that we are also exist in this space. So I think it will be too premature to get too excited to see these statements. Companies, some of these large companies are reacting very late on this particular front.
Rima, I just want to say one thing on that data center, which is the question, right? What TCS is doing is they're not saying that we're building a large language model or something.
No.
They're just doing a data center.
Yeah, the infrastructure.
Data center as a business, it's an AI data center, but the AI part is
very small.
It's going to be, that data center is essentially going to be offered to, as we discussed, to hyperscalers. So it's like any other data center, which is not...
the only benefit is that they have the...
Yeah,
but the benefit is that it's in the Tata ecosystem, right? Like Tatas have the land bank, they have energy solutions, cooling solutions which they can leverage, like Tata Communication.
My only point was
that's the benefit TCS enjoys.
For them,
right?
it may be there's a lot of benefit synergies, etc. My only thing is, does it leapfrog them into this AI race suddenly? No, because it is a data center. I mean, at the end of the day, and so
and
that's the point.
It's a passive infrastructure. Yeah. The question is that does it eventually open up, for the company to get into active infrastructure?
No, to me,
but it depends.
The welcome thing is at least they're thinking in slightly different directions. And I thought personally, that statement which they made, right? I think this is for the first time they
articulated
that
that
ambition was very clear that we want to be the world's #1 leading IT services, AI IT services technology company. So, the fact that they want to stay a services company, which I think they are, but also but they want to be ahead and sort of, a leader in that space.
And even the hard decision to let go of people. Yeah. It's hard for a company like TCS or any Tata Group company to let go of 12,000 people, but they took that. And we asked Kriti, and he said, it's the right thing to do. It was the right thing to do. So if you take that also as a signaling mechanism.
Absolutely.
But, Street was not very excited. Stock was down.
You're getting prepared for the Q2 numbers?
So it's going to be a soft quarter. At the margin, it's going to be weak. But in that sense, it will be a bottom quarter because for the last 5 quarters, we've been reporting weak numbers. So there is a lot of hope that maybe this is the bottom quarter and from here on, one should look upwards. In terms of numbers, for Nifty earnings, it's going to be around 6% for Q2 versus 11% in Q1. So clearly at the margin, it will look weak. Even in terms of margin, you'll probably see a 40 basis point improvement in the margins for the Nifty 50 companies. So that's kind of a number. Apart from numbers, for a lot of sectors like autos, discretionary, retail and everybody, it'll be more of the commentary than the actual numbers for Q2 because Q2 was impacted because of GST, because of monsoons and everything. So the commentary would be more important rather than the actual numbers per se. In terms of the overall for Nifty EPS, Kotak is expecting a FY26 number of 1,086 and for FY27 a Nifty EPS of around 1,284. So that's on the margin on what kind of EPS to expect for 25 and 26. Now coming to individual sectors, banking is a big sector for us, big weight as well. It's going to be a weak quarter, and on this weak quarter, there could be further EPS cuts as well for the banking sector overall. So that's something on the banking side. I spoke about staples and discretionary. Apart from earnings, it's more about the commentary that's going to be quite important for that particular sector. So for that matter, for autos as well, it's going to be mixed, but the commentary is going to be quite important with the GST rate cut and everything. Telecom is going to be a mixed quarter again with the ARPU seeing a bit of improvement, but no fireworks there. Even in metals, it's going to be a weak quarter, so to speak, and especially for a stock like JSPL, it's going to report a weak quarter, so some individual impact will come. Even for cement, it's going to be mixed with a slightly negative bias. So as I said, at the margin itself, it's showing that just a 6% growth would mean that there is no big fireworks as far as earnings are concerned. Citi also puts out a note and they explicitly mention about few positive and negative surprises. So in terms of positive surprises, according to the Citi,